that I mentioned, prices paid eased another 3.6 points to 39.4. So that's a reflection that inflation's lightening up a little bit. But in a resilient job market with wages going up like this, how are you going to get inflation down? People are still comfortable out there spending.
Yeah, see, I think we're in an interesting job market because why is the job market so sticky, right? Remember, when the pandemic ended, we were frustrated, waiting for leisure and hospitality to catch up and for them to leave the sidelines and come back in. Restaurants couldn't find workers. Well, that might be the part of the economy that's now coming back, and the stickiness. You see it in last month's ADP. You saw it in non-farm payrolls. Leisure and hospitality is the strongest part of the U.S. economy as savings rates are starting to come down. People are starting to come back off the sidelines. All of that it's inevitable, Tom. It's not always timely, right, when that's happening, but it looks like it's starting to happen. Let's see if it shows up. The expectations now for payrolls on Friday, only 200,000. Right. For ADP, 145. So those numbers are creeping a little lower, but we've been beating those numbers. So expectations, I mean, look at the JOLTS number today. That was expected to go down, Tom, from last month. It went up from last month.
Yeah, we've talked about that repeatedly over the last 6 months where, hey,
You're going the wrong way.
The Fed wants to see that crack in job openings, jobless claims they want to see going higher, non-farm payrolls they want to. And non-farm payrolls, don't get me wrong, it's trending down. It's just not to the levels that the Fed wants it to.
We keep beating expectations.
Yeah, I think they'd like to see a negative number at some point in those. But Alex, real quick here, when you look at the, you mentioned the stocks, maybe we talked about dollar cost averaging, there might be bargains out there right now. We don't know. We have to wait and see how this plays out. But, if you look at the, some of the sectors within the overall market, what looks like, hey, maybe it's beaten down too much or maybe it's not beaten down enough. I mean, you could say that for tech, right? Tech's been beaten down, but hasn't been enough.
I think you can. Real quick, if I could, I'm going to think about that and trying to answer it in an educated way. But I want to start with the jobs numbers, because I think that we've seen things that indicate that the job market is slowing. It just hasn't maybe caught up to the establishment survey. You've seen breakdowns and divergences between the household and the establishment survey for the better part of the last year. Right. And so eventually household survey has in recent times, it has led the establishment survey. It's not going to count people taking multiple jobs, part-time jobs are going to inflate some of those numbers. So there are signs that things are slowing. It's just to what extent is that going to be enough to satisfy central banks and those who are reporting on markets to say, hey, things are not as rosy as they seem. That being said, in terms of how you want to be selective about investment dollars, I think it comes down what kind of trader or investor are you? Are you someone who's going to be patient and have a longer term view? Well, then many things are going to look potentially attractive at this point. If you're someone with a shorter term view, I think that you have to think about what is the most likely scenario in recent times. Is it going to be that I'm going to use a couple names, for example, just for illustration purposes, but they really on one side and a company like Apple or Microsoft is on the other. In the current time, when investors are a little bit more selective in where they're putting their capital, they're a little bit more worried about losses than they necessarily are about gaining, investments in the short term. A company like Carvana might have a very favorable risk reward, but is that risk going to be something that someone wants to stomach? And so you look at something like Apple or Microsoft, which over the history has proven to be resilient. The ability for those companies to not only grow in very, very different market environments and weather many, many storms has been proven over time. Doesn't mean it's going to continue. But what I would look at is, hey, you have a situation where everything, for the most part, with the exception of energy, has gone lower mostly over the last year, and maybe some consumer staples. That means you have quality names that have been sold off alongside maybe their not so quality counterparts, and that's opportunity that you don't always have. And so I wouldn't necessarily look at it from a sector basis. I would look at more, if I'm a stock picker, what opportunities in best-in-class names do I have now that I haven't had in a long time?
Yeah, and you have to watch those multiples, right, which are starting to come down a little bit more. Valuations starting to get readjusted at this point based on the fact that, hey, maybe we will go into that recession or at least a further slowdown in economic growth at this point. All right, good discussion there, guys. But coming up after the break, we're going to discuss Microsoft, which is down sharply today after a downgrade. The stock's been under pressure for well over a year now. Fast Markets coming right back.
When traders tell us how to make Thinkorswim even better, we listen. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim Trading from TD Ameritrade.
It's a 13-hour flight. That's not a weekend trip.
15 minutes.
Really? Why am I going to take off?
Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set.
Have a great flight.
Thanks.
We'll see you. They're getting so smart.
Choose the app that fits your investing style.
Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest, and that's going to be George Tillis, Senior Markets Correspondent here on the network. We're talking Microsoft. George got a downgrade today. This has been, as Alex was discussing earlier, you have to look at companies that, that you might want to look at, right? This is in a lot of portfolios across everything from institutional to retail investors. This is a big component. Downgraded today after the stock fell nearly 30% last year. What's your take here on Microsoft?
Well, an interesting situation for Microsoft. Yeah, first, it's down with the rest of the overall NASDAQ around 30 to 31% over the last year. That's to be expected considering the market capitalization of $1.8 trillion. That's immense. And overall institutions are still favorable on the stock, having come down so much in the last year or so, but one of them are actually a little bit more bearish than most. If you actually consider what's going on today, UBS downgraded the stock to a neutral from a buy rating. The analysts moved their price target from 300 to 250. And one of the things about this move today, I don't necessarily think it's just because of this downgraded call from UBS. I think it's part and parcel what we're actually seeing in the mega cap sell-off, which includes companies like Apple, which is higher today, but it's been relatively weak over the last few weeks or so. Tesla, as you know, Amazon, all these stocks are down considerably. But I think the notion behind the call from the UBS analyst is really what the company provided us. If you look at what the company provided, Microsoft now, in their late October conference call, they did mention they're showing deceleration in terms of their Azure guidance, their intelligent cloud guidance, which was expected to be 42%. They actually downgraded their own guidance to about 37%. But nonetheless, I think the market share is probably locked in around 20% of total cloud for Microsoft. But the stock itself has actually maintained good profitability in the last year. Net income margins at 34%. If you look at their 5-year average, it's about 30%. So their margins have actually grown this last year, but the stock price really hasn't reflected that.
George, it's interesting. This is the third biggest sell-off since 1987, the dot-com in 2000, 2008, 2009, and then this one. But George, what you talked about and what we've read about is part of the downgrade today was the slowing of Azure growth, right?
Yes.
But there's ripple effects there, George. That's not just Microsoft. That's Amazon. That's Google, Alphabet, everyone in the cloud. If they're slowing cloud growth, George, that's a pretty big statement to make there.
Yeah, it is. And if you just consider cloud spending this year, and especially in the last half of last year, it's decelerating. And again, like I mentioned, Microsoft already has 20% of the market share behind AWS from Amazon at 32%. Google, Oracle, these are other companies out there in the cloud that are starting to encroach on market share. So it's not surprising to see Azure's or Microsoft's intelligent cloud to demonstrate decelerating trend growth. The other thing, I think the reason the stock is down this last year, it's all about enterprise spending. Their office and productivity software and the personal computing business has shown some deceleration. But the stock price, again, may reflect that. But it's really tough to say because right now, institutions really own this stock, as you mentioned, Kevin, poignantly so because of the market capitalization. But it could go lower. And that's one of the things, especially when you see the stalwart-based names, companies like Apple and Microsoft now, they're not trading very well, but there is one thing about Microsoft that is really different than companies like Amazon and Tesla. If you go back and look at the weekly chart in October when they reported earnings, it did hold the 200 weekly moving average. So that was 210 back then in October, and it's around 221 right now. So I think that's going to be an interesting long-term means of support for those who may end up looking at potentially buying in, or again, looking for a break below that on a weekly basis. If it does that, it could potentially fall even further.
All right, great wrap up here of Microsoft on that downgrade today. Thanks to George Tillis, Senior Markets Correspondent here on the network, breaking that down for us. Alex, I'll go to you. You listen to the things that George says, the businesses that they're in, right? You saw weak PC demand over the last year. We saw the deceleration in their Microsoft, suite of products there on that side. They may be overpaying for this Activision deal if it goes through. $69 billion, it's a lot of money for a gaming company. And we've seen a slowdown in gaming also. And then on the cloud, they still make a profit there, but it's slowing. And we've seen that across the board, as Kevin mentioned. I'm looking at this company and their valuation, their PE is below the historic average for this company. That doesn't mean it can't go down.
No, and it also doesn't mean that earnings component of the PE isn't going to continue to decline. That might actually be your base case, as that's the base case that many have for 2023. If you're going to have economic slowdown, there's going to be pockets of the market that are resilient and are going to do differently than the general consensus of companies here in the U.S. and globally. But the majority of them, if you do see earnings in general go lower, are probably going to see earnings go lower. And so a company as important as Microsoft can maybe be almost that linchpin that ultimately decides if there's going to be recessionary activity in this year, or to what extent the economic decline ultimately will be. But what I would look at is, sometimes, unfortunately, if you're an investor and you look to buy into things, the times that you're buying into them are the most uncomfortable times.
Oh, yeah.
I'm not saying that we're there in Microsoft. I'm not sure that you can make that argument when we traded at lower prices. But if this was an easy thing to do, if it was easy to buy in March of 2020, none of us would still be here talking about this. No one would need any help because it's just that easy. You just buy when things go down. It doesn't matter if the world is completely uncertain, and that's just how easy it is. And if it's things get extended, it's easy. You just sell into that strength, and then you get these declines. But that's not really how it goes. So you have to make the tough decisions sometimes, but you have to do so strategically in a way that you can stomach the risk, because in the end, it's just a probabilistic game. We don't know what's going to happen. We can only just assess the situation and try to assign probabilities as to what may happen going forward. But when you look at a company like Microsoft and you look at all the companies and corporations across the world that it works with, and how important, if not essential, the products and services that they offer are to those businesses on an everyday basis, you can understand why there's a resiliency to this company, why there's this defensive premium put into this, even though it's a tech name, even though it's a mega cap name, and even though it's been down. So I would start going, how much of this uncertainty is already priced in or began to be mostly priced in? I mean, the stock's down almost a third from where it was at its all-time highs. And at some point, Tom, you got to do the uncomfortable thing and step into some of these names if you're a believer in Microsoft, if you're a believer in the economy turning around at some point.
Alex makes a good point here. Kev, they've got a solid balance sheet, a lot of free cash flow.
Tons of
Yeah.
both.
So
earnings and free cash.
Yeah. So that's why the investment community, I think, thinks of Microsoft as a stalwart where they can maybe, weather the storm a little bit better than other companies because of their solid balance sheet, great leadership,
Right.
Management's doing a great job. But this stock was $159 3 years ago. So it still had a nice run.
Yeah. And the point I made to George about the ripple effects of this downgrade, look at Amazon today in an up market, look at Google Alphabet in an up market. Why? Well, that story permeates into their growth as well. So the fact that they see decelerating growth in Azure, that's also AWS, that's also Google Cloud, that could be Oracle, like George said. I mean, that's why those stocks probably aren't performing today, if you're wondering. But this is still a massively popular company, which makes a lot of money. And Tom, the Activision deal, remember what they're doing to enhance that part of their business. They've fought regulators before and won. So I expect it to be a long fight. I also expect them to win eventually and be able to acquire Activision. Do I know that? No, I don't. I'm not a lawyer. I don't know the parts of it, but they keep doing the right things to build their business, much like when they did LinkedIn, right? People were like, how are they going to do that? Well, they brought it in seamlessly. Yeah. I mean, so they have a good history of buying companies.
Yeah, they did better than I expected in LinkedIn.
Yep.
When they bought that one.
Everyone doubted them with LinkedIn.
Right.
And they made it work.
Definitely. Alex, you've got an example trade for us here in Microsoft. Stock's down 4.3% at this point, was down over 5%. How do you want to look at this?
Yeah, and so we described the situation. Hey, it's a resilient name, it's a popular name, it's an investment style name that many maybe are interested in or have been watching and looking for opportunities. Well, down 4.3% because of an analyst's opinion on something that likely is no different than it was yesterday. So you look at this, if the cloud spending is going to slow, it was going to slow yesterday too. It's probably going to slow tomorrow too. So just because someone commented on it, the stock's down 4%. Right. These are the kind of situations that if you're looking for opportunities, these are those opportunities. I'm not going to say that the stock's going to go up from here, that it's going to go down from here, going to go neutral. I don't know. But the stock's been repriced $10 because of a comment from an analyst when 24 hours ago, the commentary wasn't there yet. Yeah. The exact same situation existed. So I see these as opportunities potentially. I wanted to show a strategy that's omnidirectional, can be seen as a buy the dip style strategy, but most importantly, it's high probability. It's going to need a new yearly low to get to this level. It's going to have, or at least a new low for this recent down move, I guess is a better way to say it. And so looking at this, we're going to do a 1-by-2 put ratio spread where you're buying one of the 2 20 puts in February, selling 2 of the 2 10s. To me, the interesting thing here is it's more about this structuring and making a trade that a break even is at a price where potentially you'd be interested in owning the shares. And so done this. If it's done for a $2 credit, the break even would be $1.98. Effectively, what would happen if these options were in the money is you'd be at risk of a assignment of 100 shares of stock after the options exercise and assignment process offset that long vertical spread. You'd be left with one short put that was in the money. You'd expect 100 shares of stock. Because of the break-even point, effectively that would be at $198. So if you were interested in being a shareholder at $198 and being paid in the event that doesn't happen, this would be a strategy that could be interesting. Does have $19,800 in risk though, because that would be your risk of being a shareholder. So for someone who's maybe less comfortable with that undefined risk or that full risk of stock, if you could find an option that was out of the money for less than $2, you could still do this for a credit, then define that risk. But of course, you'd be cutting into your max overall profit in that point, lowering your probability of success slightly. But those are always a trade-off that you have to consider.
Yeah, let's break this down. Buying one of the February 220 strike puts, selling 2 Feb 210 strike puts, 1-by-2 back ratio, collecting $1.70 credit. Kevin, your break even, as Alex mentioned, 198.30 to the downside. Big cushion, but you got that nice pop at 210 if the stock does continue to fall. We got earnings on the 24th of this month.
Let's do the math, Tom. First and foremost, on the upside, you just make your credit. right?
Yeah.
On the downside is where it gets interesting because you've got a 10-point put vertical with a cash secured put. If you do use the $10 on the vertical plus the right around $1.70 or $2, that's where you get your break even down to $1.98, Tom. So you would buy the stock at $1.98 in a worst case scenario. Now, Alex is right. You could buy a way out of the money, put it, define the risk, and make it a big boy spread. But right now, if you were okay buying Microsoft below 200, this is a spread that could take advantage that with no upside exposure.
Yeah, and Alex mentioned that risk per spread about $19,800 due to the fact that if Microsoft somehow went to zero. So you have to take that into consideration. But a good look at a different type of strategy here. And thanks to Alex Coffey, Senior Equities contributor and the co-host of Next Gen Investing here on the network. Coming up after the break, Kevin and I are going to be joined by Landon Swan from Likefolio for a discussion on booze and Constellation Brands, which reports earnings ahead of the open tomorrow. Stick around. Fast Markets coming right back. Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
Welcome back to Fast Market here on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder of Likefolio. Welcome back to the show, Landon.
Thank you, Tom. Good to be here. Hey, Kevin.
All right, so we're talking booze, we're talking Constellation Brands. We're heading right into dry, or as I like to put it, damp January, where you don't have to completely stop drinking. But we're talking beer. Basically, Constellation Brands has wines, they have a liquor, but at the same time, beer is what they're known for. We just got done with the World Cup, probably a boost. The holidays also. What kind of data are you guys seeing out of Constellation?
Yeah, you're right. They're about 80% beer, about 20% wine when it comes to sales. And when you compare them across their competitors, they're falling behind a little bit, frankly. Budweiser or Anheuser-Busch, is actually the dominant one over the last 3 months or so, as far as our data is concerned. But when you look at Constellation Brands, you can see that just overall their mentions are down. When we look at all of their brands, we kind of aggregate them at the company level, and it goes through some peaks and valleys. But overall, the mentions are down a little bit, as is the stock price. And you can see actually the stock price is that gray line there. You can see we've been in a bit of a channel from around 220 to 260 or so for quite a while, at least about 9 months or so. We're getting towards the lower end of that. I think we're around 235 or so right now, with earnings coming up in a couple of days. And what we're seeing is that the data is just not really supportive of a strong earnings report coming out. We don't think it's going to be like disgusting and nasty and sell off, anything like that. I think they've got a pretty tight range of expectations, and we think they're going to be within that tight range. But we think they're probably on a little bit of the lower end. When we look at just beer sales in general, if you go across their brands, actually, Modelo and Pacifico are doing really well. Corona's not doing well. Just over the last little bit, it's pulled back a little bit, and you can see here. And maybe this has something to do with the World Cup. I'm not sure. But just over the last little bit, you can see the pullback. And Corona is one of their bigger brands, so this is that's what's pulling back our data. The other side to this is that they've got the happiest customers of all of the major beer manufacturers. They're at 79% happy. If you guys remember yesterday, we were talking about Southwest. I think they were in the 30s. So people like to drink more than they like to fly or get delayed on flights. They've got the happiest customers. I think that probably has something to do with the fact that they've got a wider variety of products. They've got the finer wines, which are going to increase, going to have a little bit happier customer. But overall, when we're looking at Constellation Brands, it's on the lower end of this channel, and I think that's where it should be. If I'm considering going long-term on this company, which I do like them long-term, I'm probably going to wait until after this earnings report. I don't think they're going to come out gangbusters and blow it out and, take off. I don't think the stock's going to take off on this earnings report. So I'd probably wait, maybe try to pick up shares closer to the bottom of this channel that we've been looking at, closer to 220.
Landon, country western song by Thomas Rhett says it ain't nothing that a beer can't fix, Landon. And this company being driven right now by beer overtaking wine. And these numbers, Modelo is incredibly popular, as your chart shows, but it's Pacifico that's also doing extremely well. Their margins are going up. They're accelerating their market share. This is a company right now being driven by beer. But here's my question to you. Why does an economy shift from beer to wine and back and forth? Because wine is struggling right now and beer is off to the races. Why does Folio think that happens?
I'd say it has to do with just the economy. Like you said, I think when people have less money in their pocket, they're more likely to buy the cheaper stuff. And beer is, as far as all the different spirits go, it's the cheapest of everything. So I think it just makes complete sense, frankly. And when we actually look at it, we look at the trends. One of the things that we see is that on a year-over-year basis, canned beverages, alcoholic beverages, are up about 19%, whereas hard seltzers are down about 26%. So, that for a long time there was that crave, the White Claw, Truly, all of that. And I think it's starting to look more like a fad, not like it doesn't have the same staying power that the traditional beers have. So I think that, that puts Constellation Brands in a good position. They do have some hard seltzers, but just kind of wanted to note that as well, because I think it just kind of is people going back to the roots, right, of what they like to drink. So I think, beer is the winner here, just like you said.
Yeah, and I think I kind of want to expand on that a little bit, Landon. When this is a fickle type of consumer product, right? Seems like nobody knew about Modelo 5 years ago. Now everybody's drinking it, right? Everybody was drinking Corona 5 years ago. So it's that mentality. When you look at your data here, are we just maybe 6 months away from everybody going away from beer and Modelo and switching to another brand that maybe has a better marketing plan? Does your data ever reflect that?
Yeah, I think that's a great point. And that's, I think, one of the strengths of this company is that they're somewhat diversified, right? They've got several different brands where if one's falling out of favor, the other one can pick up the slack. So I do like that quite a bit. They're not the tried and true, Budweiser, but they do have the different ones, just like you talked about. So I like that. They're also the top importer. I mean, they are number one market share. They're 54% of market share. Number two is 22%, Heineken. So they are by far the biggest importer, beer. So, but to answer your question more specifically, yes, I do think that having a diversified set of products is going to help them because it does ebb and flow. You've got the Coke and Pepsi of the world being Budweiser, but everyone wants to be them. But until you are, you just got to hope that your products are popular, and they're not all going to be popular at the same time. Right now, what we're seeing is a shift away from Corona into Modelo and Pacifico within the Constellation Brands. And I think it's good for the company that they've got that ability to move customers from one segment to the other or one product to the other and not just get killed and have all their eggs in one basket.
Yeah, historically, they've been pretty good on the M&A front, too, buying brands that are starting to look up. But, Landon, do you have an earnings score for this one going into the report?
Yeah, so we're at -17, which is right on the edge of where you might take a bearish bet. More aggressive like Folio subscribers would say that's good enough for me, and they're going to take a bearish bet. More conservatives would be like, maybe not. So it's right on the edge there. But again, I think this is a good company long term. If I'm thinking about picking up shares, I'm waiting until after the report. Incidentally, Bud right now, ticker BUD, is a +40. So There's always a pair trade option there. They're the one that we see dominating this market right now.
Budweiser or Modelo? I'll take Modelo Pacifico any day on that one.
I tell you what, you want to make my mother-in-law happy? Ruffino Chianti. And stop, go no further. And that's made by? Constellation Brands. So, that's their brand.
All right, Landon, appreciate it. Have a good day.
Thanks, guys. Take care.
All right, that's Landon Swan, co-founder of Likefolio, breaking down the data for us on STZ. I was pretty surprised on that because I think the last couple of times we had them on discussing constellations, they were pretty elevated. But
and the stock is sold off.
Yeah, and he's noticed that a lot of their data has started to come down a little bit, and that has sold off a little bit.
Right, stock has sold off, and here's why: they're not insulated from a recession. Right. That's what's out there for them. That's the risk. That's why the stock is sold off. Now, do you think a recession's already priced into this stock, or what do you see? Because all the data on the beer brands, other than Corona, Modelo and Pacifico are killing, and they're picking up market share. So the beer segment overall is doing extremely well. And you said that's a big percentage of the money that they make. So what I did was I put on a bullish trade, Tom, but in paper money, of course. I did it in a way that if it's unchanged, you don't lose money, which is, you've seen me do this before, Tom. I did the short in the January 6th, in this week, I did the short 225, 220 put vertical one time. And then against that, I bought the 240 call calendar, Tom. So 2 trades that you can do either one of. Both are right in line with the expected move, about $7.50. So if you look at 225, 220 put vertical in the front expiration, and then the 240 call calendar in a 1 week trade there, Tom.
All right, so let's break this down. There's 2 positions here. We'll break down the short put vertical first here, Kev, and then we'll combine them all. Let's see, going out to the January 6th weekly series, expires in just 2 days. Selling the 225 put, buying the 220 put, short $5 wide put vertical, collecting roughly about 80-cent credit on that one. And then your other trade is buying a 1 week wide call calendar to the upside, the 240 call calendar, buying the January 13th weekly 240 call, selling the January 6th 240 call, paying roughly about $1 debit on that one. And if you combine those two, so on the call calendar, you got $1 debit. That's going to be $100 in risk per spread. On the short $5 wide put vertical, you collect 80 cents. You got $4.20 or $420 in risk. Now combine those two. That's $520 in risk total if you do both of those. But your break even, Kev, all the way down at about 225 for that. Right near where, Landon said they like it around the 220, 225 level. But you apex out here at the 240 strike. So it is 2 bullish trades, one more conservative, one more straightforward bullish, but you're still giving yourself a range due to that call calendar. Now you have some short option assignment risk on the short 225 put over the next 2 days, and then the short 240 call over the next 2 days. Also, you got to keep that in mind. But this is combining 2 trades to take that bullish position where you think maybe, hey, it's going to go up that 1 standard deviation. It's having a good day today going into this report. And beer sales are supposed to be up about 3% from the same quarter a year ago. So that's also going to probably come into play. But a good look at 2 different ways to play this. You could do one or the other or both of them. Or if you're more bearish, you can do the opposite where you sell a call vertical, maybe buy a put calendar to the downside. But a good look at those strategies. All right, Kev, coming up after the break, we're going to take a look at moves in Netflix, which has rallied over 80% since hitting 5-year lows just last May. Fast Markets coming right back after this short break.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on tdameritradenetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Welcome back to Fast Market here on the TD Ameritrade Network. Before we take a look at Netflix, let's bring in Ben Lichtenstein's senior futures contributor here on the network to help us break down markets here. Hey, Ben, stocks seem to be at session highs. They've been selling rallies recently, but pretty resilient today.
Yeah, we are, Tom. The market opened up around 38.40, the SPX, and after kind of a mixed reaction to the JOLTS numbers this morning, the PMI data, we are seeing a bid come into play here. Last I looked, we were up over 1% on the day, and well, there you can see all four of the majors enjoying gains here today. The S&P is currently trading 38.70, and you've got rates which are lower for the second day in a row, and I did see the move lower earlier today down to 38.15. It stalled, though. It saw a limited follow through to the downside. Yesterday, keep in mind, we saw a low around 37.94, so we held above that low by about 20 points and well off the highs from yesterday, though, that was up around 38.78. So here you can see, again, we're still holding below those highs from yesterday right now as we speak. Now, relatively range-bound trade for the most part, still kind of contained inside of what we saw, again, in that ride range yesterday. But investors, traders, basically waiting for the Fed minutes this afternoon. We also have that jobs report on Friday. Tom, I know I've been kind of harping on this, but right around 38, 39, 40, I mean, in this range, a wide range albeit, we're kind of in the middle of the bigger picture range that we've been in when we're talking about those August highs that we saw, the October lows, 43 down to 38. So again, or I'm sorry, 43 down to 35. So again, kind of 38, 39, 40. We're still sort of in the middle of that range, just kind of chopping it up right now, waiting for more information. We'll get a little bit this afternoon and then some later this week as well.
Yeah,
Fed minutes.
Yeah, Fed minutes coming up at 2 p.m. Eastern time. Watch that. It might cause some volatility. But Ben, I'm taking a look at oil down another, 3-4% today, back under $74 a barrel. What's this based on? If the economy is doing well, jobs are there, but now, lockdowns in China, are they opening up? I mean, there's a lot to unfold here.
This started yesterday, Tom, with the IMF predicting recession and talking about how the three major economies in the world, the U.S., the EU, and China, are slowing. We haven't seen that reopen trade. Remember, there was a lot of optimism tied to China, the reopen trade, and would it develop? It's been slow to come, to say the least. So down to 72.89. You mentioned some of the selling. We're about $1 off that low right now. Still down on the day by around 4%, as I can see. We got down to again, as I mentioned, 72.89, tied to some of the recession concerns, China, and just really demand destruction that's been playing out recently. So this is continuation of the pattern we've been seeing to the downside there off the highs from earlier this year, up around 130 when we first saw Russia invade Ukraine and the war on Ukraine, and retest around the 123 area, I think it was. Earlier this year, and then the selling that's ensued since. It's still holding above the $70 low. That's the recent lows that we saw into the end of last year. So keep an eye on that as the next area of support
if we do break down below that, again, it opens up the door for some continued losses here. I'm also watching the U.S. dollar here, Tom. Just real quick, I want to point out, hanging out around 104, and I mentioned the indices hanging out in the middle of that longer term range that they've been in. Well, the dollar, I looked at the bigger picture move we saw last year from 94 up to 114. And again, at 104, look where we are, right in the middle of that range. So it looks like the dollar kind of waiting for more information also.
Yeah, don't forget that heat wave maybe putting some pressure on oil now across Europe. They're getting a break. Natural gas prices hit one-year lows just yesterday, and crude oil taking it on the chin again. All right, thanks to Ben Lichtenstein, Senior Futures Contributor here on the network and the host of the Futures Show. All right, Kev, let's get into a discussion here on Netflix. Now, I mentioned that Netflix has rallied over 80% since last May.
From 162 from last May to over 300.
Even with that rally to today, this stock was down 51%.
Oh, yeah.
Even with that rally that we saw from those lows.
It went from 600 to 162.
Yeah. So that's, I guess you got to put it into perspective when I make comments like that. But, it seems like they've got it figured out after a few rough quarters, where they had negative growth a little bit. It seems like, they're controlling their costs a little bit better. They're actually profitable, one of the only OTT providers profitable, right?
There's one of the points.
Yeah.
If you combine Amazon and Disney together, they lose $10 billion a year. Netflix makes between 5 and 6. There's the moat around Netflix that everyone else is trying to get to. It's kind of like Tesla and autos. Everyone's trying to get to where Tesla is. Tesla's there already, kind of like Netflix. Netflix is there already, Tom.
Yeah, and I think if you add like Paramount Plus in there, Warner Brothers Discovery, WBD, they're losing money or they're bleeding cash.
The whole streaming this is all losing money except Netflix.
Yeah.
Right. That's the key there.
Yeah, they said that, since they released the new ad tier levels, that over half of those new subscribers to the ad tier, nearly 60%, are just coming from their premium. So average revenue per user, is that going to hold up? That's a concern, right?
Well, of course it is. But remember something. You've also got advertisers.
Yep.
You're going to make money off the other side, too. There's a reason that you're doing subscription. And make no mistake, this whole password sharing thing is getting real, right? It's going to start showing up in the numbers.
They're going to take care of it this year, they said.
All these things that they have going on, but it's still, Tom, at the end of the day, it's still going to be about the hits, right? You got to get the programming right. Madoff thing is dropping today. The big special on Madoff.
Yeah, the monster of Wall Street.
That'll be really interesting. Everyone will be watching that, I'm sure.
Yeah.
So there's a lot going on, but Netflix seems to be getting it right. So many of the others overpaid, and they're not profitable yet, Tom. They're not even close to profitable.
Right. And, that's a concern. It's all about subscription numbers moving forward, and they always give guidance. Reed Hastings, their CEO, usually pretty good on those conference calls. He hasn't been lately.
Good communicator. Well, unfortunately, he didn't have a lot of good news.
Yeah.
Now he's finally got good news. Remember, when he came up with the subscription brand, he's like, we should have done this a while ago. He admitted that. Yeah. He's very forthcoming in these interviews.
All right. So as I mentioned, the stock's been, on a trajectory up higher. So I looked at a strategy here, Kev. It's going to take advantage of, hey, maybe you think Netflix has run too far too fast. I mean, it was down last year, but it's had a good run. So I looked at a strategy. If you think it has, maybe it putters out. They've got earnings the third week of January. So keep that in mind. So I kept it out of that realm as far as duration goes. So I went out to the January 13th weekly series here, Kev, just selling an out of the money call vertical to the upside. It's selling the 315 strike call and then buying the 320 strike call, creating a short neutral to bearish $5 wide call vertical, collecting roughly about what are you collecting? $1.70 credit on that right now, Kev? Mm-hmm. So that means your risk is going to be $330 per spread with that break even at about 316.70 to the upside. So you're giving yourself that cushion up to that break even. It's about 65% probability above that 316 level. Kev, your final take here on a short call vertical, kind of going against what the stock's done.
Short duration as well. You're about $8.50 above the market. Yeah. So this is just, make no mistake, it's about 7.5 delta short. You're fading this move, Tom.
Yeah, and as I mentioned, that break even, the probabilities of success is what you look for when selling out of the money verticals. This one's above about 65% up to that break even, but you are giving yourself that cushion to the upside on that example trade if you think the stock has run too far, too fast on that rebound that it's had over the last about 8 months or so. All right. Thanks to Kevin Hinks here joining me here on Fast Market. Stick around, though, right here on the network. Next Gen Investing is coming up with Alex Coffey and Jenny Horn hosting. Have a great day.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more.
Feel that? That's the beat of global markets, the rhythm of the world. For most, the cadence of today. To us, the pace of tomorrow. It's people and machines uncovering opportunity. Cloud computing providing endless capacity. Blockchain making transactions safer and faster. New markets born where they weren't before. With ingenuity, technologies, and markets expertise, we create the possible. And when you do that, you don't chase the pace of tomorrow. You set it. NASDAQ. Rewrite tomorrow.
So what are you working on?
I'm searching for info on options trading, and look, it feels like I'm just wasting time.
Wasted time is wasted opportunity.
Exactly.
That's why TD Ameritrade designed a first-of-its-kind personalized education center. See, you just...
Oh, this is easy.
Yeah, and that's...
Oh, just what I need. Courses on options trading, webcasts, tutorials.
Yeah, their award-winning content is tailored to fit your investing goals and interests, and it learns with you. So as you become smarter, so do its recommendations.
So it's like my streaming service.
Oh, exactly. Well, except now you're binge learning.
Ooh, I like that.
Thank you. I just came up with that.
You're funny.
Learn fast with the TD Ameritrade Education Center. Call 866-300-9417 or visit tdameritrade.com/learn. Get started today, and for a limited time, get up to $800 when you open and fund an account. That's 866-300-9417.
This is my headquarters. This is where I trade and manage my portfolio. Since I added futures, I have access to the oil markets and gold markets. Okay, I'm plugged into equities, trade confirmed. And I have global access 24/7, meaning I can do what I need to do. Then I can focus on what I want to do.
Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
everyone. Thanks for starting your day with us here on the TD Ameritrade Network. It's time to talk futures. I'm your host, Ben Lichtenstein. We've got a great show planned this Thursday morning. Great to have you with us. Let's get started right away. Just like we do every single day. Let's begin with a look at international markets. They oftentimes set the tone for us here in the U.S. And, well, taking a look here, I noticed the Asian markets, for the most part, going out with some enthusiasm overnight. Probably a bit of a carryover in terms of what we saw yesterday, and the Hang Seng, the Nikkei, the Shanghai Composite higher. Taking a look at European markets, kind of mixed for the most part, not a lot of conviction there one way or the other, and probably a better reflection of what we're seeing in terms of the U.S., the DAX, the FTSE. Again, not a lot of conviction one way or the other, and here you can see the four majors, the ES, the NASDAQ, the Dow, the Russell, basically hovering around unchanged levels, and as I speak, look, the S&P's tick unchanged at 3874.50. We've been talking about how we found comfort around this 3900 level, how we're smack dab in the middle of the range that we established, talking about those August highs up around 43, the October lows around 35, and yeah, at 39. Again, we're basically in the middle. You can see checking in on some of the other top traded products. Speaking of in the middle, the dollar at 104. You know, we're going to talk about this when we look at some charts here in a minute, how, well, last year's low was 94 for the dollar, last year's high 114, and, well, there you are again. Look at the dollar here hanging out in the middle of that range that we saw last year. Gold hanging out at 1851. Crude getting a little bit of a lift today after coming under pressure to begin the year. It's up around 2% this morning, $1.50 higher, and the VIX comfortable at 22. So we'll get into some charts in just a couple seconds. But first and foremost, let's dive into what's on the minds of traders and investors this morning. How the focus is on the Fed. The jobs data headed our way, and the House set to reconvene today for a seventh vote. Let's begin with the Fed minutes from the December meeting out yesterday and how they took on a pretty hawkish tone overall. They said inflation remains the overriding concern, and that participants generally noted how risky the inflation outlook remained to the upside. They said they're a key factor for policy decision here. The minister repeated that a restrictive stance would have to be maintained for a sustained period, and the Fed's resolve in getting inflation clearly on a path towards 2% before pivoting. Now, there were a few quotes that stood out to me. One was the quote about an unwarranted easing in financial conditions, especially driven by misperception by the public of the committee's reaction function and how that would complicate the committee's effort to restore price stability. So basically kind of pointing to that discrepancy we've seen in terms of what the Fed's been telling us versus what rates and the market's been telling us. Now, in addition to the Fed, the focus this morning is also on labor conditions here in the U.S. The numbers out this morning already, in addition to the data due out later. Well, let's begin with the Challenger job cut report, which came in significantly lower than prior levels. Taking a look there, you can see at 43,651. Prior was 76. We're talking almost half of what we saw in terms of the cuts last month. So later this morning with the jobless claims, the weekly number, we'll also have ADP. That's going to be heading our way in about 13 minutes. But in addition to that, and there's the numbers for the bottom of the hour, the weekly numbers. But we have some headlines this morning. Amazon announcing that they're going to be laying off more employees than initially expected. If you remember back in November, the company announced some 10,000 job cuts, but per a leak from the Wall Street Journal and reports suggesting that the number may be more like 18,000 now, the company's putting a halt to all experimental and unprofitable operations. And lastly, the House is going to reconvene today at noon for a seventh vote. Lawmakers failed to elect a leader yesterday in a historic sixth vote. And, well, until the House has a speaker, they cannot conduct business and ultimately continued gridlock. We'll see if they can resolve that matter today. Some alternative possibilities being offered up. We'll talk to Kevin Hinks in just a couple minutes about that, but let's get into some charts here. I want to get into the 5-minute time frame first and foremost, and I mentioned how we've seen price activity very much range bound. I mentioned the US dollar and what we've seen here in terms of what's been going on the bigger picture, which we'll get into in a second. But here you can see, even on the 5-minute time frame, right? We've got yesterday's day session trade here. You've got the dark shaded area. Again, the run up we saw to 3,900, just shy of. We started off the day yesterday on the cash open around 38.36, 38.35-ish, and look where we closed out in the middle of the range for the most part that we established throughout the day session trade. Again, this dark shaded area here, and look at what's been going on in the overnight session. All four of the majors here are a pretty good reflection of this. So in this instance, this is the S&Ps. We just looked at that. You've got the Dow in your top right corner, the NASDAQ in the bottom left corner, and the Russell in the bottom right. So you can see all four of the majors relatively contained yesterday and throughout the overnight session. That lighter shaded area very much range bound. Let's take a step back from the 5-minute candles. I'm going to show you what I've got going on here in terms of the range that we've established this week, right? We traded up to 39.06, then down to, we'll call it 38.10-ish, and then look where we are right now for the most part, around 38.70 for the most part, smack dab in the middle thereof. And you're going to see a theme here as we work through these charts. You're going to notice, again, look at this, smack dab in the middle of the range we established last week. Again, the highs up around 39.10 that we saw, the lows around 3800, and another step back. This is a 30-minute candle chart. Let's pull up the hourlies, because now, while we're not in the middle of the range that we established last month, you can see we're in the middle of the range that we've been trading in over the last couple weeks. That's for sure. After, well, we traded down into the middle of December around this 3,900 level, we've been holding below it for the most part. Now, near the lower quarter of the range that we established last month, but albeit very much contained. And, well, here you can see in terms of what's been going on in the daily candles. This is what I mentioned at the top of the show. You've got the August highs up around 43. You've got the October lows around 35. And look at 39, hovering around the 50-day moving average. Simply put, again, I know I sound like a broken record, but contained. And I think as we hold just shy of the 200-day moving average, pretty good reflection thereof. Now, it's not just the indices that are in a pattern similar as this. Here's the dollar, right? I mentioned that. 94 up to 114. Look where we are, smack dab in the middle at 104. Here you can see 10-year yields. Now, not necessarily right in the middle of the range, but here's the August lows. Here's the October highs, 4.3, 2.4, 2.5, we'll call it. Look, we're at 3.7, recently down to 3.4. Just want to quickly take a look, because I've got the 30-year on the left, 10-year on the right now, so you can see both very much range bound. And lastly, just tying this all together, here on the bottom half of your screen, the NASDAQ off the all-time highs we saw from November of 2021, 16,000 all the way down to the lows we saw last year in October at 10,044. And look at this, how we're kind of in the middle of that range that we established. Look at how, well, you've got the yields on the top half of the screen, also in a similar pattern. Okay, that's a good look at where things stand in terms of what's on the minds of traders, some top stories that you should be dialed in on, a couple key levels to keep an eye on in terms of the indices, and just a bigger picture look at where things stand as we head into the middle of the first half of this first full week of the new year. I want to bring you Kevin Hinks, Senior Equities Contributor here on the TD Ameritrade Network, joining us this morning to discuss some of the top stories that are on the minds of traders.
Good morning, Ben Lichtenstein.
Kevin, happy to have you with us here. You can tell I'm fired up, huh? Let's get into it. Yeah. Talking first and foremost, the Fed. What stood out in the minutes for you?
The commitment. Number one, they wanted to make sure that the people reading their minutes knew that
they're serious.
Any drop-off in rates from 75 basis points to 50 did not indicate a weakening resolve, okay, right? They think that rates are up here at this level, a restrictive level, and they're going to leave them there for longer than maybe people even think. Mm-hmm. So they really, even the most, what I've noticed, Ben, even the most dovish of Fed members are hawkish and staying on topic with everything with the fight against inflation. So they need this number to show, here's the quote, until more progress is made, higher rates will remain until more progress is made, Ben. So they see the drop in inflation, slight, but they're still far from their target area.
They said officials agreed that there should be no rate cuts in 2023, basically. I saw they said they expect further rate hikes are going to be necessary. Yes. Now, they did talk again about some of these risks to inflation. Yeah. And I mentioned at the top of the show one of the quotes that stood out to me. And to your point there, they basically said, look, we're going to be on this higher for longer path than we expected. And you can understand why, because we're well above 2%. But the quote that stood out to me also is they said, participants noted that because monetary policy worked importantly through financial markets and unwarranted easing in financial conditions, especially if driven by a misperception by the public of the committee's reaction function, would complicate the committee's efforts to restore that price stability.
Remember, the Fed fund futures were pricing in a rate cut for the second half of this year. I think what the Fed did during those minutes is saying they basically took that off the table.
Why do you think the market responded the way it did? I mean, initially we rallied. I was in the office saying, what's going on here? We sold off. We didn't make new lows, though. It looked like it was a limited, kind of contained sell-off, like what I was just talking about in terms of what we're seeing here on the charts we looked at the top of the show. But then we rallied back, and for the most part, closed in the middle of the range.
You've heard me say this before, Ben. The Fed minutes come out weeks after the actual meeting, and they probably shouldn't move the market, but they always do. And at least this market moved and then came back right to where it was. So minimal damage from the Fed minutes, but it's always amazing to me that the markets move on 2-week-old data that could have changed by then, but it always does.
I like that. And it probably has changed some since then as well, in terms of what we've seen as far as jobs. And I think that's a good segue to our next topic. We've got a lot of focus here on, well, not only Amazon, which I want to get your thoughts on, but you've got the Challenger Job Cut Report. You've got the ADP and the jobless claims, the weekly number today. So this is all kind of gearing up for the non-farm payrolls, the monthly number tomorrow.
Yeah, you're getting a lot of employment data out this week. Ben, we got one coming up here in about 5 minutes. We'll get the ADP data. That'll be pretty significant. And watch, you know, the expectations, it was 127,000 a month ago. They're looking for 145 in the consensus. But watch your viewers, when you break down the data, watch the leisure and hospitality. Those are the parts of the economy that have been sticky and strong, causing some of these numbers to come in more than expected. Remember that frustrating part of the economy when the pandemic was over, the people that wouldn't leave the sidelines and come back look like they're making their way back. Ben, the timing is late, but it's inevitable that these people have to come off the sidelines, get back into the labor force. It looks like that's happening.
ADP, it sounds like they've paired those expectations a little bit. And as I think about it, I think the non-farm payrolls anticipation of a 200,000 has been paired a little bit.
203.7. Those numbers are drifting a
Down
little lower.
Bit to 150.
But they'll get adjusted as we start getting more data, right? I think the Jolt stated that we got was stronger than expected. They wanted it to go down. It went up. You just mentioned the Challenger Job Cut, half of what it was. So it looks like the labor market sticky.
Leisure and hospitality, you said. We'll keep an eye on that. Let's also talk a little bit about what's going on with the House here. Kevin, you've been keeping us up to date
6 votes, Ben,
on what's going on. A historic situation developing. And it really just points to the gridlock in terms of what's going on with lawmakers. And until we get this resolved, it seems like they can't bring a bill to a vote, right? I mean, they just can't do business without a speaker.
Okay, I'll take the other side of that argument. You ready? If they can't do a vote, if they're paralyzed in their movement, they also can't screw things up, man. So if you think about it like that, the market has gone up the last couple of days. Exactly right. When all they do is tax and spend, maybe nothing is actually better for the overall market.
Okay, I think that brings us to a good kind of way to wrap this up here in terms of market implications of all of this, because talking about the contained price activity we saw in reaction to the Fed yesterday just makes me think, okay, maybe that wasn't the catalyst investors were looking for. That might be looking a little bit more heavily towards the jobs data due out tomorrow. And then in terms of this House thing, maybe it's not the biggest deal for investors and traders in terms of what's on the minds of.
Ben, we live in a microwave world. This is a lumpy process that they're going through where 20 conservatives are holding out. Pay attention to this name, Ben. Representative Byron Donalds, the Republican from Florida. His name is growing in momentum. Is it enough to change the path? I don't know, but pay attention to Byron Donalds, the Republican from Florida.
Okay. Keeping an eye on that path. It does seem to be a little bit endless at this point, but hopefully we'll get some resolution there. And these are the top stories, what's on the minds of traders and investors. Kevin Hinks joining us to break them down. Thanks for that, Kevin. We'll take a quick break when we come back. Stick around. Energies with Phil Strebel, Chief Market Strategist of Blue Line Futures, and we'll simply put more futures. We'll be back.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy. A measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on tdameritradenetwork.com to all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Welcome back to the Future Show here on the TD Ameritrade Network. The focus this morning is the jobs reports, and well, the ADP just hit the wire. Let's take a look. A bit stronger than expected, to say the least, and it's sending the indices lower. They were looking for 150,000 for ADP. It came in well above that at 235,000. We're talking almost double what we came in at last month's 127,000. But again, just want to stress the fact that we were talking, again, expectations for 150. This was 85,000 above expectations, almost 50% higher than what they were looking for, and a significant uptick, as mentioned, almost twice as many jobs reported by the ADP than last month's 127, again at 235,000. Taking a look at the indices, you can see all four of the majors here at the top of the show. We were talking about how they were hanging out right around unchanged. You can see a sharp move away from, well, that level, down on the day by about 1/3% here. It's time for my chart of the day here. We'll continue that discussion in terms of jobs throughout the show here, and that focus on them with the non-farmer, I should say, the weekly number headed our way in about 13 minutes. The non-farmer numbers, the monthly number, headed our way tomorrow. But let's get into my chart of the day. I started off the show talking about how some of the price activity we've seen in the indices, the dollar and rates, has been relatively contained, right? Well, I want to talk energies for a minute, because we've seen kind of a different story playing out there in terms of the bigger picture. Now, on the more granular, you can see we have seen some selling this week from 81.50 in the crude WTI all the way down to 72.73, and we've gone a bit sideways here. So just kind of accepting this lower level here, and no real rejection thereof, but definitely losing some of the momentum to the downside as of right now. But here you can see the move off the, well, this is the low from December at $70, and I think this is the big level to keep an eye on in terms of if the selling continues. The move we just looked at from 81.50 down to 73. Notice how 81.50, a bit of a double or even triple top up here in terms of the upper levels that we saw into the end of December, beginning of January. But again, if you look at the levels here from the lows in December around 70 up to those January highs at 81.50, currently trading for the most part right in the middle thereof. Now that's where you kind of lose the middle thereof discussion in terms of energy markets, because crude oils, you can see, recently back down December of 2021 levels here and kind of holding right around this range here, but lower extreme of the range that we've been in off the year high prints from last year up around 130. Taking a look at heating oil now, it has been contained relative to the other majors, right? We've talked about how diesel has really not been participating to the downside to the same extent that well. Here, RBOB, gasoline, we all know price at the pump have been coming off, right? That's a relief, unfortunately, more tied to recession and uncertainties associated with that. But I also wanted to point out how, look at natural gas, and this one really a weather story in many ways, right? Again, uncertainty in terms of what we would see as far as Europe with Russia, some of the worst case Putin scenarios not coming to fruition. And ultimately, hey, I mean, it's like 50, 60 degrees outside here in Chicago yesterday and to begin the week. I mean, for the most part, unseasonably warm conditions here this winter across the United States. So again, you can see some of the price activity we've been seeing in the energies, but let's keep an eye on this. We all know this ties directly into the inflation narrative. So yeah, it's not just jobs, it's not just wages. When you're talking inflation, this is a big part of it as well. And here you can see why some of that has been easing as we've come off highs, but again, still holding on to some key levels right now. Let's bring in Phil Strebel, Chief Market Strategist at Blue Line Futures. He's joining us this morning to talk energies. Phil, good to have you with us. I just pointed out how we'd seen some selling to begin the week, the year. It's kind of eased. It's slowed some of that momentum to the downside, but not the start the bulls were looking for, to say the least.
No, and I saw the report that came out that said Brent crude starting off the worst start of a year since 1991, so down about 9.1%. I do believe, though, that energy prices are in a sideways pattern between 70 and 80 for WTI. We are starting to cycle back up.
Hola, everybody.
Markets tend to fall twice as fast as they rise. A rip type of trade here. So we get anywhere close to 80, take those profits. We get down in these, we retest the lows here today. I think you start building a position.
You know, Phil, as you say that, I'm thinking here this morning's my walk with my dog was not as pleasurable. It was Monday, Tuesday, and Wednesday. I mean, things have cooled off here. How long can this warmer weather last as we're into the middle of January, February, very cold oftentimes here in Chicago, across the Midwest. So weather a factor here. And ultimately, I pointed to that with my chart of the day and how we've seen natural gas prices come off as well.
Natural gas been a complete disaster. And you remember that traders tend to build positions coming into, November, December for those January, February, March. So they're not seeing any kind of indication that we're going to have this cold front come through. They got to liquidate that January. They roll over to February, and it becomes this snowball effect of liquidation. So you got natural gas down another 6% today. Looks pretty ugly on the charts. How low is too low? I'm not sure. I think that Europe really dodged a bullet with an unseasonably warmer winter this year. So, it really helps out. Otherwise, we could be double-digit nat gas if it would have been, a repeat of last year.
And a worst-case scenario, Putin scenario not developing as I've been pointing to as well. It seemed that situation is fairly tame compared to what it could be. Let's talk a little bit about how this is not just what we're seeing in terms of weather. I mean, a big part of this also, there's some concerns about recession. We heard from the IMF to begin the week, and they kind of pared back some of our expectations as well. There's some demand concerns out there, Phil.
Yeah. It's the global growth outlook. It's really come down, the recession outlook. You're going to see people do less driving, especially if you get any kind of spike up in gasoline prices. But I just think that everybody, you look at like food, energy, shelter, and you go to the bottom income earners, that takes up about 62% of their expendable income. So, people are really strapped right now. And this inflation is going to remain sticky, as, you guys were talking about. The FOMC minutes and everything, the Fed just really
quite hawkish going into this year, and I think that it's going to kind of tighten the belt on a lot of these commodities.
Phil, is inflation remaining sticky? What we're seeing in terms of gold, it seemed to be a dollar story headed into the end of last year, but this year, just to begin the week, we've seen a couple days where gold's been up, the dollar's been up simultaneously. Not what you'd expect to see. I guess I'm wondering, is that more tied to some of those expectations?
Gold's doing a great job here, and it's got a little bit of a lost momentum here today since the start of the year. It's still fighting the uptrend, and that uptrend still remains in place all the way down to about 1805, 1800. I think it's doing its job. You have a lot of these different other really speculative asset classes, a lot of tech bubble, Bitcoin, things like that. The FTX, they've really expose some of these weaknesses, in the entire market here. And I think a lot of people are coming back, and gold is going back into that traditional safe haven asset, spot to park your money. The Fed eventually will be done raising rates. At that point, I think gold gets its next leg up. I think we could easily go through 2000 this year without even any difficulty.
I got to take a heartbeat here and just kind of point to something. This chart that we just had up, if we could pull this gold chart, this was the daily time frame we just looked at a second ago from 2078. Now, that's not the all-time high we saw in reaction to the pandemic. I'll get there in a second. But from 2078 down to 1618, look where we are for the most part in the middle of that range. So just kind of feeding into that theme that I was talking about at the top of the show, how price activity is relatively contained. And then look at this. To your point, Phil, I mean, gold has performed well for the bulls. You can see, again, the strong run-up that we saw into that pandemic high up around 2100. And look how we're holding that upper level. And we were just looking at this move from 2080 down to the 1620 area. We found recent support. But look at this bigger picture range that we've been in since those all-time highs. I mean, for the most part, holding in the middle of that range as well. So just wanted to point to that. What are you seeing in terms of copper? It's coming off a little bit here. As it seems like that China reopening trade was a bit of a disappointment. It ran copper up into the $4 level, but couldn't take out key resistance, Phil.
It flipped a neutral trend on my chart, my system. We got to break out back above 388 to trigger a new buy, or a breakdown through 370 in order to trigger a low. I think it's trapped right now. If you throw up like the 50 and the 200-day moving average, I think it's like trapped right between the two. So we'll see a breakout to the upside or downside in order to establish new trend. We're big momentum traders over here. We use a lot of time. Technical analysis. I think the information you're receiving from China is a little bit dicey. 1 minute it's 20 of the 25 million people in one city, 75% of them have COVID. That's not bullish at all. Yeah. And then the next thing you know, it's like, oh, we're going to put stimulus in the market and we're relaxing those COVID restrictions. I don't know if that's doing any good either. So that's why you're getting this sideways choppy market. We'll see which way we break out, and we're just going to go with the flow.
30 seconds, Phil. Silver, a similar situation. I saw it coming off significantly, and kind of just speaking to that industrial metal concern.
100% tracking copper right now. Done a great job against gold. It was 75-1 on the ratio, which has come down significantly from 95-1 just a couple months back.
Silver's done a great job against gold, to say the least. And Phil, you've done a great job for us here, breaking it down to start the year. Happy New Year to you and everyone at Blue Line. From us here at the TD Ameritrade Network, Phil Strebel, the Chief Market Strategist at Blue Line Futures. We're going to take a couple minutes here, gather some numbers, bring Dan Deming in, the Managing Director at KKM Financial. He's going to help us break down the weekly jobless claims. We've got financial markets on our radar, the dollar hanging out at 104, rates a major focus for investors and traders. Jenny Horn's also going to join us. She's got a couple companies reporting quarterly results to bring to our attention here this morning. Hey, simply put, lots more of the information you crave about the futures markets you trade. We'll be back.
We empower those who act. Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment. Determine the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll explore investing strategies designed to generate regular income and preserve capital. First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the Income Investing course and a whole lot more.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on TDAmeritradeNetwork.com to all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Welcome back to the second half of the Future Show. A busy morning for us here on the TD Ameritrade Network. The focus on jobs, the Fed minutes from yesterday, and market reaction too. We saw the indices sell off after the ADP report came in higher than expected. Let's check in on where the four majors stand, still in negative territory at 3863. The S&Ps are currently 7 handles off the lows from the session. We traded down to, hold on, we just made a new low for the session down to 38.52. We are taking out lows here as we speak in reaction to the jobless claims here as they come across the wire. Let's check in as we extend the gains to the downside in terms of the indices on some of the other top traded products and products that should be at the top of your watch list, because if the indices lower, there it is. I'd expect to see the dollar higher, significantly higher, in fact, up by about 0.5%. And I'm looking at the jobs report here as it hits the wire here and looking at the initial jobless claims. Looks like a little bit below expectations. Interesting to see. I see the revision to the upside here from last week's level up to 223, but at 204, it came in a little bit below expectations. So I guess I'm a bit surprised to see the reaction to this. Let's bring in Dan Deming, the managing director at KCAM Financial, because he can help us break it down probably a little bit better than I can. Dan, we're going to lean on you for this one in terms of what's going on. I mean, the indices don't really like this one. I want to point out, maybe not necessarily cratering here, but we did get a new low. But the jobless claims, the weekly number came in a little bit better than expectations in terms of jobs added. I guess a little bit softer, I should say, at 204,000. Yeah. They were looking for 225,000. So, but again, it would seem like, so fewer jobless claims, right? Stronger labor conditions here. I guess I was turning it around in my head. This number was, I guess, considered a little bit hot by traders and investors, posting new lows, as you can see the reaction to.
Yeah, absolutely, Ben. And following up on the ADP number, the ADP number certainly had an impact when it came out 15 minutes ago. And then now this is just a continuation of what appears to be a very strong labor market, feeding into, the expectations for tomorrow, and also just that the Fed minutes yesterday indicated that they showed no signs of wavering, even though the market is pricing in a cut by the end of the year. And then you have a couple of data points like we did this morning, reinforcing the Fed's message. And we do have 3 Fed speakers today as well, Ben. I think that's going to be another key to moving the markets today. So, but this really kind of sets the table for tomorrow that the jobs number could be much stronger than anticipated. And, certainly the market's paying very close attention to the higher for longer mentality. And this extends that narrative with these 2 data points this morning.
We'll hear from Bostic, we'll hear from Barkin, we'll hear from Cook. And I did kind of turn this around in my head here with the ADP today and getting ahead of the non-farm payrolls tomorrow. I'm thinking the number coming in below expectations, a good thing in terms of the market. But yeah, and I'm looking at this number, Dan, dangerously close to below 200,000. Yeah. I feel like if we had gotten below 200,000 on this number, we could see the indices, just cascading lower here again, down to 38.52. We're holding off that low. We're not really adding to the losses here at this point, still not rejecting them, but this is right near that closely watched threshold that would raise some eyebrows and some concern possibly.
Yeah, again, it allows the Fed to maintain an aggressive stance is what it does. And markets don't like that. Certainly, particularly when you look at some of the areas that suffered last year. And now if we see rates stay higher for longer, the growth names certainly are much more vulnerable to that narrative. And you're seeing it play out right now as far as the price action. And certainly the expectations alone, with these two data points this morning, you can see the impact that any type of shift or I guess maintenance of what the Fed currently has in place has a significant impact. And, we'll see if it lasts throughout the day, but the initial impact is we saw it play out in various asset classes. You're looking at the dollars, you pointed out, Ben, really moving higher on this. We're seeing rates bump back up now as well. A reaction there to the idea that, maybe this will maintain the Fed's position for an extended period of time. And, overall, the one thing in the ADP data or the analysis was that they're seeing a fragmentation within the jobs market as well. So, you're seeing shortages in certain areas, but then, we're seeing layoffs in others. But apparently, based on these data points right now, that there still appears to be a shortage of labor out there, and you're seeing these numbers continue to maintain pretty, aggressive or positive data. Historically, this would be a positive thing, Ben, but right now the market's looking for some cooling off, and it's just not happening in the jobs market.
Yeah, and I want to continue that thought here for a second. But before I do, I want to point out that we also have the exports and the imports, which came in a little bit below prior levels. So again, at 251, almost 252 billion for the exports. Imports came in at 313.4. And we also had that trade balance come in at, it looks like, down 61.5 billion. It was expected to come in down 73. But Dan, I was thinking about that in terms of what you were just talking about as far as getting back to the jobs. And I don't want to beat a dead horse necessarily. It's only a weekly number, obviously, but headed into the non-farm payrolls tomorrow after getting stronger than expected. The Challenger job cut report was strong. The ADP was very strong today as well. So we're seeing a trend here, to say the least. And I'm kind of thinking about it with the job cuts that we're hearing about this morning, for example, from Amazon. In some ways, job cuts, a slow kind of situation is a good thing, right? But no cuts is not a good thing, right? Because it speaks to really strong employment conditions. And to your point, where the Fed can continue or has to continue, and kind of suggesting that we will slip into a recession per the Fed's actions. So slow job cuts, a good thing. No cuts, a bad thing for the market.
Right now it is, because they're trying to slow things down, and I think they have in certain respects. But when the service industry alone, Ben, it just appears that there's still a shortage, a significant shortage out there. And we're seeing some of these other areas. Again, fragmentation, I think, is the key word here. That in certain areas there is there's cost cutting going on because of the fact that revenues are down and profit margins are down, and that's a natural kind of progression. But in other areas, you're still seeing significant shortage, and so I guess that appears to be what's counterbalancing maybe some of these layoffs, at least initially here. Now, we're in the relatively early phases of this, and in the way we're programmed these days, we want instant reaction or instant gratification, and it just doesn't work that way. So we'll see. The market is certainly not taking this well, though. They're going, particularly going into that number tomorrow. We're basically on the lows here as we continue to discuss this, and we're seeing a shifting dynamic and some of the trends that we did see just over the course of the last couple of days, with the dollar now bumping back up, because again, the extension of interest rates out on the yield curve is going to maintain a tailwind for the dollar, and that appears. Excuse me if I could speak this morning, that appears to be what's playing out here this morning.
Hey, that's okay. I'm having a hard time breaking down the numbers here this morning and figuring out which way they should be pointed here, Dan. But talk to me, because I'm wondering, how much does the holiday hiring and some of the seasonal trends that we see factor into this? It should be a consideration for traders to at least focus on.
Yeah, for sure. And to some degree, though, these projections do price that in. Okay. But yes, it is something that has an impact, and it can be, very, very difficult to price in. As we see the shifting dynamic between, pre-Thanksgiving and through the holiday season. So, yeah, that's something that the market participants will need to keep an eye on moving into this year. But there's no question right now with the markets looking for that tipping point where the Fed plateaus and potentially starts to pivot. This extends that period out with data points like this, and certainly that leads to revaluation of various asset classes, and particularly equity markets, given the fact that they're pricing in the high probability that we're going to see rates stabilize or come down by the end of the year.
Dan, to that point here, and just to talk markets here for a second, and rates, the U.S. dollar, I pointed out at the top of the show at 104, basically in the middle of the range we established last year, 94 up to 114. And rates, while they're not necessarily smack dab in the middle of the range, they're pretty comfortable. We're talking below 4.3 in the 10-year, above the 2.5 lows that we saw back in, in August. Ultimately, they found comfort in this range as well here. And you think they could even come down a little bit further, maybe down to 3.25, 3% here?
They could, Ben. If we see a significant slowing, and particularly if inflation continues to trend lower, but it's hard to say. I guess we're, as you've mentioned, when you look at the 10-year, we got 3.9 on the top end and 3.4 on the bottom end here over the last couple of months, and we're at 3.7 right now. We're bumping back into 3.73 is last time I saw. But, so the top middle of the range, but that's a range that, again, the inversion in the yield curve is something else that market participants need to be aware of. Now, we did see that narrowing into the end of December. Now it's actually moved out here the last few days. You're looking at the 2-year, 10-year at 70 basis points of inversion. It got down to the low 50s just a couple weeks ago. So, that's something else that needs to kind of be considered. And a number like this, you would think that would move that, create a little bit less inversion as it works its way through the yield curve if we continue to see strong data points and therefore pushing the potential for cut further out on the yield curve.
Okay, definitely gives us lots to watch here in terms of markets as we head into the jobs report tomorrow and digest some of the information today. Dan, I always appreciate you joining us here.
All right, Ben.
Happy Thursday to you. Dan Deming, the Managing Director at KCAM Financial. Let's talk earnings with Jenny Horn. She's markets correspondent here on the TD Ameritrade Network. She's got her eye on a couple names reporting here today. Jenny, I saw Walgreens. I saw Constellation and a couple others. Talk to us about what stands out first and foremost. And imagine Walgreens is at the top of the list.
Yes, I have to say of the two, of Constellation Brands and Walgreens, Ben, okay. Walgreens is definitely the more interesting report this morning because there's more meat to it. There's more things to really discuss. Constellation Brands was pretty straightforward, but we'll start things off with Walgreens because it is the more interesting, I think, of the two. They did say their sales fell about 1.5% in the third quarter, and as they saw a drop off in COVID vaccines and test kits, which hampered their retail pharmacy business as a whole. The drugstore chain did cite strong sales of their cough, cold, and flu medicines as one bright spot that helped their comparable retail sales, excluding tobacco, rise about 2.1% in the United States. Now, a surge in pediatric cases of RSV, as well as influenza and COVID-19 in the U.S. this winter has also driven up demand for those medicines. So they are not necessarily seeing a loss of demand. They're just seeing the demand shift here a little bit, Ben. Their beauty and personal care categories also grew in the current quarter, and the top line results also came in better than the company had been expecting, with a loss of about $3.72 billion versus due to this $6.5 billion charge tied to a settlement of their resolved opioid case. So that took a major hit, but excluding that one component, they actually saw their earnings per share come in ahead of Wall Street's expectations. So that is something to keep in mind, but the adjusted versus non-adjusted figures, at least in terms of top line, do look different here, which I wanted to point out. They also said they're raising their full year sales guidance to a range between 133 billion to 137 billion. The company also cited their purchase of Summit Health, the parent company of CityMD urgent care centers, as well as recent currency fluctuations and better than expected sales in their most recently ended quarter. quarter. So a lot to break down. I thought this report was super interesting because I thought it gave us a good glimpse into the retail pharmacy business, how the consumer actual health, not metaphorically speaking, is doing. And I thought that it's interesting to see how they're still dealing with this opioid case that seems like it's an ever-present cloud for Walgreens.
Yeah, I'd have to agree. And just in terms of share prices here, they topped out last year around the 55, 56 level back in January, February, and they sold off throughout the year down to the fall lows around 30. Started to recover a bit back up to 42, but have sold off into earnings. They're down on the day in reaction to the numbers here. And, below the 50-day, below the 200-day moving average, and RSI not really supportive of upside momentum here either right now. Let's talk about the other name that you've got your eye on here today. Constellation Brands reporting quarterly results and opening their books to investors. What do we see?
So Constellation Brands is falling this morning after posting a lower than expected third quarter profit. Adjusted profit did total about 2.83 a share, which did miss consensus. Now sales, on the other hand, did beat, coming in just over 2.4 billion. This exceeded expectations by about 1.5%, just narrowly, but also did rise 5% year over year. Looking ahead, they do expect their full year earnings to fall between 15 and 35 cents a share, with adjusted profit falling between $11 and $11.20 a share. This is ahead of the consensus estimates. Meanwhile, the company's board did declare a quarterly cash dividend of about 80 cents per share, payable on February 22nd. Now, we've seen obviously growing evidence that we're seeing a surge in price, and as well as the overall economy really right now grappling some price sensitive shoppers, especially when it comes to, say, perhaps shopping at the grocery store or picking your drink of choice. So Constellation Brands was a bright spot throughout 2022, given its strength in its Corona and Modelo brands. And to channel some of the wiser souls around me that say you drink in the good times, you drink in the bad times, this name does have a little bit more of stability versus some of its peers. Although, like you can see, Ben, today is still lower off this earnings, so still not enough to please the street.
Yeah, lower, significantly lower, down around $10 I saw. And this is a stock that rallied in 2022 from 207 up to 260, 261 where it topped out. And then it kind of struggled, right? It triple topped up there, retested it in August, retested it back in December of last year. And we're below the 50, below the 200-day moving average. It'll be interesting to see how investors digest the news here. And a solid breakdown as always. That's Jenny Horn joining us this morning to take a look at a couple companies reporting quarterly results. A quick break. When we come back, Michael Zaremski is going to help us get ahead of tomorrow's jobs report, the non-farm payrolls. And we got the chart master, Rick Ducatz, looking at the Russell. More futures in 2 minutes. Stick around. We'll be back.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. The platform demo webcast series is designed to help you broaden your knowledge of tools and resources available from TD Ameritrade. You'll learn tips and tricks to help navigate tdameritrade.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
We empower those who act. Those who see the correlation between upswings and downswings. Those who manage risk by meeting each obstacle with a perfectly executed strategy. A measured approach, the right tools, driving accuracy. CME Group, where risk meets opportunity.
Welcome back to the Future Show here on the TD Ameritrade Network. The focus this morning, jobs, the indices selling off in reaction to stronger labor conditions than anticipated. And well, that's not just going to be today. That'll be into the end of the week with the non-farm payrolls data headed our way tomorrow. Let's not get tunnel vision, and let's look outside a little bit of what's going on this morning. Michael Zaremski, Director of Futures at Charles Schwab's, helping us with that. Michael, good morning to you. Happy Thursday. Help us get ahead of the bigger picture, more closely watched monthly number tomorrow, the non-farm payrolls expected, and some expectations thereof.
Good morning, Ben. As you know from the market's reaction today to the jobs numbers that came out today, that good news for employment is bad news for the equity markets. And we're looking for a rather lower number here for expectations for tomorrow's December non-farm payrolls. 200,000 is the expectations, and that is down from 263,000 in November. Now, the November figure was the lowest since April of 2021, Ben. So we have seen the jobs increases on a decreasing level through most of 2022. In fact, we've been below 300,000 jobs created since August. So the trend is going in the direction that the Fed wants to see the labor market start to slow a little bit as well, too. But unfortunately, Ben, for the markets here, that the expectations going into these are so low, and the labor market is a lot more stronger than people think here, that these numbers keep beating month over month as well, too. And then that, I think, is the concern for tomorrow's figures. There's with another low expectations there, and given the data we've seen today, that the number will once again be above expectations.
You know, which gets us back into something we were talking about a little bit earlier in the show with Dan Deming from KKM. And I was kind of just trying to get to the fact that the market's really looking for the labor market to find this real sweet spot, right? Not too cold, not too hot necessarily. And judging from where the indices are right now, it's not necessarily finding that, at least in terms of the footing to mount a rally, right? We're holding this sustained level around 38, 39, so we're not seeing necessarily a breakdown, but maybe price activity where it is a pretty good reflection of how the market's still just looking for more information.
Exactly right there as well, too. I mean, they have to try to get that confirmation of the anecdotal evidence we're seeing with more layoffs coming there as well. And we're seeing, some signs of that possibly. I mean, even the Challenger job cuts number, like we talked about as well, too, even though it was, nearly half the previous month, so it was still above expectations. It was still 43,000. And even looking at today's ADP numbers as well, too, we look at where the employment was. It was all in the smaller sectors there. In fact, all the losses were at the large employments, those over 500 workers. And even the regional section of that, Ben, as well, too, was really the West Coast. And what does that mean? Tech jobs. That's the one sector that has really seen the losses in jobs. But leisure and hospitality, that segment that was really challenged throughout the pandemic there, is once again seeing increase in hirings there. And that's why we're seeing the smaller employers, the restaurants, the small shops and businesses are still seeing that employment come in. Now, looking back at the jobs picture here, Ben, we got to look at, besides this employment data, we got to look at, for instance, average hourly earnings. So that's another important factor that the Fed's going to be paying attention to as well, too. Now, we're seeing that, elevated levels of wage growth there. Year over year expected to be 5%, which is well above, I think, what the Fed wants. The Feds want to see probably a 2% year over year growth. It kind of matches where their target inflation is. However, that's just not going to be the case here when we're seeing the labor market still being that tight. So what I think we need to get this market here to be a little bit more positive there. We got to see them kind of meet what the Fed wants to see. We want to see that jobs growth start to slow. We don't want to see negative necessarily. We want to see a number, maybe 100, 150,000 month over month, really kind of taking it down there as well, too. We want to see that average hourly earnings start to trend lower. Now, that 5% year over year level is near the low end of the range we see in 2022, Ben, but we want to see that number down to maybe a 4% or even a 3%. And I think that's what we need to get that sweet spot, like you're talking about, that could actually add some stability here to the markets.
Okay, so it's not just necessarily non-farm payrolls to keep an eye on tomorrow. We also have the wages component, which is, and I think you bring up a good point, Michael, because in theory, a very tight labor market, you're going to see the wages on the rise, right? As employers have to provide more incentive, more lure to come in and provide potential job participants to take the offer ultimately. But in kind of a softer market, ultimately, you can see those wages start to come off a little bit, hopefully come off. Now, also, I just want to remind everybody, and I think, correct me if I'm wrong, but that Challenger job cut report up around 80,000 last month was a little bit higher than expected. So maybe a little bit elevated to the upside there. Michael, talk to us again, just kind of sum it all up in terms of the wages component being a significant factor there. Final thought here.
Absolutely right there. So I think the wage component there, which maybe gets a little bit overlooked as well too, is something that the Fed is really going to be focusing on because they're worried about that sticky wage inflation because that's one of the part that they really can't influence unless they really see the labor market start to soften as well too. And let's face it, once you get a worker is hired there, you really can't cut their pay as well too. Unfortunately, and leads to more layoffs there as well too. So definitely focus on those average hourly earnings there. And I think if we see the labor market continue to be this strong as well, too, I think analysts have to kind of raise their expectations a little bit as well, too, and keep, lowballing these numbers there as well, too, to get that positive market reaction as well, too. So be a very interesting number tomorrow as well, too. And even if we get a number above expectations at 200,000, if it's below last month's figures there, it's still going to be almost 2-year lows for job increases as well, too. So at least it's going in the right direction.
I like it. Don't get tunnel vision in terms of the numbers today. We've got some data coming out tomorrow. And don't get tunnel vision in terms of just looking at the non-farm payrolls number tomorrow because the wages component also could be a key factor. Mike Zaremski joining us from Charles Schwab. We'll see you here tomorrow, Michael. Appreciate you joining us. And let's bring in the chart master, Rick Takatz, joining us. He's got his eye on some of the selling we're seeing in the Russell today, the indices in general. Rick, good morning. And I was talking earlier in the show about how the selling is relatively contained. I'm looking at the move lower in reaction to the jobs report, noticing we still have yet to take out the lows from earlier this week.
I wanted to back up a little bit, though, and look at yesterday, because yesterday I thought was a little interesting. We saw this drop off in the equities, the other three major contracts. The Russell was surging upward at the same time. Why? Not exactly sure, but it was happening.
A divergence nonetheless.
Yeah, divergence nonetheless. And it was persisting throughout the rest of the time period that we have up here.
And I think this is important to bring to our attention because as Rick points out, look, we saw follow through to the downside from the other three limited without participation from the Russell. So you'll get a big move to the downside, but in terms of looking for follow through, you want to see participation from all four of the majors. Go ahead, Rick. What are you noticing in terms of the selling we're seeing here? Look, we're making new lows, it looks like, as we speak. Jobs report's definitely not comforting for investors and traders today, but still relatively contained.
Yeah, and we are, the Russell is still holding up a little bit better than the rest of the other three indices. So maybe it's a sign that things aren't as bad as it seems. This is the more risk-on thing. It's also the one that would be the quickest for investors to pull their money out of if things are looking bad. So maybe it's not as bad as it seems right yet, Ben.
Where do things stand on the bigger picture here? Because if things aren't as bad, as they seem in terms of the intraday look, I'm curious what's going on as you step a little bit away from that granular tick-for-tick look and the market reaction basically to the jobs report today. What's going on as you pull up the hourly?
Well, in the broader picture, the Russell is up a bit off of its 30-day lows near 1730 here, but we're still within a fairly established range between 1735, 1730, 1735 to the downside, and about 1795, 1800 or so to the upside. So pretty clearly defined range, like I said here, just bouncing back and forth, and we're right now almost in the middle of that range.
And when you're talking about ranges, you know exactly what I'm about to do next. I'm going to talk about these consolidation areas that we're forming. This is the one that Rick's talking about right here. It's very well defined. Rick, what do you look for if we get a breakout in reaction to the jobs report tomorrow? Is that potentially the next catalyst? And if it is, what should we be dialed in on?
Well, I think I'd like to look at the even bigger term picture here. Chart looking at since September 2021. So you can see that the broader downtrend is still in play here. And I drew two trend lines to kind of encompass the messy price action near the tops here. They're duplicate parallel lines. So that can be something that can be helpful for your trading to identify a range of potential resistance rather than this stop on a dime, very clear area.
Speaking of divergences, as you pulled up this chart, I was just reminded we were talking about how the Russell was divergent from the other three majors on an intraday basis recently, this week, yesterday. Look at what I just remembered. The Russell was divergent from the other three majors back in the fall of last year when the NASDAQ, the S&Ps, and the Dow were posting new lows for the year. Look, the Russell was unable to take out the lows that we had seen back in June. So again, we were talking about how that was somewhat bullish without participation from the Russell. On the bigger picture, downside momentum in the NASDAQ and the ES and the Dow would be limited. Rick, final thought here in terms of you looking at this chart.
kind of a descending triangle shape overall, typically a more bearish pattern, but really can go either way. 1735 is still the line to the downside to watch. Watch the two shorter term moving averages, yellow 21-day exponential moving average, orange 63-day near 1786 and 1805 respectively.
I like that because 1735 is the middle of the range that we've been talking about for the most part, a contained trade, and that's a pivotal area to say the least. Rick DeCat breaking it down here for us. He's the chart master. He's got his eye on the Russell and thinks you should as well. That's it for us here at the Futures. Thanks for joining us. Stick around, lots to come. Oliver Rennick, Morning Trade Live, headed your way next.
Opportunities can be hard to find, like catching lightning in a bottle. In uncertain times, it's tempting to retreat or simply wait and see. At CME Group, we empower those who act. We deliver tools to help manage risk and capture opportunities in every market climate, across every major asset class, to seize each possibility at precisely the right moment. CME Group, opportunity is everywhere.
Many option traders tend to focus on price and direction, but implied volatility can also be a big factor in options trades. In the Options for Volatility course, we explore what implied volatility is and how it could potentially affect the price of an option. For example, let's say an option trader wants to take a bearish position on a stock, but isn't sure whether to buy a put or sell a call. Both strategies are bearish, but looking beyond direction to consider the impact of implied volatility could help the trader choose between them. We also introduce strategies designed to harness changes in implied volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in implied volatility. Iron condors, on the other hand, are designed to benefit from falling implied volatility. After learning about the strategies, you can take the final assessment to test your knowledge. Head to the Education tab on Thinkorswim for the full Options for Volatility course and a whole lot more.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Good morning and welcome to Morning Trade Live. We're day 3 of 2023. So far, it's tied. One down day, one up day yesterday. And we've got a big employment print coming tomorrow. So far, the jobs data continues to impress. This morning, both of our numbers better than expected. More jobs added in private payrolls than expected. Fewer jobless claims filed than expected. Things continuing to go the way of the employed. But for investors, it creates a bit of a tricky situation. We'll talk a little bit about how stocks are continuing to drop on good data as the numbers this morning creating a little bit of a cascade in the last hour for futures. But we've also had plenty of examples lately where stocks have sold off on bad data too. So that's a pretty tough market to trade in. If you're selling off on good data and you're selling off on bad data, there's really only two kinds. So we got a little bit of red here in futures this morning, not too deep, but watch the NASDAQ down about 80 pips. Layoffs in tech are the exception to the health of the labor market rule right now, as tech companies that have gotten crushed in equity markets the past year are showing that they have to make some big changes. Yesterday, it was Salesforce's layoffs. If they're making layoffs, it should be a clear sign that cloud companies as a whole are going to be doing that across the industry, reflecting a slowdown in growth from these companies. And so they need fewer people to sell the product. And thus, we get cracks in the labor market, but in parts of it that had been very, very robust. And I think for employees that are unlikely to fill the positions that the Fed is looking for. So if the layoffs are happening in areas that really are just the tip of the iceberg, it probably means the Fed is going to continue to drill deeper until they get the big disruption that they're looking for. Dollar's higher here a little bit this morning. Yesterday, we didn't get a bid in the dollar despite a better than expected number on the job openings survey. So a little bit of day two action there, maybe. We saw the market for bonds and the dollar weren't really responsive to yesterday's jolts. I think they were waiting for maybe the more headline type figures here today and then tomorrow morning as well. Generally, though, what's been important here is that stocks have pulled back over the last few weeks, even without any major liftoff in the dollar. Been pretty reliable that stocks go down when the dollar goes up and when treasury yields go up. Lately, though, we haven't really had either. Treasury yields and the dollar at best have gone sideways in the last couple of weeks. The dollar generally has been weaker. Treasury yields have had a little bit of back and forth, but stocks have just stayed in their long-term downtrend. And the S&P, while looking better than the NASDAQ, which is at the lows, is still having some trouble here over the last several weeks to close out 2022 and start 2023. That's where that catch-22 market looks like it really is playing out here, because we continue to see drops on good data and we see drops on the bad data too. Just a really tough foot needle to thread here, it seems like, for investors. I think if you look at the bond yield curve, you've pretty much got the answer for why. Even if the macro regime shifts a little bit this year, it's not really shifting in a good way. We still have yield curve compression. We had a pretty big drop here the last 3 days in the 10-year minus 3-month spread. So there was a little bit of yield curve widening. And then with short end rates staying elevated and moving up the last 48 hours, long-term rates moving down, you've got the 10-year continuing to compress the yield curve. So if yield curve was getting compressed over the last year because the short end was moving faster than the long end, that's why. Fed hiking, long end did move up, but short end faster, yield curve compresses. Now, you're getting the long end yield going down, but the short end yields are not, and you still have compression. So basically, you're getting the same result in the yield curve for two different reasons. That's really important here because it suggests that the economic situation is changing, but not in a particularly positive way. It's just a different type of negative. Because generally, you should trust the yield curve and what it says about the economy. And these moves are negative when we're seeing the spread go back down towards the lows. Another one I'm watching here that I think shows something similar is the fact that China stocks are having a great couple of weeks, but crude oil is not. A lot of times if China's having a big economic boom, you would expect crude to pick up, but it's not. And I think the best explanation for that might be some supply side explanations, but generally, I think this pretty big gap that's emerged between big cap China companies and WTI. The best explanation is because Western countries are still buckling under inflation and likely to have an economic slowdown on the way, and thus less demand for crude. It's one explanation. There are other ones. This is like maybe ranked third or fourth in the most important charts right now. Much more important is that yield curve. But generally, a lot of them point towards an economy that is not good for a stock market, even if it's for different reasons. All right, let's bring Kevin Haynes. Let's talk about the data. What isn't really different, what is kind of similar to last year, Kevin, is the employment situation. It just keeps printing better than expected numbers.
Sticky, frustratingly strong labor market, Oliver, is what's affecting stocks this morning.
What a twisted world that's how we describe it.
Exactly.
Frustratingly strong.
Well, I mean,
it's true.
In a world where Amazon is laying off, 18,000 jobs seems like a big number when you're one of those people. But if you think of 1.5 million people employed at Amazon, Oliver, it's 0.01% of their people. Now, Salesforce yesterday that you mentioned, bigger number.
Bigger
it's
percent,
It's 7,000, it's 10% of their force. So Amazon, the bare minimum, and what they basically acknowledged is we hired too many people during the pandemic. And so you and I talked about yesterday about the weakening in cloud and what's that doing to a lot of these companies. You're probably seeing that at Amazon.
Silvergate, the crypto bank, is also laying people off too. That was another kind of headline this morning, stocks getting killed there. So it's like the areas where there are cracks emerging are the ones that are going to need a lot more of a wedge to really make a difference.
That crack needs to get bigger, right?
Exactly.
0.01% of your employment is not a big layoff,
Jay Powell
even though
holds
that
the
number
tools.
seems right. He wants more than that. The Fed's message over this has been very consistent. The minutes showed that yesterday, that they want rates up here for higher, and they don't want the move from 75 basis points to 50 to indicate any weakening resolve, is the way they put it.
Okay. So as we balance this out with some of our other data, like yesterday, we had the manufacturing numbers, which were sub 50. We're going to get the final PMI composite this morning. We expect that to be showing contraction too, right?
I mean, these are numbers that are coming out and still showing an overall amount of economic activity that's lower than we'd like it to be, right? But is that good news or bad news? That's what we're trying to deal with here as an economy. How do we define what helps the stock market versus what hurts the stock market? Today's jobs numbers and where they're coming from, obviously rates higher, dollar higher, and stocks lower.
That's what's so frustrating is the activity is measured by the PMIs and the ISM are contracting, but then the employment situation remaining strong enough, which suggests inflation could
But here's why. It's why, right? Services. Remember what you and I talked about yesterday? Leisure and hospitality was the lion's share of this move. I think that if you break down the numbers on the ADP number, it really gets quite interesting because all the numbers were good except, Oliver, companies over 500 people. That number dropped 151,000. Every other, small, medium, all big, strong gains. And leisure and hospitality, 123,000. That's the biggest single share of employment. So still, that services sector, which isn't indicative to some of these other areas that are laying off, that's where the jobs are going.
Yeah. All right. So there's still enough spending on services, stuff that didn't happen during COVID. But the employment situation, it really is what the Fed watching here, and it's telling us that they're not going to let up. I think yesterday's minutes, too, I was kind of surprised that there was no notable move in bonds of the dollar after that, because that seemed like the most clear language they've ever given us, where they told us if the market goes up too much, that's a problem for us.
And what they took off the board was any talk, any idea of cuts during this year. And it was absurd to begin with. They just keep pounding that thought. Don't think about cuts. They are coming.
Not happening. Okay. All right. Thanks, Kev. Yeah. Still some more data on the way here this morning. Let's talk some more about those layoffs and a few other stock news items with Renita Young, our senior markets correspondent. Okay. Tell us more about those Amazon figures, Renita. What's happening?
Well, right now, of course, we see the stock actually rising today. It looks like in the pre-market, we'll see what it does later, but it looks like investors are pleased with this news. Now, while this 18,000 job cut number is lower, or is a small percentage of Amazon's workforce, it is almost double of what Amazon said it would do in November. Amazon said that it would lay off 10,000 people. And so now one would wonder, well, just how bad is it that the company has to nearly double the amount of people that it's laying off? But Kevin had something interesting to say when he talked about the cloud issue that we were talking about yesterday. Now, people might not have caught this, but UBS lowered their price target on Amazon from 165 to 125 because of AWS. And it was because of the deteriorating cloud industry. And so that's something that analysts will absolutely continue to watch. And I'm wondering just how much it will impact trading today. If people, it was kind of buried.
Yeah. Speaking of buried, Michael Berry from the Big Short fame was tweeting this morning about that Salesforce news from yesterday. And he said, this is not a reason to own Salesforce. The layoffs are bad news. So to see Amazon get that pop the way Salesforce did in the pre-market, fading a little bit, but I'm with you. I want to see if there's actually day 2, day 3 followed through in the bounce that we got for Salesforce, because to me, again, a lot of this is just confirming that there's enough slowness to warrant the cut. It's hard to spin it in a positive way unless it's from like a situation so bad. Now they are taking the measures to make it better it's a very tough kind of spin into something positive unless we're really like in a bad situation, which then why do you want to buy the stock if that's the case?
Right. And as you can see, the stock is being rewarded for taking those precautionary measures. That's really the name of the game now. Are you smart enough to start cutting before it's actually going to really cut and protect folks or help folks protect their investments? That's really what investors are looking at now.
It's going to be interesting to see if there's any follow through to this. Something positive, we got some earnings this morning. The Constellation Brands, is there any respite in the booze and the marijuana trade with their investment in a Canopy?
Well, the marijuana trade did not do as well, that business. Still, right? But the high-end alcohol business did pretty well, and it proved that people are not trading down out of the high-end wines or beer selections in Constellation Brands.
We're trading down everything else.
We're trading toilet tissue, everything,
exactly.
right? But these earnings actually came in mixed. While we did see revenue grow by 5% year over year to $2.4 billion, we saw lower adjusted profit over in the earnings per share, came in at $2.83 a share. The estimate was $2.89. So not by a whole lot, but the beer business specifically saw operating margin decrease to 37.5%. The company says it's because of those high raw material costs, packaging, logistics, those were all higher, and costs like higher marketing spending actually offset that sales growth that it did see, right? But yes, like I said before, it did see strong performance across the high-end craft beers, high-end craft spirits brands. And moving forward for full year 2023, the company updated comp basis EPS to between $11 to $11.20, and that was down from that previous estimate.
All right, yeah, pretty mixed bag.
Yeah,
Market not a big fan. Definitely could have been worse. We've seen worse earnings from consumer stocks, but a high bar here by the market hitting Constellation Brands. Happens a lot on earnings.
Yeah.
I think because it's like every time we get an update on how much the Canopy growth investment is slowing them down. But shares ultimately have been pretty stable in the long term. Thanks, Renita. Okay. Yeah. All right. Good start here with some stock specifics. When we come back, let's talk some more about the outlook and the horizon for 2023. Scott Ladner joins us to take a look at some of the data from this morning, how that fits into the narrative. Stick around.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Looking to improve your portfolio management skills? Our portfolio management webcast series breaks down key concepts like retirement planning, income generation, ETFs, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience that pushes you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Oh, yeah, I'm going to take off.
Now, you downloaded the TD Ameritrade mobile app?
Yeah, actually, I'm taking one last look at my dashboard before we board.
And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set.
Choose the app that fits your investing style.
I'm Nicole Petalides, live on the floor of the New York Stock Exchange, empowering investors every single market day. Tune in to the TD Ameritrade Network.
Jobs data continues to impress this morning. Fewer jobless claims and more private payrolls than expected. Let's talk about it with Scott Ladner, Chief Investment Officer at Horizon Investments. Scott, welcome back. Happy New Year.
Hey, Happy New Year to you, Oliver. Thanks.
The numbers keep coming in warmer than what economists think is going to happen when it comes to employment. Yesterday, we heard a message from the Fed that seemed to be pretty still hawkish in nature. So what does that mean for stocks?
Well, I mean, look, probably not great things in the short term. The data we're getting this morning just continues the theme. Like, they cannot knock this labor market down, no matter how hard they're trying so far. Now, eventually, these rate cuts will end up working. Eventually, economic activity will slow down meaningfully enough for companies to start firing folks. But people had such a hard time hiring people that they're really loath to fire. And that is part of the conundrum that we find ourselves in right now. It's like, we know we have a slowing economy. We know we have ISMs that are going to be south of 50. But companies aren't to start firing folks yet. And until that happens, the Fed's going to keep their foot on the pedal.
At the same time, we've got, it seems, a steady drumbeat of tech layoffs. Are they not big enough in terms of number to make a dent in the overall situation? Or are these not the type of people that are going to fill the jobs that the Fed is looking for in terms of productivity? How did those stories fit into this, Scott?
Yeah, I mean, it's a great question because it's both of those things. It is, first of all, like they're very, you guys were talking about the Amazon layoffs earlier and other tech company, and Salesforce layoffs. Those are, they're headline grabbers, but they don't really move the needle with respect to the United States employment situation. And so, the tech employment in this country is loud, but it's small. And it's just not going to be the thing that changes the Fed's mind on anything. So while it's important and while we think that's going to continue in terms of tech layoffs, it's just not the thing that the Fed needs to see in order to bring down wage pressure, because wage pressures are fundamentally the thing that are keeping services inflation high, and that's really what the Fed is focused on right now.
So if the employment situation remains pretty strong, how does that factor into inflation, Scott? Does that mean there is a limit to how low inflation can go?
We think for a little bit, but let's remember all the work we've done on inflation so far. We're going to be in outright goods deflation in 2023, and if we're not there already, the price of sofas, the price of TVs, price of construction, new housing, all those things are going to be in outright deflation, soon if they're not there already. So that part of the equation is solved. It's really just the wages and the services side right now that the Fed has to deal with. And the way that they understand that problem is through the employment channel. And so they just think that they need to get employment lower, no matter how it happens. But that process takes a little bit of time. We're not going to get a big surge of employment, supply of labor coming in. A big surge of supply of labor would be coming in through something like immigration reform or some kind of immigration policy. And that's just probably not in the cards in the short term. So the other way that you can get employment down is by whacking the demand for labor. The way you whack demand for labor is you induce some sort of mild recession, which the Fed is on the course to do.
So if that mild recession becomes something more intense, what do we do as investors, Scott? Do we just go to cash and pick up a little bit more of an interest rate than we could have, before the COVID drop, or what do we do?
We think actually that the first quarter is probably going to be the worst quarter. So we're actually pretty bullish, as we come into the summer and the spring. It's just these first few months, while we get earnings estimates coming down, and while the Fed continues to try to fight this labor battle that is just going to be slow moving, those things are going to take a little bit of time, and they're probably going to cause the market to have some indigestion here for the first few months. But as we get into the spring and the summer, all those things that were big time headwinds in 2022, and namely, the China, the kind of disastrous China zero COVID policy, and the inflation fight and what the Fed's been doing, and the Russia-Ukraine war. All those three things, we already know that China is turned, and it's going to be a sloppy turn. It's going to be nonlinear. It's going to, have some kind of horrific humanitarian, results. But for global growth, the China turn is important, and that's going to be really, really strong. And the midpoint of the year. And then the third big headwind that we had was actually the Russia-Ukraine war. And well, nobody can predict.
Good morning, everybody. Good morning, Frank. Good morning, Elle. Good morning, Lucille. Okay, I'll check into all of the tech things before we leave today. So good morning, everybody. Welcome, welcome, welcome. Let's see how much time before the bell. Got about 4 minutes. So let me do this intro and get it out the way. Good morning, Marilyn. Welcome, everybody. I'll turn this down a little more too. Good morning. My name is Sandra, and welcome to my channel, From Lack to Legacy. On this channel, we're all things money, investing, and mindset, particularly how to go from a scarcity mindset to a mindset of abundance. If that sounds like something that you're interested in, you're in the right place. You found your people. We are a learning community of beginning traders mostly. Some of the people in the community are experienced and they help us out immensely. Last night we had a very informative Zoom meeting. Thank you, Johnny. He presented the RSI strategy and it was great. I did record it. You guys, I didn't get the entire Zoom, but I did get a good portion of Johnny's presentation and I will put that in the drive. So if this is your first time, welcome. Don't forget, please like, subscribe, and share the channel so that everybody can get in on some of this financial literacy learning. It's all free, and we just come to share. Good morning. Welcome, M. Thomas. So the bell's about to ring, so I need to get over here and look at QQQ and see what's happening for the day. But I'm going to swap out this screen for you because last night we talked about candlesticks. So if you were able to get in on the Zoom, this might be helpful for you, but I also have some other resources too. So I'll just kind of thumb through these things and pop up something else for you guys that you can look over. I thought this was a good one to share. And then I'm going to go look at my stuff on QQQ. But this is about bullish engulfing candles. So today, I think we're going to look at bullish engulfing and bearish engulfing candles. So if you don't know what bullish engulfing candles are, there you go for your reading pleasure. And I am going to check on my account and get set up. I'm setting up my templates that C-Bar and Frank and so many others helped me learn to do. It's an OCO order. And so I have learned to put those on as a result of being a part of this community. So if you need that, that's also in the drive too. There's a handout that explains how to do that. So yes, I'm learning every day. If you don't know, if you wonder what I keep looking at, there are birds on my balcony, y'all. And a snail. I literally live in the jungle. But anyway, I digressed. There's information in our Google Drive that can help you if you're interested in learning how to put on an OCO order. But I need to focus because I need to see what this open is going to be. And I need my, is anybody trading today? Am I the only one? And I don't plan to do much today. I really don't. So I'm watching QQQ, my boo, to see what she's going to do today. And I'll pull it back up as soon as I figure out which way I'm going today because she's on the rise. 9-4. From the charts tab, select the list icon and then add to watch list. If you're trading something, drop it in the chat. Okay, what are we doing?
For more demos on how to think or swim, head to the Education Center on tdameritrade.com.
That was the bell. Let me turn it up so you guys can hear.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading.
So it looks like
Personalized
it's going,
education
it's
to
just a
expand
bunch
your
of
perspective and a dedicated
who
trade
always
desk of
jumps off really
expert-level support
crazy in the
that will
morning,
push
and
you
so
to be
nothing
even
is
better.
any different
It just
today.
might change how you trade forever.
It's
Because
up
once you
down, which is
experience
why I don't
Thinkorswim
trade
by
first
TD
thing in the morning.
Ameritrade,
At least I don't start a trade, first thing in the morning, because it's usually too choppy.
It's more
So,
important than ever to navigate through the frenzy of meme stocks.
I just want to
I
give it
chose
3
the next wave
minutes.
of tech.
And that's where we come in.
And then I'll pull you guys back in. 26381.
Take control of your financial future. Next Gen
26373.
Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
63. Yeah, a lot of volatility.
One of the most commonly used
263.
features on
But it
Thinkorswim.
looks like
Start by going to the charts
so
tab
far
and
the
entering
first
in
two
Thinkorswim.
candles, and I'm on the minute, which
Select time
nobody
frame
trades
to
on the
adjust
minute,
time interval
but I
or
like to
favorite
look.
time. Select style to change the appearance of the chart.
26341.
You can add drawings
Okay, so it does look
selecting
like
drawings,
it's going
drawing tools,
down.
and then type of
So I'm gonna peek over
For
here
simple
and see.
comparisons, select studies.
Okay.
This also gives you access to hundreds of pre-built studies.
Great. I'm
including a
trying to
number of
look at
classic
my
patterns.
charts and stuff.
Grid icon
Okay, it
lets
looks
you
like
view
we're
multiple
just
charts at
going
once.
into a downward
You can
trend,
even
and this could
initiate a
be
trade
really
from the charts tab.
profitable
Just right-click anywhere
for
on the
me.
chart and select either buy or sell.
So
For more
let's see
demos
where
on how
we
to
are.
Thinkorswim, head to the
If it
Education
continues in
Center
this
on
downward
tdameritrade.com.
trend. So I want to look at it on the 5 minute.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange, bringing you real-time market coverage and access to the biggest newsmakers on Wall Street. Don't miss Trading 360 and the watch
It's
list
right
live
at
from the New
two,
York
just
Stock
above
Exchange.
$2.63.
And now here comes the shenanigans.
Entire trading experience
Jumped
that
up.
pushes you to be even better. It just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Stocks opening with a little bit of pressure this morning as we've got NASDAQ futures down the most.
I'm looking
0.7%,
at mine.
a little bit of a tick up at the opening bell, but a big tick down after strong employment data this morning. That's what we've been talking about. Yesterday, we also had strong employment data with the number of jobs open, but we had weak manufacturing figures. And we will get an update on that side of the economy later on this morning, which is happening in the PMI composite.
If you all can look at this for yourself, you can look. You can actually see the battle between buyers and sellers. The price is just wild, just moving wildly, which is that's kind of unusual. 26272. I'm looking forward to get down to 26250. If it gets down to 26250, I'm a happy camper. So let me keep checking. Let me.
Few tough spots here too,
Let me
Kevin.
save
So Renita and I
that.
were just talking about
And go
Constellation
see.
Brands.
Okay.
They can never seem to catch a break. The market, I guess, not a
262.
big fan of their Canopy investment, still weighing them down. I don't know how this hasn't been fully understood and priced in just yet. Is pot business that tough?
It is very difficult, Oliver, and obviously we've seen this.
I don't know what happened, but a big old candle just came in. Something
Due to
happened.
regulatory measures that are in place, especially within the United States. That's why we haven't seen that much growth. And
262.
did
We
see
hit a
an
low.
adjustment,
Is anybody
definitely within the
following
United
this?
States. You probably would see those type of stocks actually grow to the upside.
Okay,
here.
I'm
I
gonna
think
pull
also when you're
this
looking at,
screen in. I'm
Constellation
reasonably.
Brands and their Canopy,
Let me see. I'm gonna pull up
investments,
to the
really trying to
3.
figure out as well what's the end goal or when it comes to that business line. How are you going to integrate it?
Mm.
If you are going to integrate it, and what is going to be the consumer demand for those type of
240.
products as well. So I think that's
Okay,
all
let
going to
me
be
pull
question marks in the
this
book. But the main thing
other
when it comes
screen
to
in
the
for you
marijuana stocks,
guys.
pot stocks, or what have you, is going to be the regulatory environment. We're just not seeing any type of adjustment in that space at this point in time.
Okay. So falling short of the earnings here is ultimately what it comes down to, because it seems like individuals didn't really want to buy cheaper booze or stop buying booze. It's just kind of like they didn't make as much money off what
Okay,
people
hopefully you can see this
Yeah, definitely. You see a
screen.
squeeze when it comes to the margins. And once again, we kind of talked about this yesterday, where you're talking about these expenses, SG&A expenses
And I'm looking
as well.
at it
You want
on
to
the
have those
3,
capped, and if you can cap
2,
those,
6,
obviously the
2,
margin will
9,
then
5.
expand. Right now, we
Okay,
are seeing
guys,
those
just
margins
as quickly as I brought you in, I'm going to take
in
this
some
out
segments
for
of their
just a second
business. In
because
others, you are
I
seeing a little
need
bit
to
of
make a
growth. But right now, we're
decision.
not seeing a rotation from higher end products to lower end products from the consumer as of yet. That may come down the line as we get later into this year. But right now, what really upset the street is also their adjustments to their guidance as well. So we always have to just kind of keep that in mind. We've seen this type of trend for the last 3 to 4 months, where we see adjusted guidance to the downside, or maybe misses the street's expectations, and the street really does not take too kindly to that. But once again, when you're talking about a stock like Constellation Brands, it is really disconnected from the S&P 500 from a beta standpoint. So even though we saw this drop today, it does trade a
I'm
little
just
bit
watching to
independent to the
see if
broader
it's going to
market for the
continue to
most
go
part. And
down
so if
or
we're
do
looking at some
what.
type of economic downturn that could impact stocks that have high growth
I'm
numbers,
looking
tech
at
stocks, things of that
Robinhood.
nature, you might
I
look
usually
at
keep
consumer
Robinhood
discretionary stocks or mid
nearby
staple
too,
stocks
just
as a
because
place
I
for
like
a
Robinhood
potential
to
safe
track
haven,
the
or
price.
an
I don't
area
use
to
Robinhood for
be able to
anything else.
reduce the amount of risk
But I
of a
started on
stock that's
Robinhood,
going
so
down. We have
hey,
seen
big
the
ups to
performance for
Robinhood.
Constellation Brands. It hasn't been that bad. It hasn't been, a rock star out of the park either, but it hasn't been as bad. So yes, at this point in time, you're not seeing that rotation. You'd like to see the continued growth within the beer segment. You'd like to see the margins starting to come down when it comes to operations. That'll open up those profit margins, and obviously investors would really appreciate that, because it's going to impact the bottom line.
Okay. Message to Constellation Brands. We'd really appreciate it.
I'm looking out on, it hit a low of
margin contraction, stock sells off.
262.40, and it's at 262.
It's
I'm trying
not
to
rocket science, I
see,
guess.
I'm looking on
like
a
to break
larger
down what's
time
going on, because it is
frame.
kind of a complicated business as far as consumer, I guess, staples go. Vice trade, I don't know. It seems kind of like it's a staple, the way people are sticking with their preferred booze brands, even as the economy slows down and they cut back and pretty much everything else. Hey, priorities. How about Walgreens? That's down pretty big this morning too, Kevin, after earnings as well.
I don't know.
When you look at the earnings announcement when it comes to Walgreens Boots Alliance,
I'm trying to decide. I have
earnings per share that came in at $1.16. That actually beat
and I'm
the street's
trying to
expectations. Revenue came in
decide
at $33.38
if I want
billion. That actually
to
beat the street's
get
expectations
out
as
or
well.
stay
But
in the
it does
trade.
show
And
a
so I'm looking
drop
at it
in sales.
on the
This
15.
catalyst is
On the
actually a
15, it
slowdown
looks
in
oversold,
COVID-19 vaccines and boosting and
but
things of that nature.
the
When you
trend
have
looks
those
strong,
vaccines, you saw a lot of
and it's
traffic
right
going
in the
into those
in the
stores. When you
middle
have that
of a
traffic, not
downward
really
trend,
trying to make
and
money off the
it's
actual vaccine
trading
itself,
below
but when you
all
go
of
into
my
those stores, you
SMAs
start to pick up
too.
other secondary
And this
items,
price
and that's
keeps
actually what has been
fluctuating. So
driving the
I'm going to
growth
sit for
Walgreens Boots
just a
Alliance. And right
second
now, you're just seeing a
because I need
slowdown
it to
in
be
those
below
vaccination rates and the test
262.50,
kits
and
as
it's at
well. You're starting to see a slowdown in
262.60,
purchases of
and it's
those, and that's
jumpy.
also just
So
slowing that traffic
that's
down.
what
If
I'm
you don't have
looking
that much
at, and I'm
traffic, obviously,
just
then the
keeping an
operating
eye
costs for
on
those
it.
stores start to go up. And right now, however, even before pre-COVID, we know that Walgreens Boots Alliance as well as CVS had some issues with trying to
Still trading
maintain
below
good
all of
revenue
them.
growth
Yeah, I
compared to
think
the
I'm
square
gonna hang
footage
on
that they
for a
have or their
second.
footprint. You want to have obviously high revenue growth or high revenue
262.31
for that
was the
square footage
lowest.
that you own. And right now,
It's
it starts
jumpy.
to see you're
The
starting to see a
price
little
is
bit of a
jumpy
decline in
today.
that particular trend here, and that's just been the headwind for them
We
pre-COVID.
will
Looks like it's
see.
starting to come back
But that's a
post-COVID
good
here.
sign when
But
it
you're
starts
defining
jumping like
different avenues
30
to
and
be able
down
to
by
gain revenue, either
25.
product offerings or something to be able
Those are
to
happy
spark some of
numbers.
that traffic going into
So if you're
their
trading
businesses. But
something,
right now,
drop
we're
it
just
in
not
the
seeing
chat.
that.
Let us know.
Yeah,
So I guess
declines
QQQ maybe is going to
pretty
do some.
nice high single
The
digit
market may be
growth
down
a year
today.
ago.
I'm going to switch
Really
over and look
captures
at
the
Market
slowdown
Watch.
and the COVID-related
Oh,
traffic
yeah.
quite succinctly.
Let me
So
pull you
the
guys back
pharmacy
in for a
stocks,
second.
COVID stocks. I mean, kind of suspected this might
So
be the
that's what the
case.
Market Watch looks
Even
like
CVS
for this
with the
morning.
healthcare business
I
working
think
into
so.
their financials has had a pretty tough year.
Yeah. So this is what Market Watch looks like. It's pretty red. So let me get over here
Can't
and
really
look
say the
at.
same for Walgreens. So
Yeah,
these types of sell-offs
everybody's red
might,
today, and QQQ
harken
is
back to some ill
yeah.
feelings for investors who have
That looks
ridden the
pretty
stock down
grim.
over the years.
That looks pretty
And
grim,
no lack of
folks.
creativity. I mean, what
So
can you
let's
do?
go
It's
back to the chart.
tough. It seemed like the smart
Look at it
thing
on
was
the
how
5
CVS
minutes.
really led on the healthcare
So
integration.
yeah,
But ultimately, that
those are the first two
was sort of a
candles. You can
COVID-related
see we're
trade. It ended up being
oversold.
that way. It's not what they intended, of course, but
this
so now
trend
you
looks
kind of
pretty
wonder if the
strong.
market's
You know,
already
strong enough.
captured
Strong enough.
some of the
Although
creativity they
the
were
volume
able
is
to
diminishing.
execute on
So I'm not going to be here. Like they say, we're not here for a long
CVS, and
time.
Walgreens also
We
followed
just
with
here
some
for a
healthcare
good
initiatives
time.
too. So
261 is
down to
beautiful.
35 bucks right now. The low
26195.
is only $30.
All of this is
So we're
gorgeous.
about $5 away now.
So hold on, you
From a
guys.
low
I'm getting
here,
ready
multi-year low
to
for
go
Walgreens.
check
Okay,
on
let's
the
switch
money.
gears, Kevin, to way on the other side of the spectrum. We mentioned it earlier with Kevin, the crypto stuff, Silvergate, down 38%. So only another 100%.
So I'm gonna keep my eye on this chart because I want to get out before, you know, before it changes
We are
up.
seeing the stock move to the downside here. Obviously, they have a lot of headwinds right now. They are cutting their employees, their staff by about 40%. It would be about 200 employees here. The cost of actually cutting.
I'm gonna look at this across time frames, and the reason I'm looking at the larger time frame is to see how long I could possibly stay in this trade. I use the smaller time frames to enter a trade. So I may use the 3 minute, you know, I may even look at the 1 minute to kind of see how I'm going to get in. But if I want to stay in this trade, I'm going to look at the hour. I want to see, is this trend strong and lasting, you know, where I am in the trend. I'm going to look at the daily. I'll look at all of those because it will help me kind of relax if the chart shows what they call confluence. If it shows the same thing, that this is a strong trend and that it's not waning. So that's what I'm looking for. I'm looking at the all the way back. I look all the way to the weekly. So as long as it keeps dropping 26188 and it keeps looking like this, I will hold tight. But I need to see.
Put into effect some initiatives to be able to spark some growth here, but they are a little bit cautious on some of the other initiatives that they had that was really focused on the crypto space. And not surprising that we are seeing that type of reaction. One thing I do find very interesting, if you look at Ethereum,
and then sometimes it's like, do I really even want to?
Pretty significant pop in
the hourly chart suggests that this is the beginning of this chart and it's not oversold yet on the hourly chart. So I may wait. Yeah, and you see it just went 261. It hit 68. So the hourly chart is saying stay put.
MicroStrategy this morning is down 4.5%.
I'll look at it on a half hour too.
Bitcoin experiment there is not going well.
On the half hour, it is oversold.
Bitcoin is under right now. The break-even price, according to MicroStrategy's own tweets.
I'm always curious how QQQ price action behaves around the 50-cent mark. If it gets under that 50-cent mark, that's a go sign for me.
Wreak some havoc.
But if it bounces like here, between here and 262,
and then potentially I think
that's, you know, that makes me say, well, it might be time to just take your little profits. Sometimes it's okay to take the little, that's what Frank and I came up with yesterday. Base hits, small base hits. String those together. Yeah, I can see it starting to go back up. So let me look what's happening on the.
There needs to be something more than stabilization. Like there's
time frame.
Market's gonna have to turn around fast because it seems like the price of these assets really very directly correlates.
It could be that slight give back.
Companies themselves. Another tech story, real quick, Kevin, before we let you go.
Because it's so oversold, and then it has to come up a little bit to get a little relief, and then it'll continue to chug back down. So we'll see.
Yeah, this is actually a very interesting upgrade.
I am going to
Oracle to buy from hold, and they put a price target of $105, and that's up from $90 here. Now they do acknowledge that they do expect slowly growth within Q1 and Q2 of this year, but as multiples reset, they do believe that Oracle is going to be positioned for re-acceleration of growth towards the end of 2023, going into 2024. And I just have to say, when you look at Oracle's earnings, they have been able to, capitalize on a
We'll
lot of
see
the
what the
business
day
segments,
holds.
especially when you're looking at cloud and some of
So I
the
had two
software
puts. I
business that
cashed
they
them
have
out.
there.
They were,
They've been
that was
able
a nice
to
little,
right-size the business, if
that was
you
a
will.
nice
So
little
they
run
are
this
very
morning.
bullish on the stock in the long term here. They
Because
do
I don't know what
acknowledge
this
that there
thing
is
is going
going
to
to be a
do.
little
It.
bit
I
of
don't have the
turbulence in the near
patience.
term.
And Frank
Not
told me
surprising, however, you see
small
in-flight
base
spending
hits.
start to
And so small
contract
base
here.
hits
We're
are what
hearing
we're
that from
doing.
all of these technology companies, not only just in IT, but
Okay,
communication
let me play
services
you
as well.
guys. Let me
And so
see.
at this
Are we
point,
straight?
once we see that
Back
reset, they
in.
do believe that Oracle
So,
is going to be really in great position to be
hey,
able
Marilyn.
to
Hey,
grow, and not
everybody.
only grow
Miss
from
Weiss, what are you
getting
going to be
obviously new
trading today?
contracts, new orders, but also from a margin standpoint as well. And they are fairly positioned.
So
to
I
do pretty
did, I
well
got
when it
out
comes
right
to their
around here,
operating
you guys,
margin for the
because,
products that they
you know,
provide.
who has time for the nonsense? It
Interesting.
may
Nice,
continue. It looks
positive
like it's
tone
going to, and maybe
and
I'll
an
do
outperformer
something
on the
later,
morning as the
but
Nasdaq
whew,
gets slammed here at the open, down
I really do
1.5%.
believe small
Oracle
base hits are the way to
changed
go.
higher
Like
in the opposite
$100
direction.
wins,
Great stuff. Thank you very
$200
much, sir.
wins, take them.
We're not done yet.
Oh yeah, your usual
He's here with a little bit
SQQ.
more positive news
I
for us.
really
Speaking of tech
want
companies
you to show me
outperforming,
how
Bernita
to.
Western Digital on that
I know
come
it's
up
the same, but I want to
rumored
see you do
potential
your thing,
merger with the Japanese business is helping that stock out this
and
morning.
then maybe
Hey,
I'll
Oliver,
be
you
able
know I like to bring the
to
sunshine
try
every
something
once
new.
in a while. And so,
Okay, so let me
well,
watch this
great.
price
We
over
need it on
here,
this gloomy day right behind
261.
me where it's snowing in Chicago.
Because it
But
could be
Western
that
Digital
hop
shares are
along the bottom
rising
of
nearly
the
5% on reports
thing
that resuming
today.
those talks
So
with
we'll see.
Yoshia Holdings in Japan. Now, back in June, Western Digital
26177.
disclosed that it was reviewing rather strategic alternatives
26167. Okay,
that
maybe it'll
include
keep
options
going
for
down.
splitting off its
Yeah.
flash memory and hard disk drive business. And talks
Oh
between the
shoot,
two
it's making
companies
lows.
have stalled
Hold
over the
on.
valuation discrepancies. And another point of
So let me show
contention
you what I
was
saw
that
on the hourly
uncertainty over
chart, which
securing
said you
approval
could
from
I
the
could stay in the
Japanese
chart.
government.
I mean, stay in the
But
trade,
this
but
deal could unite these two technology storage providers, and the
I just
structure
wanted to
of
get
the
a
deal
win.
remains
You
pretty
know, I needed
fluid
a
right now, but the
win
parties are
today.
reportedly considering
So here's what it looks like
merging
on the
into
hourly
one
chart.
publicly traded company.
It's
The
not quite
talks, they
oversold, but
were
it's,
revived
you know,
late
it's
last
there.
year.
It's
We
close.
didn't hear about them,
And
of
this is the
course.
beginning. It
And
looks like
this
a
is
very
according to
strong trend,
reports,
and it's
by
at
the
the
way.
very beginning. So,
And it was
you know,
from
all
people
this
who are
stuff is
familiar with the matter.
red.
But these
Market watch,
could
it's red,
still
red, red.
also
So
end without an agreement.
we'll see. I've
Since
got
they're still in the early
some
stages,
fresh
but
puts
definitely positive news for
queued
that
up.
stock today.
We'll see.
Okay, 3.5%.
Let's see,
Big
chart.
outperformer.
So we'll see what's
The
in store
year,
for
though,
today.
of
And let's
course,
see. Then I
Western
looked at the
Digital
weekly chart
still
as
in
well,
the
just to kind of
doghouse.
see
So
like
we'll
where
see
we
if
are
this
in
comes
this
to
cycle and
fruition,
where we are trading
what it
relative to
changes.
the
The other move we got for us
SMAs,
is in the
and we are
opposite
trading
direction over
underneath
the
all
past
of
year.
them. So that's
Actually,
always a good
making up
sign.
new highs
And then
today.
at the bottom, when I
Yes,
look at my
Conagra
MACD, you can
Foods.
see that
Now,
waning.
it saw
Looks like it might be
better
getting
than
ready for a
expected earnings
crossover
today. And it's based
down
in
here,
Chicago.
or it might be
It
getting
makes
ready
those
to
core
transition
meal, healthy
into,
choice
you know,
frozen
some
meals
red,
and
some
the Slim
down, some more
Jim
downward
meat sticks, by
movement.
the way. But revenue
So
beat,
all
sales
that's
grew.
pretty
The company is raising
promising.
its 2023 guidance on
261.
all metrics. And this is as the
55.
higher
If it could
prices
stay
continue
under
to lift
50, I
sales. Now,
might,
it saw some particular
we'll
strength
see.
in frozen meals.
Okay, so
That's really
that's on the
interesting because
weekly.
you and I talked about
Let's
this
look at
last
it
month, maybe,
on the
about how those would be
hourly,
the areas
and then I'm
that
going
many
back
people
down.
would
So
go
yeah,
to around this time. The
I don't
analysts
know.
expected, and apparently
I
they're
think
right.
maybe
Now
I'll put
let's take a
something
look
in.
at those numbers.
We'll see.
Adjusted earnings per share came in at 81
Let's
cents,
go to the
above that
15
estimate
minute.
of 66 cents. Revenue was 3.31 billion
I'll make a
over the
decision at
3.27
10.
billion. Organic net sales, by
That
the
looks
way,
pretty good. That
increased
looks
by
really good.
8.6%. Meaning people are still
I
eating
probably
healthily
could have stayed in
in
that
this
trade.
time. But looking
We'll
ahead,
see.
the company raised that
It's
full
so
year outlook.
over.
Organic net net sales growth is going to be between 7 to 8%. The estimate says adjusted operating margin, the company says, will be between 15.3 and 15.6%, and adjusted earning per share between $2.60 and $2.70 versus that consensus of $2.47.
Okay. Slim Jims, the inflation hedge. All right. Thanks
Hola,
very, very much.
Sandra. Hola,
Western
everybody.
Digital up, most of the market down by more than
Don't
a
forget,
percent.
you guys, smash the like button and subscribe. Some folks here aren't subscribed. That breaks my heart, y'all. Please subscribe. Please hit the button. Please like, subscribe, and share. Oh my goodness. Okay, where are we? See, that was why I got 26198. Let me look at it on the 3. Let's go on here.
Let's walk through how to analyze a company's financials on Thinkorswim. To get started, go to the Analyze tab and select Fundamentals. Enter a symbol, then select Enter. To download detailed analyst reports, select Download.
This is what I'm watching because 262, the price 262 is a support. And you can see that these candles are having trouble getting back above 262. So in light of, this is my thinking, and everybody in here knows, I just started trading, right? Wait a minute, where are we? 26180. If that's a resistance, then right underneath there would be a good place to get in or to place a put, because you have that added support, and you see all of my SMAs are there too. So this might be somewhere around 261.97, around those. I'm gonna see if it stays under there. If it continues to stay under there, that might be a good place to enter, in my estimation. And remember, I've been trading for 5 months. Y'all just happen to be invited into my kitchen to watch me trade, and we're learning together. Stephanie Perry gave me the courage to learn out loud. She said, practice out loud. I was like, oh my goodness. I wish somebody had told me that sooner. There's some, well, I did a lot of stuff, but it just emboldens you to do things, you know, even when you're afraid. And so, yeah, you all are in my kitchen watching me, learning to trade, and we share. Everybody in here shares. So if someone knows something, they share that knowledge. So we skill share here, we knowledge share, we encourage one another. It's just a place of support. If I could give y'all cookies and hugs, I would. I'm a former teacher. And so once I learned this skill, I started learning to trade a few months ago. And once I saw it, I was like, whoa, anybody could do this. Oh, wait a minute, hold on, you guys. Anybody could do this. And so I decided to just open up my kitchen and share it. And that's it. That's how we got here. That's what we're doing. And so, okay, it looks like she's going up. I want to see, I'm very curious. If this crosses over these SMAs, then, you know, hey, maybe this little downward run has come to an end. But if it bounces along the bottom and it continues to do that little scallop thing, who knows?
But if you're a bank, an insurance company, or even, I don't know, some sort of
but the Fed is supposed to be making some announcements and stuff today too. So I will be glued to the news. I want to see how that impacts, you know, the price.
And that's what NetApp does. It works well with others. It can do on-prem, it could do in
Hey,
the cloud,
Elle. Hey, everybody. Good morning, everybody. If I didn't get a chance to greet you, good morning, everybody. We're doing what we normally do, at least what I normally do. Y'all are watching me do what I normally do. I'm sharing what I normally do, and that's watch QQQ. And just try to learn more. I'm glad I got out of those 2 puts this morning when I did. That was a nice little run. Let me see, how long did it last? It was 3, 6, 9, 12, 15, 18. Yeah, about 18 minutes. That first green candle was enough for me. And then I saw the red and then this come in. So I cut out. And just as I thought, you know, it's turning up. I could see from my RSI down here that you see this trend is waning a little, because at first these were bright red, you know, these were red, go, 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 go. And then you can see how the color starts to change, and then they start to diminish, and then here comes the yellow. And you can see our RSI started to turn up as well. Let me take that out. Our RSI turned up here because we were so over.
That this is a cleansing process.
Sold, yes, and so it started to turn up. And then you can see here, volume started to decrease. Yeah, all of those were signs that, okay. If you want to bail here, this would be a good place to get out. And then here comes the green. So here's what I'm looking at now. I want to see, are they going to cross above these, or are they going to respect these and bounce off of them and just continue along that way? But remember, all those candles and stuff that we studied, this is why you want to know what those candles mean, because sometimes the candles can give you some clues too. The shape of the candle, the size of the candle, the wick, it tells you a lot. We know that
I play the game buy low,
buyers,
sell high. So I
buyers were in charge this last 3 minutes, but there was some selling pressure from sellers. So that's how we got those wicks. And that doesn't surprise me that this candle is a little, it's not a very strong candle. And look at the volume too. So these candles are telling a story too. We can tell in this 3 minutes that sellers were in charge because the candle finished red. We can also see, look at how much volume there was. That's why that candle's bigger. So it's all those kind of little nuances that you can learn just from watching, just from being here, just from chatting it up. So that's what we're doing. If you are interested in learning how to trade, if you're new to trading, welcome, welcome, welcome. Come sit with us. I am not an expert. These are the musings of an amateur trader, but there are experienced traders in the chat. And if you have a question, they're more than happy to share their knowledge. We are more than happy to have you here in our community. The only thing that I ask is that you please subscribe, please like, and please subscribe. Share the channel too. We want everybody. Oh my goodness, am I looking at this correctly? Are there no likes? Hey y'all. Somebody hit that like button. What the heck? Oh my gosh. Y'all, come on. Wake up, everybody, or am I in the wrong chat? Wait a minute. No, this is us. Okay, let me update mine. Maybe that's what it is. Let me update my tab. Oh, there it is. Okay, thank you. See, I had to update my tab. Oh my goodness, I was about to pass out. Okay, so we're all here together, folks. We're looking at QQQ. We're watching her do her thing. Yep, I did. I had to refresh. I'm like, oh my goodness, because I don't watch it, y'all. I'm usually just trying to keep my eyeballs on QQQ. So yes, welcome everybody. Hey y'all. Anybody else trading? I did, Marilyn. I just refreshed it. Anybody else? Anybody paper trading today? Look at QQQ going up. See, this is where Johnny got me last week because I caught the ride a little bit down and then he was smart enough to jump on the up. So I don't know. I don't know what this is, but that's 3, 6, 9, 12 minutes of up. But I'm not in the game today, y'all. I'm so waiting on just the right setup. I won't be jumping in today. Marilyn is here today. My support is here. Marilyn keeps me out of trouble. So if it's not a big sweeping move, although y'all, this could be a big sweeping move. Look, 3, 6, 9, 12. Let's see what's happening on the one. I don't know. I don't know. That's looking pretty swell right there. I don't know if it cuts through this. This is the 50-day moving average. It cut through that 9 and 13, but that's on the one. Let me go look at it on the 3 for real. If it cuts through those, she could be on her way. Let's see. Look at that. Give back everything. Okay, so there she goes through the 9 and the 13. And that's 3, 6, 9, 12. So this is what you're looking for, honestly. The same way I took this down is the same way you could take that up. But I wouldn't even consider it until like maybe here. This would be the candle to get in on. But see, then it may bounce off. That's why, why? Just wait for the big move. I'll see if it clears it and another candle starts up, then yeah, that's a whole different ball game. So 3, 6, 9, 12 minutes of upward price action because we're at 2, 6, 2, 8, 5, but it would have to clear 2, 6, 3 for me to feel comfortable. See, because it could get caught up in these. It could bounce off of those. These are SMAs, simple moving averages. And that candle could do any number of things when it encounters. It could cut straight through it. That's what if you got calls, you want it to cut straight through. But look at the volume, somebody else, just Yeah, look at the shape of the candle and all of that stuff. We're looking down here, we're looking at the trend. So we're just watching. That's why I say anybody can trade. If you have the patience to observe patterns and behaviors and relationships, if you have patience to do that, you can trade. It's not like you're calculating and you you got to know the formula. That would not suit me. I am not interested in doing that. I'm not interested in mathematical calculations. But if you can pay attention to patterns, if you liked geometry, even because a lot of the stuff is, Johnny was telling us with that RSI strategy, I saw it. I was like, oh my goodness, how have I not been trading with trend lines? Because I'm a novice and I can only work in so many tools at once. And so I think I'm a pretty decent technical analyst because I can read a chart, but I have to be able to put in my support and resistance, and then work in Johnny. Man, those trend lines are powerful. Oh man. Okay, so look, it cut through. It got all the way above the 9 and the 13. I'm not mad. It is not, look where the RSI is. I would be watching to see if it's going to go up, if it's going up or going down, because look at that. See, maybe it cleared it, maybe it didn't. So, yeah, we'll see. We'll see what the day holds. But it's nice to be out and just relaxing, and not be invested in what way she goes. And I'm just an observer now. So that's cool. So let's get over here and see what's happening in the comments, y'all.
All right, when we come back with hour two, stocks are trying to find a little bit of strength off the lows of this morning, shaved off some of those losses.
Yeah, Marilyn, I I thought the information was good. Johnny's presentation was great. That video that I shared with you guys on candlesticks, it's a little dry, I'll admit it, but it's one of the best explanations. It's clear cut. So if everybody could watch that video, then we can pick up next week and I'll have a little more experience with my tech. Look at QQQ, y'all, all green and going up. See? No, she said 263.09. I said if she can get above 263. 263.09. That's a good play. Whoa, look at it jump. I missed that one. And now she's at 260. Look at it, how it jumped. 263.40. It's still, is it too late? She's not oversold. Let me look at it. On the 5. But Johnny said it too. If you missed that entry, I don't know. 5, 10, 15. I can't tell. You can even initiate a trade from the charts tab. 2, 6, 3, 2, 2. Let's see if she stays above 2, 5. I think I have a call prepped. 19.
When traders tell us how to make Thinkorswim even better, we listen.
See, this looks like it's about to come and cross over too. If this crosses over, yeah, look at that. Mm-hmm.
You downloaded the TD Ameritrade mobile app so you can quickly check the market.
Okay, let me go look and see, y'all. I'm gonna go see.
And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set.
Hold tight, y'all. I'm gonna go look at a call 26.
Choose the app that fits your investing style.
How about we just chill?
Many traders may be willing to take on additional risk
Chart.
in pursuit of aggressive growth in their portfolio.
5 minutes. All right, so this is our 5-minute chart. I think I'm gonna just watch this. We'll see what happens because that is kind of curious. I'm going to go back over here to Market Watch. Oh, things are turning green. Okay, let's see what we got going. Okay, so Apple is up. QQQ.
Then we'll take a deep dive into the assets commonly held in income portfolios.
Price is going up.
You'll also learn about routines for
263.
along the way.
Oh,
Watch videos, take quizzes.
5. Yeah, she's gonna struggle around 263. This is curious. I wonder if she's just gonna keep going. I wonder if these 3 candles together signify a continuation pattern. You all see, that's what I'm telling you. The stuff that we're studying is important because are those 3 candles there together? Do these 3 candles represent a continuation pattern? A continuation pattern? That would be interesting if this candle bounces off of these SMAs and continues to bump along the bottom. I don't know. I'm about to go see though, because I got some resources pulled up. I've got something pulled up in another tab that talks about continuation patterns. Let's see. Was that our video that we saw yesterday? Continuation patterns. I don't know. Maybe somebody knows. Well, we'll see. Maybe we can just observe. Maybe we'll just continue along. Nothing like learning by watching. 26254. So, ooh, that's nice. 262.
Our cloud discussion continues. We'll also talk tech.
Hey.
Dexcom is a leader in the market. We'll talk about this with the CEO later this morning. Right now, I want to bring in Ben Lichtenstein, host of
All right, y'all.
All right, not gonna make it too much of it just yet.
Good morning, Johnny. Morning. Welcome.
Because we were starting off okay early in the morning before the data came out, so we kind of got this bad as good.
Oh, you're doing a meetup. Okay, this has to go up. If you'd like to join, we're looking for Dallas. Wait a minute, and what day is it? Did you say the evening of January 21st? Oh, I wish I could come in Dallas. Isn't Sonia in Dallas? Or is she in Houston? I don't know. I think she's in Dallas. That's going to be so wonderful. Please make sure everybody has the information. At least we get the information out here so that, anybody who's in the area who wants to come can attend. That's great. Oh my gosh. I wish I was. I'll be back. I'm going back to the States, but I won't be back around that time. I love that we're doing all these meetups, ladies. Mark is still choppy. Yeah, I'm done. I'm just sitting on the sidelines watching this morning. But Johnny, you changed my life with that with RSI strategy. It's really the trend lines that got me. I'm dropping trend lines. I'll be doing some chart work. I'm dropping trend lines. Wanderlust. Oh, Maryland, right. You're in Texas too. I'm telling you all, Sonia from Sonia Unapologetic, my travel sister, she's in Texas as well. If you guys aren't familiar with her channel, please go look at her channel, Sonia Unapologetic. She's got journals. She's got trading journals. So if you need one, go see Sonia. And she's there. I'm sure she would love to meet you guys at a meetup. And I'm almost sure it's either Dallas or Houston. I don't know. Okay, so wait, y'all. Wait. QQQ is cutting up. Well, I don't know. 2. That's 510. We went from where? 26172 to 26. That's almost $2 right there, y'all. We just sat and watched. Mm-hmm. Let me go back over here.
Back down to 1840 this morning, but if you look at gold on the same time frame, just the last year, daily candles.
I don't understand that, and this is all red like that.
Traded up to 2078, just shy of 20.
And everybody is still red, but not by a lot. Okay. Maybe the day is gonna, have some positivity too. We'll see. Johnny, you trading anything?
In the middle of the range that we established last year, basically waiting for more information here right now. It wasn't the Fed recently, the announcement. It wasn't the minutes yesterday. It wasn't the CPI. Again, we're just kind of consolidating here in this wider range.
The difference, it seems, for gold is that you're probably pretty happy with unchanged, right? Over the past year.
The bulls are.
Exactly. Gold bugs that said this is going to work. I mean, look, I know it's something.
Yeah, she's near Dallas. Mm-hmm.
Bitcoin's getting killed.
Yep.
Gold has done its job. Now the question is, how does it actually take off?
Look at QQQ. So flaky. Yep, Johnny, nothing but a bunch of chop.
Okay, well, I think the answer to that comes into play, and you have to go back to rates for that, Oliver, because I think if rates continue to hold at these levels, if we see inflation strong, but the market kind of fading it, then we could see gold continue. Right.
I think by 11 o'clock, we should be able to tell what's what.
Whether you're talking about crude, gold, you're talking about the inverse correlation. We actually have seen that kind of breaking down this week because the dollar sort of firmed.
So while we're waiting, let me get y'all
rallying here. But lastly, I want to point to the energies right now. If we could just take a look at crude oil on the daily time frame, because a completely different scenario here. We were talking about, again, the S&Ps in the middle of the range that we established last year, crude in the middle of the range. Gold in the middle of that range, and the 10-year yields for the most part, and the dollar as well. So you got four products. But look at what's going on with crude here, which is telling us a completely different story in terms of the demand narrative and some of the concerns associated with crude nowhere near the middle of the range that we established last year. It's testing, and in fact, it's taking out the lower extreme of last year's range. So again, a total different scenario here. And it just really speaks to that dollar relationship to some of these other products. And I'll take it even a step further right now, Oliver. I think the dollar is seeing a little bit of a disconnect from yields, which we saw very closely tracking last year, because we've got some of the other foreign currencies, the tail starting to wag that dog right now. So the dollar, not necessarily a big narrative here.
Johnny says since mid-December, they've been in a chop range.
I agree that the
once we break out of this range, we should get a good trend. I hope so.
Waning.
260
because dollars go down the last 2 months, but so is crude. So that correlation is broken down. The dollar and rates, as we saw,
cannot wait.
That correlation has eased.
Not today.
Where rates are staying bid while the dollar is coming down. So I think that kind of brings us back to the answer for gold, which is gold wants stocks to stay down.
Yeah, I'm sitting on the sidelines.
Down too. And if the dollar goes down, okay,
happens.
nice. But it seems like that's a little bit less important right now. It seems like risk off with yields down, that could be what works for gold.
And I think we saw that throughout this week for the most part. We saw the dollar.
Rates are up today.
That's right.
Gold's down.
And rates were down with the dollar, which was up, and gold was up earlier in the week. Now we've got rates up, gold down, as you just pointed out.
All right, so it's taking a little bit of a hit. Gold down 1% here. Bonds selling off. Stocks trying to find their legs. One trend that's very clear, though, is WTI still weak. All right, thanks, Ben. Nice. So look at all the major asset classes. Let's get back to some stocks. Downgrade on Shopify. Alex Coffey, host of Next Gen Investing, has got the details. What's up, Alex?
What's going on? Good morning, Oliver. Let's take a look at Shopify here. Kind of a unique one in its price action in 2022. If you look at the chart, front-loaded a lot of the weakness, and it looks like it's kind of been going sideways for much of the last year. But if you really zoom in, you're going to see a lot more volatility that maybe initially meets the eye.
Tesla is
the low
taking
from
a beating.
The move that you see in the latter part of the year towards that higher peak of the bounce back before we kind of fizzled out into the close of the year is still like an 80% rally. It's just dwarfed so substantially by that initial price move lower, where this stock started out leading into the year upwards of $140 on a split adjusted basis before bottoming out near 25. So a lot of that price action and what looks to be sort of a sideways consolidation, Oliver, is actually a lot more volatile than it appears. But making news headlines here today is Jefferies analyst Samad Samana downgraded to hold from buy with a price target of 40. I think the main logic of this is fairly straightforward. He sees a slowdown in e-commerce. This is an e-commerce payment infrastructure type of a company. If you're going to tie this to that space, you see a slowdown in the space, it's pretty easy to draw the correlation. But it's the second part that I think
I'm
is
just
quite
adding
interesting,
all of
and that's the point that the massive
QQQ,
capital
the top
expense
stocks and
cycle limits the
QQQ to
upside
my
beyond the price target.
watch
Because
list.
if
I don't know
you're
why
looking at
they
this space and
disappear,
trying
but
to
they
find,
do.
you know what?
So yeah,
if there is a
everything is
slowdown,
still
what
red,
companies are
but
maybe poised to be a little bit more
not by a
resilient?
lot.
Well, maybe you would think it'd be a
Tesla's
name
the
like
biggest
Shopify
loser.
that is really
Nvidia's
just
down
tied to the
almost
volume.
3%.
Doesn't really have the brick and mortar real estate or the inventory levels to deal with. But they just spent a ton of money and are in the
down
process
quite
of spending a ton of money
1%.
on expanding their business very, very
Let's
quickly. So
look
they're
at
still
forward.
having that tremendous
Well,
capital
is Apple
expense
up?
that maybe you wouldn't have seen on the surface if you were just
I
looking at
need
what
to
the
get rid
company
of all of
does.
that.
Another thing that I thought was interesting, though, is if you look at on a further time horizon, the analyst is actually quite optimistic, talks about a blue sky thesis remaining intact, but just talks about waiting maybe till the second half of the year.
Yeah, that's the part that, to me, we hear a lot of right now for
It don't look too good for
once
Apple either, y'all.
favorite tech
Oh my
or
gosh.
consumer companies, the kind of
Is
disruptive
everybody?
category that's down
Okay,
a
let's
ton
go
over the
back to
past
Market
year. We see a
Watch.
lot of analysts cutting their expectations,
Mm.
but then out of the other side of their mouth saying that things are going to be good long term. I get how that can totally make sense, but it seems like the
I'm going
market
to the
is a lot
daily.
more attuned in to the short term downturn in some of the expectations. Shopify lower by 4%, hasn't made a low since October, hasn't really made any meaningful highs though. This thing has been frozen since May.
Yeah, well, that's what I was kind
From
of addressing,
December
Oliver, is it
13th
really
till
looks that
today,
way,
look
but
at
you have a
poor
range from about 25 to nearly 50. That's a
296.
pretty substantial price level.
Yeah.
It just is
Johnny,
so
you're right. Look at
dwarfed
the
because
here's the
this stock
range it's
lost
been
so much
trading
value.
in.
It peaked out in November of 2021 or thereabouts at upwards of $175. So you look at just how much value is lost. I mean, it's
Yep,
lost over 80% of its
260.
value at that point at its lows. You start looking at it, it's like no matter what it does, it's going to seem like it's done.
Can you
it's
see
made
it? You
no
guys like
efforts of
this little
recovery,
range
even
that
though,
QQQ has
low
been
to
trading
high in that
in?
most recent move was like
Let's
an 80%
see.
move.
Okay. Yeah, that's a good point. So quite a wide chop as it does chop. All right, Jeffries with the downgrade, but holding on to hope long term. Shares lower by 4.5%, down below 36. Thanks, Alex. Copy. Let's do some trading. Joel Hawthorne back with us, head trader and CEO at themorningsnapshot.com. Joel, you're starting off 2023 with a bang,
could
putting
really
on some
even go
volume
up
for
to
us
here,
here.
really.
Trading. What's the approach with Shopify?
Good morning. Thanks for having me.
274. If you wanted to pick this bigger range, but this is really, this is if you
I've already kind of
concentrate it,
placed in my notes. I mean,
it's really
Alex was
in
just
there,
mentioning
but
maybe like a $25 to $50
go
dollar
here
range here
too.
in Shopify. I've been looking at like a $41.50 to $30 range there, where it's just really been in that channel. And I think overall, we have a tendency of kind of looking at the 52-week high.
So I
and
just
52-week
put
low
these,
for a lot of stocks. I mean, you know, we always
you
kind
could
of
call
go
these
back to
support
look
and
and see
resistance
kind of where
lines.
we come from.
This could be
But
a
I mean, that
resistance,
52-week high
and
is
that you
roughly
can
right
see
around,
these
I think,
candles haven't been able to
122, almost
penetrate and go
123.
any lower.
This stock
And you,
looks nowhere
I'm sorry,
near
call that support. You could
capable
call
of
that
retracing back to
resistance,
those
this
levels
one,
unless something,
and seeing
some
that
kind of
these
miracle
candles
happens.
haven't been able to break
So
above this
I
price.
think some of
So
those
when
price
Johnny was
levels
saying that
were
QQQ's been
things that
trading
would,
in a
you know,
range,
old
this
market,
is
a
what
market
he's
that we may
talking
not
about.
see
Let
for
me
a
get
while.
rid of
There's a new
this.
regime, there's a new market, there's a new context and sentiment. So I think
So
looking
this
further
is the
out, I
range
think
that
we
it's
have
been
to look and
trading
see
in for the
exactly what's
last
right now. And
1,
I
2,
just don't
3,
think the
4,
skies are
5,
as
6,
blue for
7, 8,
Shopify in the
9
near term
trading
that we would like to
days.
see.
So
Now
we'll see.
range
Maybe she'll
that this
continue
is
like this
traded
little
in, even while it goes
consolidation. Maybe she'll
sideways for like the
continue,
last
or
half
maybe she'll
year.
break out
How
and
does
go
that
down, or maybe she'll break out. I
change
don't
the
think she's
approach?
going
How
up,
does that
but
inform
who
the approach
knows?
when you're looking at options?
Looking
I
at this,
mean,
it's just hard to
it
tell.
is,
The
to
RSI
Alex's
is pointing
point, I
down.
mean, a
You
pretty
know, this
big
is still pretty
range to
red. The
roughly
RSI is
25,
pretty
kind of
low.
upwards to 45
We haven't
or
gotten to
so.
the blue stuff on
Obviously,
the
a far
TTM
cry from
squeeze.
$130 a year ago.
So
But in this
hey,
new
it's
regime,
looking
it's got
like
quite a
maybe
bit
we've
of
got some
back
down
and forth.
times. Let's see, we're at
Absolutely,
2,
absolutely.
6,
That
2, 7,
we're
5.
still talking.
Definitely still in that
the range
range.
that I've been looking at is like that $30 range to the downside. I know we have a 52-week low of about roughly about I think it's 23.63 or so. But even
Move
then,
this
I mean,
back.
going up to about
This
41
on the daily
so where we
chart, that'd
see
be a
some strong
good. This
resistance,
would be a good
that's
place for
still
me
room
to
to
look
play in
at this
options because
and
obviously there's
draw
some
some trend lines
obviously
myself, because
trying
then
to
I
pick
could see
tops
when
in
it
that
breaks
range or
out.
trying to pick the bottom of that range if it's
Because here,
retested.
this is
For
really
me, I
clear.
would
Like
like to
you can
just
see
collect
this
some
right here.
premium,
This could
sell
have
some
been
options there,
trend
and
lines here,
use the top
and
of
then you
that
can
range
see
as a bit of
exactly when it breaks
resistance
out and breaks
by
down.
selling the 39
I'm gonna
call that
learn
expires
this
next Friday,
game. I'm gonna learn
buying the
this
41
game.
that expires next Friday as well, collecting about 32 cents, break even 39, 32, getting as close to I can to the top of that 40-ish level. That's why I'm going to buy that $41 call as a bit of protection. But I think ultimately the bigger narrative here is that, you know, you guys mentioned it earlier about the dollar. I think the dollar's got to confine some resistance near that 107 mark. We're trading slightly above 104.
Oh,
If
Frank,
that dollar
I
does spike to
saw, I'm
107,
showing
if
it.
the
I'm not sure if you were
S&P was
talking to
trading
me,
between
but
that
I'm on
3,800
the, that
3,900
was the
right now,
daily
if we
chart.
find some break below that
Let me go
3,800
back.
due
That
to
was
some
on my
catalyst,
daily
maybe
chart.
tomorrow's non-farm payroll, who
Yeah, I'm
knows?
looking at
We
QQQ
may
on the
see
daily
a
chart.
revisit to some of those
And
lows
I
here,
just
in a name
plotted
like a
those
Shopify.
support
So
and
I think the
resistance
bigger picture is
lines, and you can
just
see
the
where
bigger
it's
market
trading
narrative,
right in
and
this
that's kind of what I'm
range.
playing right now.
So I started
Okay,
with
really
this
like
very
that.
lowest
I
one,
always like the
and it's
macro
right
context
around
that you put this in.
260.
Fits into the other trade you did for us.
Actually, that line I
Continue to kind of
dropped
fade the
it
growth of your
about
stocks out there. Should be a fun one to follow along with as we're kind of smack in the middle of
259.73,
this
and then
the
this
6-month
kind of breaks up this
range.
cluster
Thanks, Joel.
here, which is about
Thanks for
270. So between 260 and 270, it's been trading in this little range for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. So we'll see.
Growth companies back under pressure in the NASDAQ
We'll see.
at lows. Shopify's writing may be on the wall. Let's go to a sector where there's been a bit more.
So I was saying I could have,
positivity.
you
That
could
has been
have drawn
even healthcare tech has outperformed.
here. You could have taken this
tech as a
here
sector.
and drew,
Index
we could
comp
stretch
at
this out,
$112 is
and you could
just
draw
below its
trend
high from the
lines
past
here.
year.
Let me see. I've never
Business
drawn
that's
trend lines
crucial
before, but I can
for those
try
with
it.
diabetes in a
Drawing
tech-enhanced world.
tools.
Looking forward to the conversation
Is
with
this
the
the trend
CEO of one
line?
of our recent overlooked stocks.
And so I would
Up
imagine
next.
you could start at this low and stretch, you know, as long as you're getting 3 points. Let's see, maybe
Whether
I
you're an
did it a little
experienced
too
investor
low.
or just getting
But at any
started,
rate,
TD Ameritrade
something
offers a
like
website
that.
that's right for you. Are you an
Drop
active
it.
trader?
Can I drop
Our
it?
active trading webcast
And
series is designed to
then
help
you can
develop
see
a
like when it
deeper
breaks it. So that's not a
understanding
very
of
good
technical
one, but
analysis, options,
I'll do it again.
futures, and more.
I'm gonna start
Best
here.
of all, you can ask questions
This
by
is
chatting
the art.
directly with an
1,
education
2,
coach.
3.
It's
Maybe that's a
interactive learning at its
little
finest.
better. But
Tune
at
in
any rate, you
live
see what
or
I'm saying.
watch on
So you
demand.
draw the trend line, and
Head
then you
over
can
to
see when it breaks it.
tdameritrade.com/webcast and
Let's see
start
another
learning
one.
today.
This actually makes like a whole little channel. So let me see if I can do this to show you like this, where it was kind of trading in this little channel here. My channel is not the tightest, but I think you see what I'm saying. You could have drawn, let's see, we could have done it here. We could have caught these points. Drop some trend
When
lines.
traders tell us how to make Thinkorswim even better,
And remember, y'all, I'm
we
practicing in real time.
like Jack.
So it's
He
supposed to
wanted a
hit at
streamlined
least,
version he
Johnny
could access
says twice. I heard somebody
no
say
download
3
necessary.
points on the
And
line.
Kim,
But that's,
she wanted to execute a preset trade
and then you can
strategy
see
in
once
seconds.
it breaks it, and there was that little
So
breakout
we
thing.
gave him Thinkorswim
So
Web.
yeah. I'm gonna
Because
learn, and I'm
platforms
gonna
this
be
innovative
practicing with
aren't
trend
just made for
lines.
traders,
Or
they're
we
made
could have
by them.
even taken this. Let me
Thinkorswim
get this out
by
the
TD
way.
Ameritrade.
Trading has changed forever
Let's
as
see.
a new generation of investors make their impact.
Even if we
on
did
markets.
this,
It's more important
like
than
this
ever
little,
to navigate through the frenzy of new
and then you
stocks.
see
I
when it
chose
breaks
the
away
next
from
wave
that
of tech.
trend, it
And
breaks the
that's where we
trend.
come in, discussing strategies
Learning every
and example
day.
trades on
Learning
trading
every
days.
day. Yeah, look at the daily for almost a month. Okay.
Take control of your financial
Hey,
future.
Shauna.
Next Gen
Did I see
Investing,
Shauna in
weekdays at 1
here?
p.m. Eastern, only on the TD Ameritrade
You can draw
Network.
horizontal lines at the consolidation. Yeah, resistance and consolidation support.
Let's talk
Yeah,
some healthcare.
I just say
Go to a
support
sector
and
where there's
resistance.
actually been
Rayner
some
says 3
strength.
points.
One
I
company,
know.
Dexcom,
I've heard some people say
little
3
changed
points
over the
too.
past 52
I
weeks.
feel
That's a
comfortable
winning getting
with 3 touches.
stock
Actually, the
market
more
down,
touches, the
protect
better.
businesses.
So, you know.
Let's talk with the CEO After we just discussed the company and overlooked stocks early this year.
I don't
George
have
Tillis,
any. I'm not in
we're bringing Kevin
anything.
Sayre,
Did I
CEO
miss Shauna?
at
Hey,
Dexcom,
Shauna.
ticker
Hey. Did I miss Shauna today?
DXCM.
I think I
Kevin,
said hi
welcome
to
to the
everybody. Oh,
show.
hey,
Thanks for being here
Shauna.
with us
I
this
didn't
morning.
say hi. Hey, family. Hello, everybody. Welcome, welcome, welcome,
Absolutely. You
everybody.
guys,
We're doing what we
your stock has
always
had a
do,
great 7
watching
months.
QQQ
A big
and
rally
other
back from
things. I do
lows
watch
in the
other
summer
things. Yeah,
around
let me turn this
earnings. You
volume
caught our
down. So that's what we're doing. We're watching her, seeing what she's doing. That was on the daily. So now I'm going to go over to 5 minute just because I need to see what she's doing. And you can see it's nothing but a bunch of up and down, choppity chop, chippity chop, which is not what we want. What we want are days like, where we need a, I'll show you a day. I'll show you what we're looking for. And this is the easiest way in the world for, I think, if you're a new trader, this is what you're looking for. You're looking for one of these days. Something so simple that it's just you write it down. You're looking for a trend like this. Just hop on and write it. And as soon as it's over, you jump off. That today doesn't look like that. Let's see if I can find another one. There's some QQQ will give you a good trendy day. This was a good one too. I mean, you know, we're talking about 5, 10, 15, 20, 20. That's a nice little, it started at about 3 and ended the day. You're looking for that kind of trend movement that I think is easy for me as a new trader. And even something like this, even though it's not that smooth, but I recognize this hop pattern when it hops right on top of all of the SMAs. And you can see as soon as it starts to hop underneath there, it's not going up anymore. It starts to consolidate. So yes, even that's a good day. But you see, I promise you, this is a recurring pattern. If you study, I watch QQQ all the time. I know it when I see it. When she starts doing that thing and she bounces off that SMA and she keeps doing it, yeah, that's something simple. It's a lot easier to trade those days. Even this one looks a little too choppy for me, but it is clearly a downtrend. So those are the days I'm looking for. And you can see that is markedly different from what we have here. This is just, you know, it's like a snake. It's just doing this. It hasn't gotten a long trend with some momentum and some steam and some longevity. So there are people who can trade that. I mean, you can scalp those, get in and out, I would imagine. That's not how I trade. To minimize my risk, I need a nice, long, sustained trend. And so let's see if we can find some because QQQ will present you with some opportunities. Let's see. What's been happening in the last 20 days? Hourly. No, we won't be able to see it that way. You can see it on the 15 though. Oh yeah, we looked at that day. That was a good one. That was a good trading day. Oh, here's your best trading day. This is the kind of day that any trader in the world can make money on a day like this. And we were in the market that day. I think Johnny even caught the up of this, but this was an easy day. You just get on, you place your trade, you let it work itself out, and you cash out at the bottom. It doesn't get any better than that. And if you're really smart, you hop on the up and ride it up and cash out twice in the day. I mean, just look at the TTM squeeze. It's so clear. It's just like, here's your down, here's your up. Get on, get off, get on, get off. That it doesn't get any better than that. So that's how I have been able to, if I'm disciplined and I wait for those kinds of trends, then yeah, you can be profitable. But jumping in and out of chop like today, it's not. I've done it. Trust me. Take it from me. It's like dodging traffic. You don't need this kind of stress in your life. So we just wait for the real plays, the real good setups, the high probability setups. Hey, Sassy Linda, welcome, welcome, welcome.
Sales after the initial sale of the device.
Yeah, Johnny uses TradingView. I love his setup. Hey, everybody. Welcome, welcome. If you're new, welcome. My name is Sandra, and welcome to my channel, From Lack to Legacy. On this channel, we're all things money, investing, and mindset. particularly how to go from a scarcity mindset to a mindset of abundance. If that sounds like something that you're interested in, you have found your people. We are a community of traders, all on the spectrum. Some of us have been trading for no days, and some of us have been trading for a while, and we have some experts in here too. So, welcome, you guys. Please don't forget to hit that like button. Please don't forget to subscribe to the channel. That helps me. I'm trying to grow this channel so that we can reach more people with all these free resources. We have a Zoom teaching class, like a learning community. People present different strategies or just things that are helpful for traders. I have resources on the community tab on my YouTube page from Lack to Legacy. Check out those. There's a playlist for candlesticks. That's what we're studying now. And I don't know if you got here early, but I posted up before I even got on, before the morning bell, just different candlesticks and patterns and stuff. So we try to share information here. We try to, it is a learning community after all. Sassy Linda says, let's see. My bank will not accept a transfer to start my Thinkorswim account. Okay. That's the first I've heard of that. I've never heard that, where you have to mail it in. Email me. I think I did get an email from you. Let's talk. We'll see about that. But I guess it depends where the money's coming from. So they've done some strange things with me too, I guess, in the interest of, financial security. All kind of crazy things are going on in the world. So I've never heard that before, but it doesn't, I'm not alarmed by it. But let's talk offline and we'll see what we can do. Because, you can still paper trade, if I'm not mistaken. We'll talk. I got your email, I think. If you didn't, email me and then we'll take it from there. Hey, Kay Evans. I'm not sure who that is. Hi, everyone. I'm new. What do I need to do to sign up for classes and more information? Kay Evans, please email me at fromlacktolegacy@gmail.com. I'll put my email. fromlacktolegacy@gmail. Just email me and I will send you forward our Zoom links. We have a Zoom study session every other Wednesday. That's what it is for now. If we decide to do it every Wednesday or more frequently, it's up to us. We decide, the group decides. Also, we have a Google Drive of resources too. The only thing that I ask is that you please subscribe. Please subscribe, because I really do want this content to be for subscribers. I don't mind sharing my kitchen and you guys watching me trade, but that stuff that is curated. All of us in the community are putting things and resources in there, and we love to share. We just ask that you become a part of our family, so at least we know who's in the Zoom with us. You all, I don't know who it was yesterday, and I know I'm not the most tech savvy person, but it freaked me out just a little bit. There was like this nameless, faceless box in the corner. It didn't have a name. It didn't have a face. I don't know. Forgive me. I'm from the city, y'all. I need to at least know your name or see your face. I don't need both. You don't have to turn your camera on, but I at least need a name to know who I'm dealing with. So when you guys email me, put your real names in there, because a lot of people have a screen name. Like, I don't know, I might know you by your screen name and not know you by your government name. So if you are emailing me, just make sure that I know your name and your screen name so I know who I'm talking to. I've learned over time, like I know Elle, I know Miss Vice, and I've known that's because we've been together for a while. But as our group is growing, Sassy Linda, you gotta have to make sure that you put your real name in your email and put Sassy Linda too, so I know who's who. And then that way I can send you out the Google link I mean, for the Google Drive and for the Zoom link. But you all help me. Meet me halfway too. It was a little creepy having somebody like sitting off that little black ominous box off in the corner with no face and no name. I don't know. Maybe it's me. Is anybody else creeped out by that? I'm creeped out by that. Yes, I need to feel safe. So you all meet me halfway. Just tell me your name, if nothing else. And in that way, I can at least greet you by your name too. So yeah, I think I put my email address down there, but all of the stuff is from Lack to Legacy. You can check out content on Instagram. I post there, post on Facebook, post of course on YouTube. Y'all check that out. Check out the playlist. There's plenty of good stuff there. So between the playlist, the Google Drive, and the Zoom classes, the Zoom learning sessions that we do, hey, you should be able to pick up something. And if you need more than that, of course, I'm available for one-on-ones. If anybody here needs to help setting up their Thinkorswim so that you can start paper trading, or if you're ready to take some live trades, you guys know where to hit me. There is a Calendly link in the description box below, so you can schedule a one-on-one. So just Kiki won't work. Y'all got something else going on. I don't know what y'all talking about. They do that for your protection. You're welcome, Sassy.
Is a little bit murky to me as they cut the price target down.
Yeah. I'm okay with sharing, you guys, but I do think that it is respectful to at least give me a name, y'all. So I know who's in the room, who's in the house. You would never come into somebody's house and not tell them your name, even your nickname. But I appreciate you guys. And everybody here is so kind and so cooperative. So I don't expect that would be an issue. That when you guys are emailing me so that I know who is who, include your screen name along with your real name so that I know who I know who Bumpy Johnson is, because I've known Bumpy since I was 15 years old. But if that was somebody else, I have no way of knowing. So, and that'll help me to be more efficient with my emails. I think that's how come some people aren't getting their emails, because I have not linked your real name, like your email address, with your screen name. So help me out, folks. Help me out. Help a sister out. That's all I ask. We looking good on our likes. We got 20 likes. If you just came in, don't forget to smash that button. Don't forget. And we're at 665 subscribers. Can you guys believe that? Oh my gosh. I took Stephanie's class. Oh Lord. Back in August, I think, sometime in August. And everybody knows I was afraid to even do a YouTube channel. I was the very last person in my class to even post. I was like, nope, I can't do it. Can't push it. I can't do it. And Stephanie was like, girl, push through the fear. She said, just do it. And so now guess what? 3 months, 6 months, 4, whatever time it is, August, September, October, November, December, January. 5 months later, here we are, having the time of our lives. I'm just really grateful that you guys come. I'm so appreciative. Oh, I forgot. I'm so glad QQQ was just sitting there doing nothing. We could chit chat. You all, I was telling folks the other day, I don't know the gentleman's first name. Somebody drops it in the chat. His last name is Shetty, Shetty. But he came up with this gratitude practice where he had a jar. And so I got a jar. And on the inside of the jar, every morning, you write down something on a piece of paper that you're grateful for, or something awesome that happened to you. And so mine today, I'm going to share with y'all. I am grateful for my health and the use of my limbs. And so after you write down what you're grateful for, or what awesome thing happened to you, you put it in the jar. And at the end of the year, you have 365 things of great things that happen to you throughout the year. Now, come on, that's good. Yes, Jay Shetty, gratitude. Yes, Sassy Linda, that's him, Jay Shetty. I should know his first name. Everybody knows him, but yes. And so it's a gratitude practice. I that the man, I was sold when I saw. I was like, that's the easiest thing in the world to do because it's so easy to get up in the morning. And I don't know about you, but sometimes I'm not always ready to roll out the bed sunshiny and bright. Sometimes, I'm moving a little slow, or I might be mulling over something that happened that might be, I might be ruminating on something. No, this is such a beautiful way to start the day. So this is my jar. I encourage you, get y'all, you don't have to literally have a jar, y'all, but just have a gratitude practice, period. A gratitude practice, I'm telling you, is the key to abundance. I've been saying that all along, but when I'm talking to y'all, I'm really preaching to myself. So it is what it is. I won't get too preachy, but y'all check out Jay Shetty and this gratitude jar. It makes my day. I feel so much better in the morning because I could get up, and start right away with social media or start right away with my to-do list. And no, take a breath. Be grateful. Yes, he's a motivational coach. Okay, yeah, I know. I saw him. I can't remember. Okay, his name is Jay Shetty. Yes. Uh-huh. And Lucille, yes, he's a spiritual coach. Oh, I saw him on Red Table Talk. That's where I saw him for the first time. I'd heard his name, but I hadn't really seen him. And I didn't watch the whole interview, but he just had such an uplifting spirit. So, yeah. That's what I'm doing. In addition to my abundance quotes, you all know I start each one of my videos with an abundance quote and an abundance affirmation. And I really do use them, y'all. I mean, it's hard to post them. It's hard to research them and post them everywhere and don't read them yourself. So I read those. And I'm telling you, it reminds me. Because I worry too. I don't know. Don't let the smooth taste fool you all. Shoot. I worry about money. I don't say I worry about money. No, I really don't. But I mean, I'm concerned. I have concerns. But I just choose to believe, y'all know me. The eternal optimist. I'm an eternal optimist. I just believe it's all going to be okay. Grateful for the man that sells me corn at a discount, cheaper to make good grain shine. You know what? I bet you just eating corn on the cob, bumpy. But that's something to be grateful for. The man that sells you corn that is not cheap. I mean, he sells you corn that's inexpensive. Yep. Lucille, those are some of my favorites. Lisa Nichols was one of my first. She was in on The Secret. And I think she had something to do with one of the Chicken Soup for the Soul books. And Joe Dispenza, he's in my very first video. His whole thing about changing your mindset and how you can impact your health, everything, every aspect of your life through your thinking. I just believe, come on. That's as simple as the nose on your face, as my grandmother would say. Yes, of course. If you say negative things, I don't know if I've done it. If you just say negative things or you're around negative people, more likely than not, that's what affects me. If I'm around someone, because I don't usually say negative things, like just as a rule. But if you're around somebody who does that, you feel that energy. Energy is transferable. Yes, I'm definitely a glass half full person. What's the point? If you can choose what you can think, why choose the other? Why? That doesn't make sense to me. I don't know. I choose to always think higher, even when I'm feeling bad. And I have days, you all, where I'm blue and all the rest of it. Like I have a full range of emotions. But I just, even at the end of it, once I'm done with all of that, I just, hey, pick yourself up and smile. Go sit in the sun. Have some lemonade, something positive, because I promise you can choose. And you might as well choose positive. You might as well choose higher. You might as well choose people who emit that too. Oh, y'all gonna really get me started because if that negative dark cloud energy, I will moonwalk so smooth. I'm not gonna make a lot of noise. I'm not gonna make a lot of apologies either, but I will get out of your dark way. Because when I tell you energy is transferable, you better know it is. I believe, yes. the 40-day prosperity plan. Frank, I'm not familiar with the 40-day prosperity plan. You need to educate us. I'm here for it though. And we can complete it in 40 days. I got 40 days. Y'all are hilarious. Y'all have fun down in the chat. I'm telling you all. And we bump in, we bump out, we stay for 15, 20 minutes. So if you're new, feel free, take your shoes off. Get a snack, stay with us a while. And the whole time I still have my eye glued to QQQ. Trust and believe if a move jumps off, I'm going to be here trying to find it, trying to spot it. But it doesn't look like anything today. Look at this, a bunch of sideways trading, bunch of range trading. So, you know, what you going to do? While we're waiting, let's see what else I got over here on these tabs. What else can we be talking about? We talked about our candlesticks, the bullish and the bearish engulfing. Oh, I do have a couple videos. I know somebody asked. Oh, here, you guys can see this one. Let's see. I'm going to share this other. And let's see. I'm going to share another handout. See if I can find it. Some of you have probably seen this one. Nope. I think y'all saw that.
Earnings highs that we saw right here.
This one. Share that.
Gain in the stock price here, especially considering the setup that we're having right now. First of all, we have major resistance here in the form of all three of our moving averages that we follow converging between about 326 to 330. So there will be three different sets of eyes all watching the same price level for potential resistance here. Could be a very tough road to travel to get back up to the bullish territory. We've also got this area, our highs. 345 is where we had the highs after the gap. That would be another resistance point to keep an eye on. But the thing that really concerns me about this chart is these blue dashed lines here look quite a bit like a bear flag to me, in which we have a steep drop off, a brief rise back up, and then it's the precursor to another steep drop off as people perhaps take profits or close out their positions, especially considering how much potential resistance we have just above where we are now.
Well, seeing their price target up here at 385, obviously this analyst doesn't want that bear flag to come to fruition. And so the expectation that they could trade back at the highs definitely reflects quite a bit of optimism that the brand will be resilient. The chart, maybe in the short term, offers perhaps counterpoint here, like that analysis. Thank you, Mr. Ducat. Thanks, Renita Young. All right. Two cuts and one upgrade. Seems like it's been basically 2-to-1 now for quite some time.
Oh, it's still red.
More bearishness on the street than positivity. Speaking of that, we'll take a look at Tesla down 5% when we come back. An update from Jenny.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course,
you guys, I want to take this income investing course
to generate regular income and preserve capital.
TD Ameritrade.
First, we'll delve into risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios: dividend stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio over time. Along the way, you'll watch videos, take quizzes, and perform paper trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more.
Binge watch the market with TD Ameritrade.
Anybody want to take that income investing class?
So now I did some deep research into this.
People are out of the house and
engaging with the U.S. economy. Tune in 24 hours a day, 7 days a week on TDAmeritradeNetwork.com.
Motivation. I like to read The Daily Laws by Robert Greene. And of course, I read 48 Laws of Power. Someone changes your thinking. Yes. You guys, TD Ameritrade has an income investing class. I'm going to go look for it. Yeah, I want to take it. I'm going to go look it up right now. They say it's under their education tab. So let's see.
By meeting every turn with a heightened awareness of what's possible.
I hope you guys can see this as I go to it. It's called
Determine
income.
the best position. Catch the perfect wave. CME Group, where risk meets opportunity.
Tesla shares down another 5%. It just doesn't stop. Jenny Horn, what's the latest?
Adding to its now over 55% decline just in the last 3 months alone, Oliver. So what a bloodbath of selling we've seen in Tesla pretty consistently after falling over 12% in Tuesday's session. We got a bounce yesterday, but consistently lower. We got a Mizuho analyst today lowering its price target on Tesla to 250 from 285. So still implying a good deal of upside from current levels, clearly trading at just under 108 right now. But this analyst also did maintain a buy rating, so still fairly optimistic on Tesla. Earlier this week, the company did report its December quarterly deliveries of about 405,000 vehicles. This did come below consensus, which called for 418,000. But the Mizuho analyst did note this was mostly expected due to the week-long Shanghai shutdown.
Here we
he does believe a weak macro environment with a stressed
Getting started with technical
rising
analysis. You guys, y'all do know all these classes are here, right? I know I've shown everybody, but if you're new, you can see I just went to the education tab, and let's say I'm gonna turn this volume down just a little bit. I hope you guys, let me see what you can see. Perfect. Okay. I love this thing. Hey, my day by Lori. And is it Artavia? Please help me if I'm pronouncing it incorrectly. Anybody who's interested in getting information about the Zoom study sessions, just email me at From Lack to Legacy. My email's in the chat. Somebody can drop my email in the chat, but it's from lack to legacy at gmail.com. If you email me, I will email you the link to our Zoom study sessions. And if you are a subscriber, please subscribe. If you're a subscriber, I will give you the link and give you access to the Google Drive. The only thing I ask is that if you have a different screen name, just give me your screen name and your real name, so at least I know who is coming to the Zoom meeting. So all you need to do is email me at fromlacktolegacy@gmail.com, and I will forward you the link to both of those resources, our Zoom link and our Drive, our Google Drive, where we store lots of useful information. But if you have Think or Swim, and wait a minute, I need to make sure I'm watching the price too, keeping up with this. So while I'm talking to you guys, I'm going to be still watching QQQ on Robinhood. But if you go to the education tab, you guys don't have to take it from me. You can come right here and take technical analysis. It's a class. Stock technical analysis. It says learn how to identify trends, support and resistance, price patterns, as well as how to spot potential buy and sell signals. You can take the course. It's 4 hours. And they even give you points. They keep up with your stuff. So these are classes and stuff that I I signed up for, or these are things that are recommended for me. So how placing stop orders for stocks, how to buy a put option on Thinkorswim Mobile. I don't suggest you do anything on the mobile just yet, but all of these are here. I'm telling you all, this is the most trading options. You can see I started this. Stocks technical analysis. I started this class as well. I love technical analysis. To be perfectly honest with you, I think that's what I'm I'm a technician. I love it. But you can see all of these introduction to Thinkorswim platform, how to create stock. I mean, it's all right here. When I tell you, it doesn't get any better than this. And so you've got videos, but that's not all you have. And you can see over here, you got options, bonds, the difference between mutual funds and ETFs. I know we've talked about it, but you can go right here and find out futures, Forex, everything. So here's personal finance. I'm looking for that class on income investing. So let me put this here, income, because there's a whole class and I would like to take it. And there you have it. Here's the whole course, income investing. So I'm going to go ahead and sign up for this class. So did you guys see how we found that? Anybody who's interested in this? Okay, so income investing, blah, 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 do. I accept. And here's the class. Whoa, come on. What's easier than that, folks? What is easier than this? Welcome, everybody. Welcome, welcome, welcome. But I want you guys to take advantage of the resources that are available on Thinkorswim. I'm telling you, the platform is excellent. Shauna, you don't have to take it from me. You don't have, I mean, I want you to come. Hey, Sonia, welcome, 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 my travel sister. Sonia from Sonia Unapologetic is here, you guys. I got to get over to your lives too, love. So yes, you don't have to take it from me, peeps. It's right here, right under the education tab, all free. In a matter of seconds, I just signed up for this income investing class. So you see the first one, it says introducing income investing. They tell you everything you're going to go over. Assets and income, the blah, 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 blah. And then dividends. See, I'm interested in this. Dividend stocks, dividend stock analysis, bonds, REITs, course wrap up. You don't have to pay. I'm just telling y'all, it's here for free. It's all here for free. And they have a community where you can actually talk to somebody. So that's just an overview. They've got webcasts. I told you they have in-person events. This window might not pop open, but a separate window opened up over here on the side with a calendar of in-person events. So we cannot say we don't know. There's no reason for us not to know. So let me get off my soapbox, but I'll show you where it is one more time. Here are our charts. QQQ is doing nothing. So that's why y'all getting this chatty Cathy thing, because QQQ is just trading sideways. But if you want to access that, you go to the education tab and there it is right there for you. I'm going to go back to the overview, but you could start with something as simple as candlesticks. You want to learn about candlesticks? Let's put it in and see what they come up with. It's going to be somewhere in, charts. Look at that. Simple. Trade with the MACD. You all hear me talking about MACD all the time. You want to know what MACD is? Here's a 5-minute video. Go watch what MACD is for yourself. Price pattern continuation. Remember, I was just asking you guys, are these 3 candles, do these represent a continuation pattern? I could come watch right here. How to read a stock chart is free. Please, y'all, don't make me keep hollering and screaming. Go take advantage of these free resources, please. I'm just giddy over the moon. I was a public school teacher for almost 30 years, y'all. We pass on information. We share information. So I want y'all to have this. I want y'all to partake. Everything that you could possibly want is under that education tab. So do that, please. And I'm going to go over here and check on, let's see what's happening. Don't forget, like, subscribe. Don't forget, hit the subscribe button. We've got 25 people watching and 21 likes. Don't forget, hit the like button. Don't forget, email me. I'll check my email too. Don't forget, send me an email from lactolegacy@gmail.com. I will send you Once I verify that you are a subscriber and I have your name, I do need your name with your screen name so that I know who is sitting in here while we're doing these things. Just give me your name and an email and whatever your screen name is, and then I will shoot you the Zoom link for our bi-monthly study sessions. And right now they're every other Wednesday. If we decide we need to get together more often, hey, we can do that. We can do that too. Mm-hmm. Listen, not only I love a MACD, but I'm loving my TTM squeeze too. Come on, y'all. C-Bar turned us on to the TTM squeeze. I love it because it's another visual that helps me know where I am. Okay, so now look, QQQ is doing a little something, something. So let me go down here to the 3-minute and see if this is anything forming that I might need to get. See, look. We got 3, 6, 9, 12, 15 minutes of some. Let's see what she does. Did we get a crossover? I think we got a crossover right there. You know, that's important too. I want to show you all. I just came across this. There's something called the golden cross and the death cross. And it's when the 200 and the 50 SMA cross each other in a particular way. One's called the death. So right here, you see this cross? That's my 200 and my 50-day moving average. Either this is a death cross or what was the other one? Anyway, they're two different crosses. One's called the death cross, and I forgot the other one. But that's significant. So I'm going to post that stuff up. I just came across it the other day. And so, yeah, QQQ isn't doing anything. She's just doing her little snaky thing. 3, 6, 9, 12. Yeah. Nothing. Just caught my eye. C-Bar still on holiday. Bless her soul. Yeah. We haven't seen C-Bar for a few days. Mm-hmm. Bumpy, I like MACD too. MACD is straightforward. I like the MACD and the TTM. And in case you guys don't know what we're talking about when I say MACD, I'm talking about this indicator right here. And you'll see it says MACD, and it's in this blue. And you'll see this one says TTM squeeze. And these help you determine a trend. If in fact you are in a trend, it helps you determine the intensity of the trend and where you are, whether it's waning, whether it's building or it's waning. And you can get all that information from your MACD and your TTM squeeze. And so you can see here where these red candles and the price is going down. You can see this is volume, all that's red. And then you can see here, these started to build as this is going down and continues to go down. These candles got bigger, 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 and the red was nice and bright. As this trend began to wane and change and go in the opposite direction, you can see how these candles, not candles, these are just bars on this oscillator. These bars became a different color and they start to diminish in size. And then you can see how these correlate the green as this builds. You can see that. And you can see as it starts to wane, these get darker and smaller. So this is a great visual. And again, a reason I love trading. You don't need to do any calculating to see the correlation between your MACD and price action. You see what the price is doing. You see what the MACD is indicating. You can also see how these two lines here begin to move apart, and these crossovers are significant. So it's that kind of, for me, this kind of brain engagement. Oh my goodness. You mean I don't no, it's not, it doesn't have to be stressful, or certainly interpreting a chart doesn't require, you don't need a degree. It doesn't require any special skills. You just need to be able to pay attention and understand what each one of them, what each piece is telling you. This is another indicator that helps you determine trend. And you can see as the trend was beginning and building, and it built. Yep. And then you can see as it begins to wane, tides are changing. So this TTM squeeze at the bottom correlates with this price action up here, same way. You can see exactly when the trend starts to change, and that would be a signal to you, hey, it might be time to exit this trade if you've got a put. So, I mean, and they're color coded. What more could you ask for? And then this is our RSI, another visual indicator. You can clearly see that it's oversold. It's not going to stay down there long. It can't stay in that state. It's going to eventually bounce back and come up. And that's exactly what it did. Some people use this as a buy signal that, you might want to consider this might be a place to buy a call, because of course the price is going to go up once you see it cross back over your RSI. So this is why when I saw this skill, I'm like, wait a minute. That's all? Anybody can do this. Anybody can find a pattern and have a shot at it. So it's more to it than that. But to be honest with you guys, that'll get you there. That'll get you there. Welcome everybody. Sonia, it's so good to see you. You got to drop your schedule and let us know when you have your next live, when your next live is scheduled. So we can pop on over there and share time and space with you, sis. Sonia, they're doing a meetup in Texas too. Oh, okay. QQQ is doing nothing but range trading. And we just watching her range trade. You all get Sonia, get my good sis Sonia the information so she can get to the reunion, to the meetup. Okay, it's 11 o'clock. Y'all do know at 11:30 I take a break. I can see a lot of people have broke. It's like we were up, I think about 26 people. Now we're down to 20. It must be everybody's lunch break. But since QQQ is doing nothing and we have a little time, I'll pop up another screen. Since you all are here, we might as well talk about something. You might as well get a little something in your this is for anybody who's new, because most of the ladies who've been here so far, they already know this, but I'll put this up on the screen. I'll share this one with you guys and we can discuss or go over. Hold on. Because this is a simple, but if you're new, this is helpful. So once it comes up, let me make sure. Get over here. Okay. We're doing a co-journaling session on my channel. Drop the time, Sonia. Drop the time so we can come by and see your co-working session. So in the meantime, whoops. On the screen, what you guys see is, you see actually two wicks, two candles. You see a white candle, which would really represent what you see today as a green candle. You see that black candle, which really would be colored as a red candle on my chart. The white represents green. That black represents a red candle. And this diagram just shows you how candles open, and green candles open at the bottom. Oh, can you see? Wait a minute. Let me get over here so I can, I need to be where I can point to it. Which one is it? Is it? Can you all see? Oh, you can. Okay, so you can see my cursor. I hope you can. Okay, well, you can see the diagram. But on the white candle, this white part, the big rectangular part, is called the body of your candle. The things that protrude at the top and the bottom are called wicks. You can see where the candle price opens. You can see where it closes. This wick at the very top tells you the highest price that this equity ever reached at this time, in this time frame. And then down below, at the very bottom, that is the lowest price the equity reached during a particular time frame. So if you notice on my chart, I'm always changing time frames. I might be in the 3-minute time frame or the hourly time frame or the daily. So each candle represents 1 unit of time. If I'm on the 3-minute time frame, this candle represents 3 minutes of price action. If I'm on the daily chart, this one candle represents an entire day's price action. And so that's why you want to know how to read them, because they convey a lot of information. Not only do they tell you what the equity opened at, it tells you what it closed at, it tells you what the high was for that period of time, it tells you the low, and by the color, it also tells you who was in charge. Because this would be a green candle, it tells us that sellers were in charge. And then the same information is conveyed with a red candle, except for, if you notice, the open and the close are the opposite. Red candles, which are candles that show bearish movement, which means downward movement, they open at the top, which makes sense, where price is higher, and they close with price being lower. That's what red candles represent, a decline in price. So these candles are absolutely the same, except for the way they open and close. This rectangle part is still called the body. These are still called wicks or shadows, these long pleats. This still tells you the high, and that tells you the low. So just take a gander at that. And let me see if I can get it all the way in here so you guys can see all of it. Okay, my email is.
We had a decline in December of 2020, and this would be the weakest since then. And so if we get something close to the consensus, I think we sort of check that box off and move on. And we're so mindful of the fact that while we're concerned about the strength of the global economy and the U.S. participation in that, right now with the latest trade data that we got this morning, it looks like we may be right for upward revisions to Q4 GDP. So,
all right.
Lackluster GDP penciled in for both this year and next. We're still waiting for that scenario to sort of materialize with respect to the status quo. So, I think that...
Please don't forget, send me an email. Hey, Johnny, glad you're back. If you need the Zoom link, if you need... What else can I give you? Well, definitely check out the YouTube page, the community tab, because on the community tab, there are always useful things. Don't forget, check out the playlist. There are playlists down there specifically that have information about candlestick patterns and whatnot. So let me bring you guys back. Let me bring QQQ back on the screen. We can continue to share. Hold on one second.
Basically steamroll it. But the other part is that, it wouldn't be such a bad outcome if we could have some normalization of inflation or pricing trends.
Hold on one second.
Out of bed. And obviously, as one who attends those news conferences myself since they began in 2011, it's not really the Federal Reserve wants a severe weakening of the dollar.
Yep, QQQ is doing much of nothing. Much of nothing. So yes, don't forget, email me and I'll make sure that you get everything you need. You'll be on our email list. Not that I'm emailing anything, so you don't have to worry about me. We're not that. We don't bug anybody, so you won't be getting anything in your email or anything like that, but I will email you access to our Google Drive. The only thing I ask is that you please subscribe. Please like and share the channel, and we're more than happy to have you here in our community, our learning community. We're just watching QQQ do nothing today, just stalling. I'm going to peek around here and see if anybody else has got some movement, something else moving or shaking. Because here in my watch list, I don't know if it pops up, but you can pick like movers and shakers, top 10 gainers in the NASDAQ. Let's see, top 10 gainers, and see what they're doing for the day. Who is this? Up See, I don't fool around with stuff like this, but these are probably like biotech companies. Yeah. See, I don't fool with penny stocks. Like $2 and it went up from, yeah, I don't fool with that. Yeah, that's how come they move. So they can move $1 or 30 cents and you see a big old, because it went from the high of three. Is that even $1 or are these pennies? $3.50 down to, see, I don't fool with these, but they're moving. I guess people trade them. I don't know. I don't know how you trade these. I never traded them, but they're here. Who is this? Okay. Here's somebody with a real price. Okay. $112. And it went, let's see, 3, 6, 9, 12, 15, 18. Okay, I guess you could have jumped on it. Here's Z Lab, $49. And it's doing its thing. Yeah, look, see, that's the pattern. Do you see what I'm saying? You see this hoppy pattern. That's exactly, you know what that means. When she does 2 or 3 of those in a row, we going up. She's jumping all the way up this. So it's not unique to QQQ, but that's what you want to see. That right there. So when I say trend trader, I know what I'm looking for. I kind of do the simple. I have developed a simple woman's kind of way of trading. Look at it. You can look and see, is this thing doing what you need it to do? What you know, is it above these trend lines? Is it hopping? Sure, she's gonna take a little break and catch her breath, and then she's gonna drop. She's gonna jump again. That's what we're looking for. We're looking for simple. That's what I'm looking for. Simple patterns. What I'm not looking for is this crazy chop right here. This says stay out. It's crazy town. Don't go in. What's the point? What's the point of that? Oh, shucks. Johnny says, hopefully we break out of this range today. If not tomorrow. Yeah, I know, but CPI comes out next Tuesday. Yeah. The Fed is supposed to be doing something today too. There's supposed to be some Fed meetings and something at 2:00. So I'm waiting to see if we get any movement. Bumpy says, what exactly are penny stocks? And I did options that are in sequence with penny stocks. See, I don't know. I've heard a penny stock is anything under $10, but I don't know. But I don't usually fool with biotech. I'll be honest with you. There's a particular sector, but those really low price biotech, only because, a lot of those are startup companies. I'm blue chip. Just give me companies I know are gonna be here. They're gonna be here forever. I don't have to worry about that FTX foolishness no. So that's why, probably out of fundamental analysis, just understanding, is this a company that has been established? What is the leadership like? And if you can't find all of that and you got to go, researching, and it's some very new young company, I just don't have it. No. So that's what I call a penny stock. I don't know if that's really a penny stock though. So somebody could probably drop a definition. What is the real definition of a penny stock? But I envision it as a startup, maybe a teeny small cap company that it hasn't been in business very long. And really, you are like a venture capitalist. Your money is like their venture capital because they don't have a proven track record. So that's why I don't fool with them. I don't know though. I could be wrong. You all do know at 11:30 I'm going on lunch, right? 11:30 I will be taking a break because QQQ isn't doing anything. Let me get over here and see. So I'm going to go back to my personal watch list, puts for cash, and let's look at QQQ. Doing nothing but the same crazy she's been doing. And that's it. And so we sit. And so we wait. And you can see too here, it's just the volume has kind of it's lost volume, it's low volume, it's the middle of the day. Everybody knows brokers are on lunch, or so they say. And you could just see everything is just kind of a little flat. So it's no sense in. I don't know. I don't know. I would imagine, I don't know if they're optionable, I guess. Can you optionable penny stocks? Can you purchase options on penny stocks? That's a good question. I'm not certain of the answer. I'll try to find out though, Bumpy.
Yeah, so the whole solar complex has been down and largely
Ooh, I'm sorry, but I'm okay. I know I shouldn't be, because we really do need this market to turn around so we can start, getting our long holds in order. But I'm okay. While it's let it hit the ground, Maryland. And the only reason I'm okay with interest rates going up and them trying to break this market is because the cheaper this stuff is, the more we can buy. They had their run. All those people who got in and they had a 20-year great run, God bless you. I see an opening for us. New investors. I want it to crack all the way up and break it all the way down to the ground. Break it all the way down, break the market, break the market. Get these companies to redo, their evaluations, how those companies were overvalued. Get that stuff in order. Break down these prices. We need to see Tesla under $100. I want to see all of them. I want to see Tesla, Amazon, Microsoft. I want everybody under $100 so we could just go buy us. Everybody can buy 10 shares. You get your $1,000 of this, $1,000, whatever. Tear it all down, burn it all down to the ground, Maryland, so we can get in, and we can get in at a reasonable price. So I don't have any problem with the feds continuing, I do feel for for people who are experiencing inflation. And so, yeah, break inflation, help the people get prices in order and get this market in order. Get these these company valuations to look like something reasonable. And then let's get in. Let my people have a bite at the apple. Let us start talking about, because I don't want you all to think that this is all about options, you all, because options are just what I'm doing while the market is bad. I just saw a way. It's like, oh my goodness, the market is going down. Here's a way. But the truth is, this is just a small piece. As soon as we start, but you all know too, I'm an ETF girl. I'm not going to be picking individual stocks really. I'm probably just going to roll with me a good old fashioned couple ETFs, some index funds, get some dividends, some dividend income set up, and I'm coasting on in. But I'm going to always trade, because not only do I want to trade options, I want to learn how to trade Forex. I want to learn how to trade futures. I just want to see them all. Options is a good way. It was a good way for me to learn how to read charts and become a technical analyst and how to do fundamental analysis. And I do have a video queued up about fundamental analysis. If anybody wants to watch this video, I have it queued up in one of the tabs. And the difference between technical analysis and fundamental analysis. Technical analysis is what you see us doing all day, looking at charts. We have to understand SMAs, you have to understand indicators, and you have to understand what those little candles are saying. Forgive me. That's technical analysis. All of that chart reading and trend lines and support and resistance, that's the technical piece. But fundamental analysis is what we're going to need when it comes time to pick companies for long holds. You don't just pick a company because you like their logo. No, we're going to go into and look at each company, check out who the CEO is, that whole board of directors. You want to know who's sitting on the board. You want to know who their top investors are. There's a whole way to do fundamental analysis. And I have a video that talks about fundamental analysis. So what I'm going to do is pop that video in. Since QQQ is doing nothing, I'm going to, I'll watch her over here on this. Oh, wait a minute, we're back down to 262, but we had gotten down to 261. 72. If we get down to 261.50, I may look at it. That's another 50 cents. Let me before I go do anything, well, let me pop it in this movie first, because that'll be helpful. Then I can go look over here at QQQ. So the next thing you guys are going to see is this is fundamental analysis. And what is fundamental analysis? And so I'm going to take this off, and then I'm going to share this movie with you guys. Present. Okay. And it talks about what is fundamental analysis. So let's see. Let me make sure you guys can see what I'm seeing. Okay, and let me keep my eye on this price. 262. 261.99. Okay, she's creeping down. So I'm going to keep watching that. But let me start the movie for you guys. Okay, so you can see it. Silence that. I want to slideshow this.
Fundamental analysis is the process of examining a company's financial statements to help decide if its stock is a good investment. Financial statements include balance sheets, income statements, and cash flow statements. This information helps determine the financial makeup of the company behind the stock. In this video, we'll explain how fundamental analysis uses these statements to help evaluate a company. Let's start with a balance sheet. This document compares the company's current assets to its liabilities and owner's equity. Let's define these terms. First, we have assets, which are items the company owns. Assets are usually comprised of cash, equipment, and property. Next,
I am Marilyn. I'm going to take a break. So I'm going to put this fundamental analysis video up, and I'll play it on a loop. So if anybody wants to take notes, if anybody comes in, so I'll just leave this movie up. Yep, I'm going to take my break. Be right back. It's 11:30. I'll be back at 12. Okay, and then I'll continue to play this for you guys. And it's about fundamental analysis, how to pick a good company. I'm going to start it from the beginning, but it's how do we pick companies to invest in? Okay.
fundamental analysis is the process of examining a company's financial statements to help decide if its stock is a good investment. Financial statements include balance sheets, income statements, and cash flow statements. This information helps determine the financial makeup of the company behind the stock. In this video, we'll explain how fundamental analysis uses these statements to help evaluate a company. Let's start with a balance sheet. This document compares the company's current assets to its liabilities and owner's equity. Let's define these terms. First, we have assets, which are items the company owns. Assets are usually comprised of cash, equipment, and property. Next are liabilities. Liabilities are usually debts or accounts that need to be paid. Often, a liability on the balance sheet has an offsetting asset that helps the numbers stay level. For example, if a company were to take a loan out to buy a property, the loan would be a liability and the property would be an asset. The third term of a balance sheet is capital, or owner's equity, which is the amount of assets raised by issuing stock. For example, when a company issues stock either in its initial public offering or in a secondary offering, it raises money or capital that can be used to fund various business expenses. Balance is achieved when the value of the assets are equal to liabilities and owner's equity. The balance sheet helps you see how a company raises money for its assets and can help you determine if the company is overextended. However, if you want to know how the company earns money, you'd look at its income statement. An income statement shows a company's revenues and expenses. These are the costs associated with running the business, including operations, interest paid on loans, and taxes. When you take revenues and subtract expenses, you get net income. Net income is the earnings of a company. Earnings are usually handled in two ways. The first way is to share the earnings with shareholders by paying a dividend. The second way is to reinvest these earnings into the company. Reinvesting earnings can help a company's cash position. A company with a good cash position is usually better prepared to endure economic ups and downs. This is why some investors say cash is king. It's also why the cash flow statement is an important item to consider. This statement shows how the company uses its cash to operate the business and make investments. It also shows how much is borrowed from a bank or bondholder. These figures are totaled to show changes in the company's overall cash position. This statement is important because it gives a more detailed account of how the business generates revenue and is therefore much more difficult to manipulate than an income statement. As you can see, there is a lot of information in the three financial statements. With all of these facts and figures, analysis can be a little tricky. This is why some investors may use ratios. There are several ratios that can help an investor compare stocks, but we'll focus on one of the most common, the price to earnings, or PE ratio. Let's say you have one stock that's trading at $6 a share, another at $35 a share, and a third at $132 a share. How would you know which one is the best value? Some might assume the $6 stock is the best value because it's the cheapest. However, this might not be the case, because a company's value may depend largely on the company's earnings. The PE ratio allows you to look beyond the price of a stock to see which company could be the best value. To create this ratio, first divide the net income, or earnings, by the number of outstanding shares. This number is called earnings per share, or EPS. Next, divide the price of the stock by the EPS to get the PE ratio. The first company is trading at $6 and has an EPS of 20 cents, resulting in a PE of 30. The second company is trading at $35 a share and has an EPS of $1.40 for a PE of 25. The final company is trading at $132 per share and has an EPS of $3.90 for a PE of 34. Now you can better compare each company by its PE ratio. Despite the drastic difference in stock prices, all three companies have a similar valuation. However, the second company has the lowest PE ratio and may be the best value. Remember, a PE ratio is only one of several ratios that can be used. There are other ratios for determining valuation, profitability, and financial strength. There are also other figures to examine in financial statements. We've only scratched the surface of fundamental analysis in this video. It's important that you learn more before using this analysis to make a trade, and we're here to help you every step along the way.
Trend is the general direction a stock's price is moving. There are three kinds of trends. Up, which is a series of higher highs and higher lows. Down, which is a series of lower highs and lower lows. And sideways, which has roughly equal highs and lows. Some investors determine a stock's trend by identifying the direction of its highs and lows. Trend may be important because many investors believe that a stock will generally continue in the same direction it's been going. These investors would anticipate a stock with a strong uptrend to continue to rise, while one with a strong downtrend will continue to fall. Some investors draw lines to attempt to identify the trend. Investors can also draw lines to connect highs and lows. These lines are known as support and resistance levels, the next technique we'll discuss. Support and resistance are price levels that the stock has had trouble breaking through. If a stock breaks through support or resistance, it could be a signal to enter or exit. For example, suppose a stock breaks through resistance, which is a level it repeatedly pulled back from in the past. Because it broke through resistance, an investor may believe that there's a good chance that the stock will continue to rise. So, broken resistance may be a good time to enter. On the other hand, if the stock fell past a support area, it may continue to fall. This could be considered a good time to exit. After connecting support and resistance levels, a stock's price movement may resemble a certain shape. These shapes are called price patterns and are another technical analysis technique. Price patterns can build on support and resistance, allowing investors to attempt to predict more specific movements and try to point out even more precise entry and exit signals. There are many different price patterns. Some examples include simple shapes like triangles or flags, and more complex patterns like head and shoulders or triple tops. Let's look at an example. This is called an ascending triangle, and it forms when a stock's highs are hitting resistance, while its lows are steadily rising. Some investors might interpret the narrowing between the highs and lows as a signal that the stock's about to break through resistance. If it does, the stock's price is expected to rise in value right after the breakout. But not all investors exclusively use support and resistance and price patterns. Drawing lines and finding shapes can be subjective. Because of this, some investors may use technical indicators. Technical indicators are graphical representations of chart data. Each indicator displays chart data, like price and volume, in a unique way, giving investors another perspective of the stock's performance. Because technical indicators are created using formulas and data, they may give investors a more objective way to examine a stock's performance. A common technical indicator is a moving average line. This indicator averages the stock's price over a period of time and plots it as a line, which can help determine the overall trend. Moving averages can be calculated for any period of time, but one of the most common is 50 days. So what does a moving average tell you about an investment? Imagine a stock's price crosses above its 50-day moving average. This may indicate that the stock is outperforming its recent history. This could be an entry signal. Similarly, if the stock begins to fall and dips below its moving average, it could be an exit signal. Moving average lines are only one of many technical indicators investors may use. Other common indicators include price envelopes, Bollinger Bands, stochastic oscillators, and the relative strength index. At this point, we've covered some basics of technical analysis. One thing to keep in mind is that technical analysis can help you identify potential entry and exit signals, but it offers no guarantee of success. After all, there's no way to predict the future. We've only covered the tip of the technical analysis iceberg. Learning how to use the techniques and tools we've discussed, as well as the many others out there, can advance your technical analysis skills. Options trading is an alternative way for investors to invest in the performance of a security, such as a stock or an ETF. By trading options, an investor attempts to capture the up or down movement of a security while only investing a fraction of the cost it would take to own the actual security. For example, consider a stock that's currently trading at $100. If you purchased a share and the price went up $5, you would have a 5% return. With the right option contract, you could profit from this same jump in the stock price while only paying a small premium that costs significantly less than the price of owning the stock. The ability to make more with less is one of the benefits of options trading. However, the potential for greater profits comes with greater risk of losses. To help you understand why, let's take a closer look at how an option contract works. Unlike a stock, when you buy an option contract, you're not purchasing the security itself. Instead, you're purchasing a contract that gives you the right to buy or sell a security at a certain price before a certain date. Consider this example. Suppose there's a coffee shop chain called Stone Curb Coffee. Stone Curb stock is currently trading at $50 a share. An investor believes that the stock price of Stone Curb will rise. This investor considers taking advantage of this anticipated price movement by buying 100 shares of the stock, but she is concerned about the initial capital requirement. Now, let's assume that there's another investor. He already owns 100 shares of Stone Curb stock and plans to hold on to it for a while. He thinks that the stock price will not increase much over the next few months. Both investors can utilize a call option. This type of option contract gives the buyer the right to buy shares of Stone Curb stock at a set price, called a strike price, at a set time, called expiration. In this case, it's $55 per share in 4 weeks' time. Typically, each standard option contract represents 100 shares, so this one contract would give the buyer the right to buy 100 shares of Stone Curb stock at $55 per share. The buyer purchases the contract by paying the option's premium. The premium, or price of the option, is determined by several factors, including the stock price, time until expiration, and implied volatility, which is how much the stock is expected to move during the life of the contract. This premium gets credited to the seller of the call option and helps to partially offset the original purchase price of the stock. For this example, let's assume the total premium is $100. Our buyer pays the $100 and purchases the contract. Now, let's examine what could happen to this investment. Suppose our buyer's instincts were right, and Stone Curb stock is now selling at $60 a share. Remember, the call option gives the buyer the right to purchase shares of this stock for $55 a share. The buyer could exercise the call and purchase 100 shares for $55 each, and then sell them at market value for $60 each, making a profit of $5 per share, not including commissions. Because shares of Stone Curb have risen by $5, the buyer's contract is essentially worth $500. If our buyer sold her contract, she could potentially make around $400 in profit, the value of her contract minus the $100 premium she originally paid for it, as well as any commissions and fees. While the buyer's investment paid off, things didn't work out as well for the seller. Although he was able to collect $100 for selling the option, he missed out on a portion of the stock's appreciation because he was obligated to sell his stock at $55 per share. Now, let's rewind. Suppose the stock moved in the opposite direction and is now selling for $45 a share on the last trading day prior to expiration. The buyer's contract gives her the right to purchase shares of Stone Curb for $55 a share. Because no one would want to pay $55 for a stock that's selling at $45 in the open market, the buyer's contract will likely expire worthless. The buyer is now on track to lose 100% of her initial $100 investment, plus any trading commissions and fees. For the seller, the option expiring worthless is good news. He still owns his shares of stock and made $100 selling the option. Although the value of his shares declined, he was able to keep the option premium, less any commissions and fees for selling the option. Keep in mind that this is a simplified example. The pricing of options is very complex, which is why it's important to educate yourself about options and their risks before you invest. While the biggest change comes from the price of the underlying instrument that the contract represents, there are other forces like time decay and implied volatility that influence options prices. While we showed you one example, options can be used in a variety of ways. There are call options, which we just saw, that can be profitable to own if the price of a stock goes up. And then there are put options, which can be profitable to own if the price of a stock goes down. Calls and puts can also be combined in a variety of ways. By buying and selling these options, investors have the potential to make money when the market moves in any direction and create strategies with a variety of risk levels. You've taken the first step in understanding options, but there's more to learn. Open an account with TD Ameritrade to unlock more award-winning investing education.
During the internal history of the candlestick, sellers were winning the battle near the low, but buyers had to overcome the sellers to make the candlestick close in its opening value. The last type of doji is the four-price doji. The name comes from the fact that all the four prices in a candlestick, meaning the open, the high, the low, and the close values, are all equal to one another. Thinking in terms of the interpretation of this pattern, there is no battle between buyers and sellers, as we can infer by the absence of upper and lower tails. Notice that there are two things that we pay attention to in dojis: the symmetry between upper and lower tails and their size. Next, we are going to look at simple reversal patterns, both bullish and bearish. The first pattern we are going to study is the hammer, which is a simple bullish reversal pattern. In other words, when price is going down and a hammer appears, that's a signal the price will reverse its direction to the upside. The shape of a hammer has a few characteristics that make it a bullish reversal pattern. The first thing to notice is that the hammer received its name because the candlestick resembles the shape of a hammer. This pattern is also composed of a small bullish candle body that lives on the upper range of the candlestick. Hammers can have a small upper tail, but one of its main characteristics is that it has a large lower tail. The logic behind a hammer is quite simple. We need to roll back the internal history of the candlestick to understand why it means a bullish reversal. Notice that the hammer opens on its upper range, creates a large lower tail, and then it closes on the extreme of the upper range with a small bullish body. That basically means that sellers had the control in the beginning of the formation of the hammer. That's why price was down there at some point. However, once buyers realized that the sellers were gaining control, they appeared to assume control again, so they make price close on the upper extreme of the candle range. The large lower tail signifies the fact that sellers had the control, but buyers were able to overcome that. If buyers are able to do that, it means there is more buying pressure than selling pressure on the candlestick. The way a hammer generally appears in a price chart is when the price is going down, then a hammer appears, and immediately after, price begins going up. One thing to remember here is that not all hammers work. In other words, sometimes a hammer will appear and price will continue its main direction without reversing as the pattern suggests. There is an important lesson here that hammers, like any other candlestick pattern, are just one sign about what the market might do in the future. They are not definitive signals. Another point of confusion that is relevant not only to hammers, but to all candlestick patterns is the fact that the shape of the candlestick can vary a lot and still be classified in the same way. For instance, a hammer might have a slightly larger candle body or a small upper tail and still be classified as a hammer. The point is that these candle patterns don't have a rigid shape. They have an overall shape that is malleable and can be subjected to some changes. The next pattern we are going to see is the inverted hammer, which is a simple bullish reversal pattern. The inverted hammer is very similar to the hammer, but it has one major difference. The candle body lives in the lower range of the candlestick, so naturally there is a large upper tail instead of a large lower tail. The inverted hammer is still a bullish reversal pattern because the candle body is bullish, but it's a weaker pattern relative to the hammer. To understand that, we need to roll back the internal history of the candlestick. The fact that the inverted hammer has a small bullish body and a large upper tail implies that at some point during the formation of the candlestick, buyers were really strong. However, sellers were able to overcome that and bring the closing of the candlestick to its lower range. Even though sellers prevented buyers from closing the candle on its upper range, buyers still managed to win the battle in the lower range by creating a bullish body. Given that context, we can see that even though buyers won the battle in the end, they are not as strong as they are in a normal hammer pattern. The way an inverted hammer appears in a price chart is when price is going down, then an inverted hammer appears, and then price will tend to go in the opposite direction right afterwards. The next pattern is the shooting star, which is a simple bearish reversal pattern. The shooting star has a very similar shape to the inverted hammer pattern, but there are two fundamental differences. The first is that a shooting star is a bearish reversal pattern, while the inverted hammer is a bullish reversal. That means that a shooting star appears when the price is going up to signal a reversal to the downside. The second difference is that a shooting star has a bearish body, while the inverted hammer has a bullish body. The shooting star pattern is formed by a candlestick with a small bearish body that sits in the lower range of the candlestick and a long upper tail. It received this name because it resembles the silhouette of a shooting star, so that's one way of memorizing the pattern. The logical interpretation of why this is a bearish reversal pattern is that, since it appears when price is going up, the long upper tail implies that buyers were once dominating the candlestick, The sellers were strong enough to bring price down and make the candlestick close with a small bearish body in the lower range. All of that implies more selling pressure than buying pressure. When that happens while price is rising, we have a signal that the trend might reverse to the downside. The way a shooting star works is that price will be going up, and then after the shooting star appears, it will start to go down. Let's remember once again that this is just a signal. There's absolutely nothing that stops price from continuing going up after a shooting star pattern, just like with any other pattern. The next pattern we are going to study is the hanging man, which is a simple bearish reversal pattern. The hanging man has a very similar shape to the hammer, but the main two differences is that the hanging man appears when price is going up and it has a bearish body. The hanging man is also the shooting star pattern upside down, just like the inverted hammer is the hammer pattern upside down. The hanging man has a small bearish body that sits on the upper range of the candlestick and a long lower tail. The hanging man still implies more selling pressure because sellers are able to make the candlestick close with a small bearish body. However, notice that even though sellers win the final battle, they don't do that by a large margin, since the hanging man has a long lower tail that implies buying pressure too. The best way of looking at this is that the hanging man represents that sellers have slightly more power than buyers, unlike in a shooting star, for example, where the selling pressure is much larger than the buying pressure. The way a hanging man will appear on the chart is that price will be going up, and then a hanging man will appear to signal a reversal to the downside. The hanging man closes the list of simple reversal patterns. So let's review a few things about how the four of them correlate with each other. There are many details that connect these four patterns in different ways. The first thing we can notice right from the start is that their shapes are very similar. What varies regarding their shapes is the position of the candle body in relation to the candle range, which consequently affects the size of the upper and lower tails. The other detail that is less self-evident in here is that the context in which these patterns occur dramatically change their interpretations, even though they have similar shapes. For instance, the hammer is very similar to the hanging man. The only difference is that one has a bullish body and the other has a bearish body. However, the fact that the hammer appears in a down move means it will signal a possible reversal to the upside, while the hanging man appearing in an upper move means a possible reversal to the downside. Notice that the quality of the candle body dramatically changes the logical interpretation of the candlestick pattern. One good way of thinking about these patterns is that the candle body tells you who won the battle in that candlestick, and the tail tells you the places where that battle took place. And based on that, we can infer buying power or selling power. Let's move on now to the complex reversal patterns where we have two or more candlesticks forming a pattern that will indicate a reversal in the current direction of price. We'll start with the complex patterns that have two candles, and then we'll move on to the more complex patterns later. The first complex reversal pattern we are going to study is the bullish engulfing pattern. The bullish engulfing pattern is formed by two candles where the first candle is a small bearish candle, and the second is a medium to large bullish candle that completely engulfs the range of the first candle. The main characteristic of this pattern is precisely the fact that the second candle completely covers or engulfs the range of the previous candle. The logical interpretation of this pattern is that buyers are powerful enough to create a candle that covers the entire range of a previous bearish candle. Notice that sometimes the second candle will open with a small gap down, denoting selling power. But even with that, buyers will have enough strength to reverse that condition and create a bullish candle large enough to engulf the action of the previous candle. That is an explicit display of buying pressure, so it's a strong indication about the force of buyers and the weakness of sellers. Bullish engulfing pattern appears when price is going down. Then a bullish candle large enough to engulf the previous bearish candle appears, therefore signaling a reversal to the upside. Notice that this pattern necessarily needs two candles because the whole pattern is based on the fact that the second candle engulfs the first one. The next complex reversal pattern is the bearish engulfing, which is precisely the opposite of the bullish engulfing. The logical interpretation of the two patterns is exactly the same, but the bearish engulfing denotes a reversal to the downside. The first candle will be relatively small and bullish, and the second candle will be a medium-sized or large bearish candle to the degree that it completely engulfs the first candle. In other words, in a bearish engulfing pattern, the sellers will explicitly display dominance over buyers. The bearish engulfing pattern will appear when price is going up, and then a large bearish candle will form to completely engulf a previous small bullish candle, therefore signaling a reversal to the downside. It should be clear to you that the second candle is a very clear indication of dominance. It's useful to associate opposing patterns together. In the case of the bullish engulfing and the bearish engulfing, that's not a problem because the names of the patterns clearly indicate what they mean. However, that's not always the case, as we'll see in the next two patterns. The next complex reversal pattern we are going to study is called the piercing line, which is a bullish reversal pattern formed by two candles. This is a subtler pattern than the engulfing patterns we just studied because it involves the perception of a gap between the close of the first candle and the open of the second candle. In a piercing line, the first candle is a bearish candle, and the second candle is a bullish candle that opens with a gap down. You have to be careful here because a gap down denotes selling power. However, the buying power in the second candle overcomes the selling power that creates the gap down. Beyond that, and this is why the pattern receives its name, the second candle is able to pierce the line created by the closing of the first candle, hence the name piercing line. This is a bullish reversal pattern because buyers are able to fill the gap between the two candles, and they are also capable of piercing the line created by the closing value of the first candle. The reason we care about this line created by the closing value of the first candle is because it represents the price where sellers won the battle in the first candle, so it's an important level. When buyers are able to close the gap and pierce or violate that line, we have an indication that buying power is greater than selling power. The piercing line appears when the price is going down in order to signal a reversal to the upside. The next pattern is the precise opposite of the piercing line, and it's called the dark cloud. In other words, a complex bearish reversal pattern composed by two candles. The second candle opens with a gap up, implying some buying power. The second candle closes with a significant bearish quality that not only closes the gap created by buyers, but also pierces the line created by the closing value of the first candle. Even though the name dark cloud has nothing to do with piercing line, the two patterns are mirror images of each other. The name dark cloud comes from the analogy that the second bearish candle covers the first candle in part, just like a dark cloud sometimes covers the sun. It's an analogy that makes it easier to remember the pattern. The dark cloud will appear when price is going up to signal a reversal to the downside. The next two complex reversal patterns we are going to study are similar to the piercing line and the dark cloud, but they are slightly weaker signals in a way. The first pattern is called bullish meeting line, which is similar to the piercing line since it's a bullish reversal pattern, but it's a weaker signal. The bullish meeting line also displays a gap down between the first and second candles, but unlike the piercing line, in the bullish meeting line there is no violation of the line that represents the closing value of the first candle. The logical interpretation here is that buyers are strong enough to fill the gap created by sellers, but they are not strong enough to violate or pierce the closing line of the first candle. In other words, the closing line of the second candle meets the closing line of the first candle, hence the name of this pattern. The bullish meeting line appears when price is going down in order to signal a reversal to the upside. We also have the bearish meeting line, which is the mirror image of the bullish meeting line. The bearish meeting line is the slightly weaker version of the dark cloud because, even though sellers are able to fill the gap created by buyers, they are not strong enough to pierce or violate the closing line of the first candle. Nonetheless, the bearish meeting line still represents a bearish reversal pattern. The bearish meeting line appears when price is going up in order to signal a reversal to the downside. Next, we are going to study 4 different patterns that have one thing in common, which is something called the harami position. The first pattern we are going to study is called the bullish harami. The word harami in Japanese is associated with the word pregnant. This pattern received this name because the second candle in the pattern is fully contained in the range of the first candle. This is an analogy to a baby contained inside a pregnant woman. The analogy also works in the sense that the harami means the birth of a new trend. In a bullish harami, the first candle is bearish and the second candle is bullish, and fully contained within the range of the first candle. In this case, the small bullish candle represents the new uptrend that is about to be born. There can be a small gap up between the two candles, which helps confirm this bullish signal. The logical interpretation of this pattern is that a small bullish body fully contained within a wider bearish candle means that sellers stopped advancing price to the downside, and a small bullish pressure began to appear. The bullish harami appears when price is going down in order to signal a reversal to the upside. Next, we have the bearish harami, which is the mirror image of the bullish harami. The bearish harami indicates that buyers have stopped advancing price to the upside, and the small bearish candle fully contained within the range of the first bullish candle, opening with a small gap down, implies the birth of a new downward trend. The bearish harami appears when price is going up in order to signal a reversal to the downside. Next in line, we have a second type of harami pattern called bullish harami cross. This is exactly like a bullish harami, but the second candle in the pattern is a doji cross. In terms of logical interpretation, the bullish harami cross is a slightly weaker signal than the bullish harami because the second candle doesn't display a bullish body. With that said, in the bullish harami cross, sellers still stop to advance price to the downside, and the doji cross opens with a small gap up to indicate bullish pressure. The bullish harami cross appears when price is going down in order to signal a reversal to the upside. The next pattern is the bearish harami cross, which is the mirror image of the bullish harami cross. In the bearish harami cross, the second candle opens with a small gap down and is fully contained in the range of the previous candle, which has a bullish quality. That indicates that buyers have stopped advancing price to the upside and there is a new potential downward move being born. The bearish harami cross appears when price is going up in order to signal a reversal to the downside. Next, we are going to study two reversal patterns that involve prominent gaps between the first and the second candlesticks. The first of these two patterns is called bullish kicking, which is a very straightforward pattern. The bullish kicking consists in a bearish candle followed by a bullish candle. The main characteristic of this pattern is that there is a prominent gap up between the two candles. The logical interpretation here is that a large gap up implies a high amount of buying pressure. The pattern receives this name because it is as if someone kicked the second candle up, hence the expression bullish kicking. The bullish kicking pattern appears when price is going down in order to signal a reversal to the upside. The other kicking pattern is the bearish kicking, which is the mirror image of the bullish kicking. In the bearish version, the first candle is bullish and the second candle is bearish. The two candles are separated by a prominent gap down that implies high selling pressure. In other words, the fact that the price opened with a large gap down implies that sellers have a lot more power than buyers. The bearish kicking pattern appears when the price is going up in order to signal a reversal to the downside. Now we'll move on to the last two complex reversal patterns that are formed by two candles. The first pattern is called bullish two soldiers, which is a bullish reversal pattern. The main characteristic of the bullish two soldiers is that the candles are isolated by one gap before and one gap after the pattern. The two soldiers in reference to the two candles that form the pattern are two bullish candles that have a small body. The logical interpretation of this pattern is that the two isolated bullish candles imply the beginning of an uptrend. In fact, whenever you hear the word soldier in the context of candlesticks, you can associate it with a bullish quality. The bullish two soldiers appear when price is going down in order to signal a reversal to the upside. Pay attention to the fact that both candles that form the pattern are isolated by one gap down before the first candle and one gap up after the second candle. The next pattern is called bearish two crows, which is the mirror image of the bullish two soldiers. The bearish two crows pattern is formed by two isolated and small bearish candles. They imply the beginning of a downward movement given the position of being isolated by one gap before and one gap after the pattern. The bearish two crows pattern appears when price is going up in order to signal a reversal to the downside. Pay close attention to the fact that there is one gap up before the first candle and one gap down after the second candle. Even though the pattern is theoretically formed by two candles, it's only with the candle after the two crows that we can make sure the two crows are in fact isolated by gaps on either side. Crows are usually associated with death, so the appearance of the bearish two crows represent the death of the uptrend, which implies the birth of the downtrend. Let's move on now to the complex reversal patterns that are formed by three candles. The first set of complex reversal patterns formed by three candles that we are going to study has four patterns associated with what's called the star position. Let's begin by looking at a pattern called morning star. The morning star is a bullish reversal pattern formed by three candles, where the first is a bearish candle, the second is a small bullish candle with very small or non-existent tails that opens up with a small gap down, and the third is a larger bullish candle that opens with a gap up. The star position is the position of the second candle. In other words, one small candle isolated by one gap on each side. Very much like other patterns we already studied, the small bullish candle isolated implies the beginning of a new uptrend, because even though the second candle opens up with a gap down, which implies selling pressure, the second candle is able to close with a bullish quality. The confirmation of this pattern comes in the third candle, which opens with a gap up and forms a larger bullish body. In other words, we have a double confirmation of buying pressure in the third candle. The morning star appears when price is going down in order to signal a reversal to the upside. The expression morning star refers to a star that rises, denoting the arrival of an uptrend after the pattern. The next pattern is called the evening star, which is the mirror image of the morning star pattern. In other words, it's a bearish reversal pattern. The first candlestick is bullish, the second candle in the pattern opens up with a gap up and it forms a small bearish candle, and the third candle is a larger bearish candle that opens with a gap down. Since the second candle opens with a gap up and it ends up forming a bearish candle, that implies buying pressure is losing to the selling pressure. The third candle gives a double confirmation of that by opening with a gap down and forming a bearish quality. The evening star appears when price is going up in order to signal a reversal to the downside. The expression evening star refers to a star that falls from the sky. It's a simplistic analogy that might help memorize the shape and meaning of the pattern. The next two patterns are very similar to the morning star and the evening star. The difference lies in the shape of the second candle in the pattern, meaning the candle that is in the star position. The first pattern is called morning doji star. The difference between the morning star and the morning doji star is that the second candle is a doji instead of a small bullish candle. In other words, the morning doji star is a slightly weaker signal than the morning star because a doji is a neutral pattern. However, the fact that the third candle in the pattern opens with a gap up and ends up being a larger bullish candle still makes the morning doji star a bullish reversal pattern. The morning doji star appears when price is going down in order to signal a reversal to the upside. Once you know what a morning star pattern looks like, it becomes intuitive to remember what the morning doji star looks like simply by recalling that the second candle in the pattern is a doji in star position. The next pattern is the evening doji star, which is the mirror image of the morning doji star. Once again, we can see how these patterns are related. In the evening doji star, The second candle in the pattern is a doji in star position instead of a small bearish candle like in the evening star. That's the only difference. The doji candle is still isolated by one gap up and one gap down. Since a doji is a neutral pattern, the evening doji star is a slightly weaker signal than the evening star. The evening doji star appears when price is going up in order to signal a reversal to the downside. The next two complex reversal patterns containing three candles are related to the soldier and crow qualities I referred to previously. The first one is called three white soldiers, which is a bullish reversal pattern. The three white soldiers pattern begins with a gap down before the first candle, and then three small bullish candles appear in a row in ascending motion. The three bullish candles, or three white soldiers as they are called, fill the gap created before the first bullish candle, giving an indication that buying pressure is building up, so the market might go to the upside. The fact that the market displays three small bullish candles before the reversal implies that this pattern gives you some time to understand what's going on while the market is building buying pressure. The three white soldiers pattern appears when price is going to the downside in order to signal a reversal to the upside. Here we can see how the pattern begins with a gap down and then fills the gap with the three ascending candlesticks. Next we have the three black rows pattern, which is the mirror image of the three white soldiers, and therefore a bearish reversal pattern. The three black rows pattern begins with a gap up, and then three small bearish candles appear in order to build selling pressure to the downside and fill the gap. The fact that the market takes some time to fill the gap and build momentum to the downside implies there is more time for the trader to observe what's going to happen. The three black rows pattern appears when price is going up in order to signal a reversal to the downside. The next pattern we are going to study is called the three stars in the south, which is a bullish reversal pattern. This one is a little bit trickier because it's a bullish reversal pattern composed by three bearish candles. We have to pay attention to the decreasing size of candle bodies and the larger size of the lower tails in the candlesticks to apprehend the logical interpretation of this pattern. So the three stars in the south pattern has three descending bearish candles. Each candle has a smaller body than the previous candle. The other important detail is that the lower tails of these three candles are much more prominent than the upper tails. The logical interpretation of this pattern is that price is decelerating its downward momentum, hence the decreasing size of the candle bodies, and beyond that, price is encountering buying pressure, as we can tell by the larger lower tails. You can almost see the sellers failing to create larger candle bodies and the buyers succeeding to create larger lower tails. Notice that sometimes the third candle in the pattern can be in a harami position, which is when the candle is fully contained in the range of the previous candle. This increases the strength of the three stars in the south pattern because the harami is also a reversal pattern. The three stars in the south pattern appears when price is going down in order to signal a reversal to the upside. Next we have the advanced block pattern, which is the mirror image of the three stars in the south, so it's a bearish reversal pattern. This pattern is a bit counterintuitive in the same way as the last one because it's a bearish reversal pattern formed only by bullish candlesticks. The pattern is formed by three candlesticks with decreasing body size and prominent upper tails. The progressive decrease in body size means that buyers are losing momentum, and the longer upper tails means that sellers are gaining momentum in relation to the buyers. Notice that, similarly to the three stars in the south pattern, the third candle can be in harami position, which is when the candle is fully contained in the range of the previous candle. This increases the strength of the advanced block pattern because the harami is also a reversal pattern. The advanced block appears when price is going up in order to signal a reversal to the downside. The last two complex reversal patterns formed by three candles are the fry path bottom and the dumpling top. The fry path bottom is a bullish reversal pattern formed by two small bearish candles, followed by a small bullish candle that opens with a considerable gap up. The gist of this pattern is that the third candle jumps in the opposite direction of the previous two candles in an unexpected way. The logical interpretation here is quite simple, since a sudden change in movement with a gap denotes that the selling pressure has vanished away and the buying pressure is now dominant. The fry path bottom appears when price is going down in order to signal a reversal to the upside. Next we have the dumpling top, which is the mirror image of the fry path bottom. So it's a bearish reversal pattern composed by two small bullish candles followed by a small bearish candle that opens with a considerable gap down. The logical interpretation follows the same simplicity of the fry path bottom. A sudden change in direction aligned with a gap down means that buying pressure is vanishing away and that selling pressure is now dominant. What catches the attention of the fry path bottom and the dumpling top
away from that October low back at 3,500. Guys, this is about 100 points or a couple hundred points here. We're approaching a support level is around 10,250. But if you go to that low that was on the same day that the S&P hit 3,500, that was 1088 at the open. We're starting to creep down there. What's my point? Well, the price action is telling you what the sentiment around growth and earnings is within tech. And then I think if and when, I'm going to say if, I don't know when, we do break that low, that's not going to be good for sentiment. That's going to probably spill over into the overall markets if you see the NASDAQ trading at new 52-week lows.
Yeah, and typically into a recession, Kevin, we're taking the brunt of it because the Nasdaq rallied so high into 2021, at the end of 2021 when it finally snapped. But there's the valuations and the PE multiples on some of these companies in the next still
unless you know how to do
probably where they should
fancy,
be. And Nathan mentioned 17 times,
forward
looking for the S&P 500.
like credit spreads
That's still
or something.
elevated.
I don't know. You got to go see Black Girl Stocks for that. She can tell you how to trade in a range.
PE comes down.
But there is a way to do it.
That number keeps going up. It'll stay elevated until the price.
If you're catching this in the replay,
so,
and this is your first time here, welcome. My name is Sandra, and welcome to my channel From Lack to Legacy. On this channel, we're all things money, investing, and mindset, particularly how to go from a scarcity mindset to a mindset of abundance. If that sounds like something that you're interested in, please stay. Don't forget to like, subscribe, and share. Subscribe, please. That helps this channel grow. It helps me get the message out to more people who are interested and maybe just putting their toe in the water of trading options. So do me a favor, do me a solid, hit the like button, subscribe, share it. And if you email me at fromlacktolegacy@gmail.com, I will forward you a Zoom link. We have a bi-monthly Zoom study session. And the topic for our last study session was candlesticks. So you'll hear a lot of talk about candlesticks in our chat now. You'll see lots of videos and resources around candlesticks on my page. So check out the community tab. The community tab has lots of resources. I also have a playlist I think it's titled Candlesticks. So hit that playlist. It's got videos that I have selected that I think are good. I know the one that I was playing like while I was on break. I know that man's voice. It's just flavorless, but the information is so succinct. It is so accurate. It's beyond, what anybody should be trying to memorize, but just familiarize yourself, because once you start to look at them, I know this has happened for me. Once I start studying it, it starts to make sense. Even if I don't know that particular pattern by name, I understand what it means because I understand what each one of those candles represents. So it is important to learn candlesticks. Is it absolutely necessary to be a candlestick wizard to start trading? Absolutely not. Not at all. You could start trading the way I did. I mean, and I still can trade without knowing what every last one of those means. But am I the best trader I could be? Nope, nope, nope. So I've only been trading 4 months. So we are a community of traders who are sitting on the sidelines waiting to make their first trade. We have people like me who have been trading for less than 6 months, and we have some really experienced traders in our community. And they share, I mean, I'm talking about real life, practical, you can use this right now. Let me help you fix that problem kind of help. So if you are looking for a place to trade, join us. We're here almost every day. Sometimes I just take a break because I'm tired of being in the house and I can't do it on the go like I used to because, gotta have good Wi-Fi. So it looks like QQQ might be making a move. Let me get over here and check her out. Okay, where are we? We're gonna see. It's at 262 even. Well, she's been sitting there the whole time. Let me look at it. I don't know what I want to see. I want to see this market watch. It still looks pretty bad, but it just looks stagnant. It's down 1.37. Not quite 1.5% down for the day. Okay, let's go back over here. Okay. Two, 6, 2, 12. Yeah, she struggles around, I think, any dollar mark, some more than others. But it's right around 262. And so I'm not surprised that it's like, And then the RSI is coming up. It's around 42. So, 50 is basically equilibrium. So we'll see. I still don't see anything saying make a move. Because we're looking for the easy move, the easy setup. That big old long drop, that big old long run up. It's just easier. It's just easier. Waiting for a clear, good setup. But if you're like me, there's some, watching is learning. Because as I watch those videos, you all do know I'm learning that stuff with you, right? So eventually, what I hope this community is that I am not just the only presenter like Johnny has presented, I've presented, C-Bar has presented. I'm hoping someone else will step up and present something that they have been studying. So now you all have me all in the candlesticks. So now I look at my charts totally differently. I look for, I'm looking for those combination of those candlestick patterns. Like now, a doji always stood out to me, but now it really stands out to me because now I'm not looking at it in isolation. I'm looking at what all those candles are saying about price action. I'm telling you, it's levels to this thing. It's levels. And I am enjoying getting into it. I hope you are too. I think most of the people here are passionate about this. I can't be the only one. I cannot be the only one that's, you know, passionate about these numbers. I guess I could take my out to lunch sign down. So yeah, that's what I'm doing. This is my new passion. And I'm trying to find balance, you know, because nobody wants to do this 5 days a week, although I have done it 5 days a week. But I need to find some balance. I really do. Because I need to get outside. So QQQ continues to consolidate. Just is what it is. Oh, you can't see the trader. Oh, is that Trader TV? Okay. I'm going to turn Trader TV
in
up.
technology over that same time frame. And I think the reason is obviously, you know, George hit on a lot of good points. They do have some of that growth that's out there, but this is where money goes to hide. If you're looking for tech exposure, you got a 15 forward PE. So you got a sub-market multiple. You got that rich cash flow, and then you got a 1.5% dividend yield. So that's, you know, the money flow based on the price action is basically showing you where investors are placing their votes. So when you look at a chart like this, that they don't have earnings coming out till March, and I think, look,
Earnings
guys, you know, as you look
coming
at
up.
option strategies, if you're thinking today, if
that-
I'm going to put on a bullish or a bearish
Many
option
times there
strategy,
are opportunities.
you better have a view of the overall market and what you think it's going to
Excuse
do.
me.
I mean, that should at least be one of those
There
check
are
boxes
opportunities to
within
trade.
your analysis. So, you know, if you think there's going to be
Because
continued
if
weakness in
companies have
technology,
good
you want to
earnings
take that into
reports,
consideration. But I was, you know, acknowledging
it
the
may
upgrade that
show
we have
up
from
favorably
Jefferies
in the
today,
market
acknowledging the
in terms of
relative strength
trading.
within the price action on the chart. And let's say you do have a bullish thesis on Oracle based on some of those premises there. One of the strategies you could utilize that isn't too capital intensive is a long call calendar. So what I was looking at something like selling
This is why I like them.
January 27.
They
At the
tell
time, it wasn't
you.
at the money. At the 85 strike, that is kind of like that resistance level that you identified, Tom. And then buying the February 24th long call. So that generates your long call calendar. And, you know, when I look at a strategy like this, you can determine your level of bullishness based on the strike price that you select. So I basically went at the money. And the reason I did that is kind of twofold. Number one, I'm a little bit concerned about tech here over the next several weeks as we move into earnings season or generally the overall market. You know, correlation could move to 1 if we do get continued sell-offs. And why am I concerned? Let me back that up. It's the NASDAQ kind of selling off, and I was suggesting that it's getting towards those lows that it saw back in October. What would be the leading candidates for that? Well, it's the likes of your Apples, your Teslas, your CrowdStrikes, your Datadogs, new 52-week low today. You're seeing these key names that are hitting new 52-week lows that then are pulling the major down, which, you know, it's just not good technically. So with a strategy like this, with those expirations, I was also going with the at the money because, guys, you know this, if you look at a time decay curve and you look at the last 30 days until expiration, it's the at the money contracts that accelerate the fastest in terms of time decay. So I wanted to make sure you get positive theta out of this strategy. I wanted to make sure there was a positive delta just in case the stock does continue to move above that 85 strike. And let's say we get to that expiration at Jan 27 and you're at, you know, the stock is above your 85 strike. Well, you could potentially roll it into a bull call spread. That's one way to adjust the strategy.
Yeah, let's break this this example trade down here for us here, Nathan. Buying the February 24th weekly 85 strike call, that's 50 days till expiration. Selling the January 27th weeklies 85 strike calls, that's about 22 days till expiration. Paying roughly about $1.08 debit for that. That's your risk, $108 per spread. But Kev, you got a nice wide range here, 82 on the downside and about 88.50 on the upside, where you have a range where you can still remain profitable. Nathan mentioned the ability to roll that short option as you get closer to expiration over the next 3 weeks if the market's open, liquidity is provided. But you're not paying a lot for this call calendar here, Kev, and it's flexible. As Nathan said, he put it at the 85 strike. That seems to be an area of resistance. You want it to go to that area, but you've got a range. But if you're more bearish, you can pick another strike based on that. But you're buying a lower implied volatility on an aggregate basis than you are selling. and you're avoiding that next earnings event.
Here's the positives of this strategy that Nathan just gave us. It is a relatively low debit. Why? The short side of this, Tom, is 3 weeks out. Right. So he's gone a longer dated, which hurts you in the theta department because theta picks up as you get closer to expiration. That short option is still 3 weeks away, but that number will only rise as you get closer to expiration. But this isn't one, if you're not a trader that opens up your Thinkorswim platform every day, this is one that you can put and leave and not worry about and just watch the stock over time. If you get near 85 at or near, it'll probably, I don't guarantee this, but it'll probably be worth more money if it works towards 85 and stays there. And because it's all the way out till February and then January 27th short, you don't have to defend it quite as much.
Yeah, and that's another reason why it's so inexpensive is because you're selling a 3 week out option against your long option also. And I was just looking at the near term rolls on an at the money call on a week to week basis. Those can trade 60, 65, 75 cents. So those credits that you can potentially get if you do adjust this just on a week to week basis.
Oh my goodness, I'll be mesmerized. Like, oh my gosh.
Even though you're out as far as you are, it's still a 4 weeker.
Yeah, a good look at a longer duration type of trade where you're not selling such a near-term option, still giving yourself 3 weeks on that to see if it settles down. All right. Thanks to Nathan Peterson here for joining us, breaking down the markets.
Thank you, Nathan. That was great.
The example trade here in Oracle. We're coming up after the break. Kevin and I are going to be joined by Andy Swan from Likefolio for a discussion on Roku.
I was just thinking.
Just announced their own branded TVs. Maybe get some more subscribers there. Stick around. Fast Markets coming right back.
I was just thinking today. Oh God, look at that. Nothing but chop. Oh, good day to sit out. I was thinking that we need to talk about, and I know I mentioned this earlier too, that the options are just one portion of your investment strategy. Your investment plan, and that you should certainly be considering other consider other products. You might want to have single stocks or ETFs or index funds or any number of equities. So that's something that we should be talking about. And how do you even know what is a good company to invest in? And how you can find out for yourself is through fundamental analysis. And what is fundamental analysis? Fundamental analysis is where you go and you look at a company for yourself. You do the research. There are places and resources on the internet that you can use, your websites that can help you find out about the CEO, the entire board of directors. You can find out about all of their financials, how much cash they have, cash reserves. You can find out everything that you need to know to find out for yourself if this is a healthy company. And so that's fundamental analysis in a nutshell. So that's something that you should certainly want to do for yourself. So I have some resources too. There are a couple of videos. I'll create a folder. I'll create a playlist on my YouTube page that talks about fundamental analysis, because I showed 2 of those videos during the break. And it just talks about how to do research and what you want to look at their profit, their P&E statements. Just, I can lay it out for you. I'm just planting the seed. So you can find out for yourself. And I think that's what I like most about this community too. We all share knowledge and skills shared. There's no leader. I'm a host. I happen to host. I enjoy being able to connect with people like this because, you're together, but still in your own space. Everybody's still comfortable. So, hey, Marilyn. So I will create a playlist for fundamental analysis. And that's how you can research for yourself. Like, say, for instance, if you want to invest in NVIDIA. I think they do semiconductors or chips or something like that. Something in the tech field. You want to know that. I mean, before you invest. So you can go to certainly Market Watch. There are all kinds of resources online. And that, I think, I have a list of resources too. I'll drop a couple things. I need to put something in the drive too. So I'll drop something in the drive and create a playlist for fundamental analysis. But that's something that we should start thinking about, or you should always be thinking about, because again, these things are going on sale, and maybe they're going on sale even more, and we want to be poised to purchase. So, I mean, I would think this would be a good time to have cash, keep some cash on hand so that when you see something that's attractive to you and you've done your due diligence, you've done your fundamental analysis. Here's the beautiful part, because even once you research your company and do your fundamental analysis, you determine that this is a healthy company, it's a company you love, it's a company you understand, and you commit to investing. Now you have the technical analysis part as well, and you can come and look at the chart every day for yourself. I don't know that I would, well, yeah, I probably would. I mean, so it's just really nice to be able to kind of see behind the scenes, and that's what you get when you learn to trade, because trading is a skill that you can use again for not just options, but you can use it for trading regular stocks. You can use it for trading forex. I mean, that's some kind of skill. It's a multitasker. You can use it to trade futures. So, yes. And the fact that we can take our time and just absorb it naturally and organically, and there's no pressure, and you can pop in and you can pop out. For me, it's like, yeah, I need that. I need a relaxed environment. I need information with a low barrier of entry. I want no pressure. You know, I appreciate those little quizzes though that are in the lessons that TD Ameritrade has online, because it kind of, it's a little kind of progress check without the pressure of a test or someone looking over your shoulder. So check those out. Those are under the education tab. I showed you guys those, but I'll show it to you again. So we're talking about being, not just learning to trade options, but overall being financially literate. And that means understanding how to research a company that you might be interested in investing in. Everybody loves Apple. I mean, everybody loves Tesla, but you could still find out who's on their board of directors. What do they look like financially? What does their financial health look like? And so all of that stuff you can find under the education tab. So let me show you. Since QQQ has resigned to do nothing today, we might as well do some education. So you can go to the Learning Center. Which is even more concerning than the things that they're doing. It? Nope, I don't want that. The natural answer to that is it education? Yes, we can go here. I like this better because this is where all the videos and stuff come up. And you've got a search bar here, so you can put in anything that you want to search for. So we've been working on candlestick patterns, so if I put that in.
Which is really difficult to own. And I don't know, if you guys have been into a Target or a Best Buy lately, but these TVs are really cheap.
And then there you go. You get videos that pop up. Come on. How to use continuation candlestick patterns. And it's not just here, but they have there's so many resources here. They've got webcasts. I'm just saying, folks, let's utilize all these free resources. They're right here at our fingertips. And I was on the phone with the TD Ameritrade rep just the other day, and he told me that if you have an account, every 6 months you get a free one-on-one. So I'm going to do my one-on-one, and I'm going to learn how to use this Analyze tab. I'll flick over to the Analyze tab, because the Analyze tab helps you analyze your trade and the probability of it, being profitable. Well, I need that. And I think it was Frank that told me about the analyze tab first. So mine looked all wonky, but it looks okay now. So I'm going to do my one-on-one call, and it's totally free. So you get that twice a year. And then the truth is, if you ask them a question, they'll tell you. I love calling there because I've only had one grumpy guy. I told you about the guy who, gave me the real fast rundown. Like he really didn't want to share the information with me. The kind. But generally, when I call, everyone is so nice. The last guy I talked to, the last gentleman, he was extra patient and kind, and he reminded me of the 2 free one-on-ones. So make sure if you haven't had your one-on-one, make sure that you call and schedule because you're entitled to it. So don't forget your free one-on-one consultation with TD Ameritrade, and it can be about anything you want to talk about. Well, let me put this back on chart. Yeah.
Yeah, and
and I'm telling you, I'm liking TD Ameritrade Network, their news. I think I like it better almost than CNBC because they call out real life plays. They tell you exactly what it is, and not that I would, I'm not. I don't know. I like knowing that because if nothing else, you can back test them or recreate similar. I like that kind of stuff. Oh my goodness. So I'm jotting them down when I hear them call out those plays. And generally they're way more complicated than anything that I would do because I only do calls or puts. And it has to be like a really big old trend. It has to be something really apparent. Although I did scalp in the beginning, you guys, and that was fun. Scalping was a lot of fun because you get in and get out, and you can do it because this morning was a perfect example. Let's see. I have it on 15 minutes, so for sure that was 15 minutes. You could have got in and out in 15 minutes. Let's see what it looks like on the 3. That you have scalped this this morning. Somebody could. Well, why not? So it looks like 3, 6, 9, 12, 15. I would say even down to 18.
Capital outlay.
Yeah. So, and then you close your computer and you go home. And you can do it. So I'm trying to think. We should look at how many mornings were there viable scalps.
Next week's January 13th 46 call, right?
Maybe not so much. But I mean, if you waited from there.
So basically for 19% of the price of the stock, you could put on a fairly aggressive upside play. Obviously, you can do this directionally bearish as well. But if
so we're looking for morning scalps.
Buy this over the next 2.5 months. This is one way to do it for a fraction.
I think I got that.
Yeah, and less capital intensive, right?
Yes.
You're defining your risk on it now.
4,200 versus 600.
I don't know, but that's a nice one right there.
That's
a nice one right first thing in the morning. Let's see, what time did it end? What time could you have gotten out? You could have gotten out if you got in.
Example trade down that we're looking at here.
10 o'clock, yeah. I don't know if technically that's a scalp, but it certainly was a morning opportunity. Looking for morning opportunities.
You're paying roughly a $6.80
doesn't happen every morning.
$80 in risk on this particular position.
Yeah, how about that? That would have been the morning. 3, 6, 9, 12, 15, 18. Yeah.
On a week-to-week basis, collecting credits.
In my mind, why not?
Provided you have some assignment risk on that short 46 call over the next 8 days. But this, you're defining your risk on this.
So my point is, you can scalp. This is definitely a morning scalp. Goodness gracious, these are my favorites. These are my favorites. These stair steps, that's what I live for. To be honest with you, this is my move. This is my jam. This is my ish right here. Because it's plain as the nose on your face, ladies. I'm sorry, ladies and gentlemen. That's my favorite right there. I don't know what it's called. I don't know if it has a name, but it's elementary. when you see those little stair steps forming like that, and you have this kind of volume and everything's red and go, only thing that concerns me sometimes is when it's over, let's see, when it's oversold like that. But as you can see, it can stay oversold for some time. So that's what I live for. I'll be honest with you. That's all I need. These up or down, I'm good. It's nothing to interpret except for when to get in and when to get out. And that's how, to be honest with you, that though learning to wait for those, that's how I was trading before I got, trigger happy. But honestly, you can find that, and that it happens. It happens. And if you wait for it, those to me are higher probability. This is I don't even know if I would call that a high probability setup, but I'll show you where they are. And they're very, you can distinguish them, you see them, you know them when they run like that. And there are variations of it too, but no, that one, it's unmistakable when you see them. It's like those, they go open to close, open to close. And so, yeah, those I think are like see, I like those little hoppies too. Those are like my training wheels. This was a beautiful day, to be honest with you. And see, this is when you know you got it bad. This day was like poetry almost. Look at how it did this. It just scooped and scooped and scooped and scooped and scooped and scooped around the bottom, hit the bottom, and then turned and scooped all the way up and out. Really? Every time. That was a good day. This is the kind of day that I think beginning traders, you wait for these kinds of days because they're easy days. So don't trade every day. I have come to the conclusion too, I overtrade. And I think I overtrade because I'm out here with you all every day. Because usually if I wasn't on live, I would be outside or something somewhere. So that's what I said. I think I'm gonna start going outside at least 2 days a week. I gotta do it. And so I gotta go down to 3 days a week because I gotta get outside, and it'll stop me from trying to trade every day. Because when you wait for these, you're made. What? That's easy money. That was easy money going and coming. And so you don't have to trade every day. So those are just my thoughts. Again, the musings of a beginning trader. But that makes sense to me. Wait for these big money moves like that. And so what? They don't happen every day. That's a nice move. But what I'm saying is, when it looks like today, do what you see me doing. Sit on your hands. Don't do it. Unless you know how, a strategy to trade this chop. But I don't. So I just sit. But I still enjoy watching the price action, the rhythm of it, because I promise you, if you watch your equity long enough, you will see. Look at this. You see it? You see that hop? Come on. That's a teacher's dream. I could explain that pattern all day and all night. And you can see how she's caught up in those moving averages, the 9 and the 13. It always happens like that. And here comes the 50. She wants to get in on it. Oh, come on. It's not going anywhere except, let's see, I'm going to talk too soon.
On the TD Ameritrade Network. Before we take a look at CrowdStrike after the downgrade this morning, let's bring in Ben Lichtenstein, Senior Futures Contributor here on the network.
So you see what we're looking at, RSI is pointing down. Here, this looks like the beginning of a downtrend, and these are building. And, they aren't those perfect stair steps, but hey, 3, 6, 9, 12 minutes of, in a row. Got a little volume. I'm watching. I'm looking to see. And we already pulled out. I looked at all of the time frames. So I did take my support and resistance off, but so many things. There's so many things, so many moving parts.
Tom, I think you could chalk it up to some of the numbers we got this morning.
Yes, Maryland knows. Maryland is such a support. Yes. Yes. Twice a week or step away from trading environment for a few days. Yes. I have to because it keeps me in the house. That's the part. It's that part. And I would be outside. I would be, you all already know I would be at the spot and I'm not doing that stuff. And my soul needs that. I'm serious. That's what this whole exodus and this whole stepping away and telling truths and living your life of ease. That's what that thing is about. So, absolutely. And I recognized immediately that, but it's a balance. See, and I have to balance it because I enjoy doing it. I enjoy watching it, but I have to discipline myself too. I'm telling you, trading will make you grow up, or it will certainly make you face yourself. It has made me face myself. It's like, get yourself outside, number one, and get myself back in the lab. This learning piece is good for me. Just being in this environment where we're sharing information is good for me because I need all of this and I know I don't know. I'm telling you that trend line. Thank you. Another piece I can add to my arsenal. And so, like in just the last couple weeks, I've picked up a couple different skills that I didn't have that are critical. How to place OCO orders, critical. How to draw trend lines. I knew what they were. I know how to read them. I know I could visualize them, but I never put them on my charts. So, yeah, all those pieces, picking them up, and just for me, sometimes there's a fear of doing, a new thing. Yeah, Marilyn is such a cheerleader. I am telling you, thank you, Marilyn. Marilyn is the sister you never knew you needed. Yes, she's just always there cheering. Yeah. Thank you, Marilyn. Thank you so much. Yep, gotta take care of yourself. That's the whole name of the game. Well, and this all came secondary to, to the rest and ease. So yeah, I want to keep it in perspective because I do want to enjoy. But for a minute it was an issue because when I tell you the week leading up to Christmas, it rained, and that week of Christmas, I never saw Playa so cold and so rainy. So it was easy to stay in the house then. And that was cool. I got a lot of rest. But I am a sun creature. I gotta have sun. I don't necessarily have to have the beach, although I love the beach, but I need water and I need sun. And so, yeah, I have to get outside just to maintain, my happy thing, my happy balance. And then I want to enjoy this space. It's beautiful. I love walking around here. So, yeah, I'll let you guys know, I'll give you guys the heads up on, what it's going to look like in terms of which days. But I appreciate the flexibility. You guys, y'all are the best. So, yep, that's what's happening. Definitely some self care on the agenda. But in the meantime, I want to make sure that we are staying tight. And we're talking about candlesticks. I am going to get outside. Mm-hmm. Yep, we all do, don't we, Marilyn? We all need that balance. Yep, even if it's chilly, I think just getting, I have to have an outdoor space. I mean, even if you just walk around the block, just the fresh air, moving your body. Yeah, that's good stuff. It's good for my mind. Yep, good for your body, good for your mind. And then it's so pretty, all that stuff.
A lot of this is valuation. With everything, it's sold off from in the high 200s down to where it is now, Tom.
So, I mean, today was really
big negative PE.
A slow day. But I promise you, look how true this pattern is. Look how true. It keeps bouncing off of these SMAs. It won't deviate. Trading right in this range. So something's gonna happen. The way I see that, it's like she's resting and building up steam to do something, either break up, break down, do something. So I don't mind seeing that consolidations come, because that's exactly what that is. All caught up. in those. And so this is the 200-day moving average, but it's trading under the 200, which is good. That lets us know, we're still in this downward trend. So we'll see. I definitely know I have a put bias because I don't know how good that is though. I heard somebody say that if you're aware that you have a bias, then you should strive to take trades that are opposite that. So that I should strive to take some calls. I'll do some, but they have to be so obvious and apparent. It doesn't make sense to me to go above the trend. That makes sense. Just wait for a good put setup to present itself. It will. QQQ is very generous, although she could be very wicked because she could turn on a dime. Yesterday was quite wicked. Would you look at that crazy? That was yesterday. That was bananas. Down and up, consolidating down and back up. Everything that it gave it right back. Look at this. This is exactly up, over, and right back down. That was crazy. And then this, down and right back up. Crazy. Chop, chop, chop. Down and up. That was down and up. Look at that. It was a tough day yesterday. And then here's today, that down and up, and then just sideways. So at least it's quiet. I don't know. See, they're telling it again, a whole play. Let me hush.
$485 per spread, but that takes your break even down to $85.15, where you'd be actually purchasing the shares on this type of strategy. Now, your risk on it, about $8,500 on it if the stock were to go to zero. So you've got to keep that in mind. But Kevin, what's your take here on people that maybe want to get into a stock, but then maybe want to give themselves some cushion or just want to collect some option premium?
Cash secured put is an interesting way to do that. Why?
That's
people,
the analyze
the
tab,
knee-jerk reaction is, well, if I sell the 90 put, I buy it at $90. But
that's
you sell it for
$485,
and that's added on. So like you said, you buy it for $85.15, not $90. So there's advantages to do this. It's a popular strategy for people that can afford it. Tom, you got to be afford to be able to do this.
Right.
So, another way to do it is the put vertical, but this is certainly one way that a lot of people with medium to larger accounts do. But Tom, this is a great tool for doing just what we talked about.
Yeah, and that probability at that 85 strike in February, it's about 68% that'll be out of the money or above that that particular area.
2/3 is that magic number.
Right, which is your break even on it.
Right.
So you're buying it at a discount. And even if you don't get to buy it, you get to keep that option premium. Right. This might be one of those recurring strategies. If you're comfortable owning a shares at a specific price, you can do it over and over again if it does not go below that 90 strike at expiration. All right, Kev, that's going to do it for you and I today here on Fast Market. But stick around right here on the network. There's going to come a day, folks.
We're going to be talking like that. We're going to be talking about credit spreads and condors, iron condors, if that's what you desire. Yes, it's going to come a day. What time is it? It's 1 o'clock. So maybe by 1:30 she'll do something. I think if that's the case, I might as well go outside. Let's see if this will work. Oh Lord, we're gonna see if the internet holds up. I'm going outside, y'all. Let's see.
In the income investing course,
we'll explore
investing strategies designed to generate regular income and preserve
Let's see,
capital.
unless it's super noisy.
Risk and return preferences. You will learn about the different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into the assets commonly held in income portfolios.
It's hot and humid.
Stocks, bonds, equity REITs, and cash. You'll also learn about routines for managing a portfolio.
Oh, yes. Easy, breezy, cup easy.
Trades to practice your new skills. So if you're looking for an edge, consider your education. Head to the Education tab on Thinkorswim for the income investing course and a whole lot more. Binge watch the market at TD Ameritrade Network. The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house
And engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week
this
on
will work.
TDAmeritradenetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Okay, let's
We
see
empower
what else
those who
somebody
act.
else is doing out here.
Those who see the correlation between things above and things below the surface. Those who navigate risk by meeting every turn with a heightened awareness of what's possible. Constant assessment.
Oh, looking forward
Determine
to
the
that.
best position. Catch the perfect wave. CME Group, where risk meets
Oh, we're looking
opportunity.
forward. Does anybody know what that means? What does this thing mean right here? This
TD
little
Ameritrade
symbol. I know
Network
it's something
has
I
arrived
added to
for
this,
the
but
New
I
York
don't know
Stock
what it
Exchange
means.
New location.
Okay,
With
video.
access to the
Ford
biggest
sales
newsmakers in Wall
rose
Street,
in
bringing
December.
you
I will
in-depth
see. That's why
market
you need to
coverage
watch the
and
news.
real-time trade ideas. Do not miss our exclusive
Was that
interviews
in
with
the
CEOs,
news
bell ringers,
before?
traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss
Okay.
Trading 360 at 11
So
a.m.
that's what that
Eastern
is.
and
That's
the watch list at
news.
2 p.m. Eastern, live
Okay,
from the New
hold
York
on.
Stock
Let's
Exchange,
see.
only on the TD Ameritrade Network.
Okay, if you
Whether
hover
you're an
over it,
experienced investor or just getting
wait.
started, TD
Options,
Ameritrade
actions,
offers a
bullish
webcast
bet
that's
on
right for you.
Ford.
Are you an active trader?
Oh, okay.
Our active trading webcast series
You're
is
looking forward
designed to
just
help you
wiggling all
develop
the way
a
up.
deeper
Oh my
understanding
goodness.
of technical analysis, options, futures,
Sleeping
and
the
more.
big old move. Look at that.
Best of all,
Where
you can
was
ask
Ford
questions
trading
by
at?
chatting directly with an education
11.
coach. It's interactive learning at its
It's all the way up to
finest.
12:28.
Tune in live or watch on demand. Head over
See?
to TDAmeritrade.com
And something told me to looking forward,
and start
trade for
learning
looking
today.
forward today. After the morning nonsense, we went from 12 to 12:28. You can make money on Ford. I keep trying to tell y'all, you can make money. Make money on Ford.
Welcome to Next Gen
Okay,
Investing.
let's
I'm
go
Jenny
back
Horn
over to
alongside Alex
QQQ
Coffey. And
since
Alex, a
Ford
completely
is
different day
just
than
showing
yesterday
all the
because
way
of our
out.
seesaw a little bit this week. Down today across the board, although I have to say, I've been watching the four major agencies very closely today. A relatively boring trading session.
Yes,
No doubt about it. I think it's well put. The seesaw analogy I like. I've used kind of game of ping pong. I think tug of war would work.
Yes,
It's back
tug
and
of
forth.
war.
I mean, that's the best way to describe it. We've gone almost nowhere. But it seems like the volatility, it happens maybe earlier in the overnight session, and then we just sit and wait.
It does. It feels like right now we are doing a lot of sitting and waiting to at least see some stronger conviction. Perhaps tomorrow after the jobs number, we'll see some more volatile activity. But as always on the show, we will focus on the individual stock movers. A lot to get through today. We will kick things off with our upvote and downvote segment. Following that, we will chart and trade those upvotes. And our FOMO name is a name that I think I've already talked about today, Alex, like 3 times. But of course, it's Tesla. Tesla's seeing some news today. We'll dive into all of the headlines facing that EV company later on. And then I sat down with Carrie Schwab-Pomerantz to discuss a 30-day financial cleanse
just
and the
chilling right
importance of
around
kicking off the new
262.
year with good financial health. Last but not least, our under 30 name today is Bed Bath & Beyond. Plunging on news, it's seeking potential bankruptcy. Some pretty negative news weighing on that stock today.
I'm surprised.
Yeah, I'm looking
Bed
forward to
Bath
that
& Beyond
conversation with
hasn't
George Jones.
already,
George Jones does a good job of kind of sorting through the news headlines, the
bullet.
financials of these companies, giving us kind of
I used
a
to
clear
buy all
picture,
my
at least of how
towels
he
and all that stuff.
sees
Oh my
the
goodness, I was the queen of the
situations,
20% off
those kind of
coupon.
situations. So I'm
What?
looking forward to that.
Oh my goodness.
Tesla, always a
I
great
tried to will them
conversation,
to my
and
daughter.
sort
She
of an
wants no parts of them.
uncharacteristic
I had
decline,
a
at least over the
stack.
last few years.
I wouldn't
It's
shop
been
without
such
a
a strong,
coupon. My
resilient
daughter's like,
company,
no thanks.
basically in free
You
fall
know,
here. So I'm looking
kids,
forward to that
man.
conversation. But let's
Kids.
start
If
with
she don't,
upvote,
you
downvote.
know.
as we do. Not
Yes.
endorsements, not recommendations here.
Absolutely,
Jenny,
I'd shop there, but
another
I could
list
see
of names that don't necessarily
they
have
were
a
in
lot
trouble.
of things going on together in terms of relations, but
what's
all of
happening.
these are certainly companies to keep an eye on. Let's start with the positive, Western Digital.
All right.
Western Digital. So some news we got today that Western Digital has resumed talks with Japan's Kiyoshia Holdings and a deal that could unite the two technology storage providers, according to those familiar with the matter. And I also saw some Bloomberg reports on this same matter. Now, while the structure of the potential deal does remain fluid, the parties are discussing merging into one publicly traded company. The current talks, which were revived late last year, are still very much in their early stages and could also end without an agreement per these reports. So it's fairly speculative right now, although we are seeing the stock at a nice lift today, up almost 6% on the session. Back in June, though, Western Digital did disclose reviewing strategic alternatives, including options for splitting off its flash memory and hard drive disk businesses. So this is not necessarily out of left field for this name, but a name that's down about 49% from its 52-week high, but up now almost 18% from its 52-week low. So Western Digital, interesting story
This doesn't
today.
look anything
No
like
doubt,
this.
you can tell by the market's
volume.
reaction
look
how
big and
it's
strong those
counter
candles are.
to the
That's,
overall market's weakness here today. That this is
But
something that's being
these
perceived
tails,
as a positive
these wicks
for
tell
the
you
companies. Is
that,
the synergy and the
there's still
overlap
a
that they
lot of
have,
buying
potentially keep
pressure
costs lower,
here
increase
because
those
the
margins. So
buyers
we'll
push
see if
that price
ultimately
way up. That's
it
the
does
beauty
pan
of
out or
knowing.
this is the direction
So then
this
when you
goes.
see
But want to
this,
keep an eye on for
is
sure,
that
and
one of
certainly
those
one that sticks
hammers?
out
Is that
as
an
notable
inverted
here
hammer, or is this a
this
hammer?
afternoon.
But
Let's say
you can
down vote though
see
for Western
that,
Digital. Not a whole lot to do with that story other
this
than
isn't as,
highlight
this
it and
candle
really
certainly isn't as strong as
communicate
this one. So you
what
might
the
want to
what is
consider,
behind this move. Next
and
one
then
though is
look at what your
Shopify.
MACD is saying.
We talked about
Your
Etsy.
MACD is
I
even saying,
believe it was
oh,
maybe
things are
even
changing.
yesterday, and we
Your
talked about how
TTM
these back
lemon
end
squeeze. Everything is saying,
e-commerce
hey,
companies, Jenny,
tides are changing, and
kind
abruptly
of operate in the
changed. It
shadows. They don't
did.
got all the real estate everywhere.
So
They
I
don't got all
think
these
that's the
inventory
beauty
issues that we
of
keep
being
hearing
able
about
to,
in terms of
trading.
the kind of
Because
retail
you can see
focus.
this is red. You can see
But
this
when we
is
look
red.
at this
You can see the
analyst note in
difference in these
Shopify,
colors. It
shows
is
that there's
so
still things to worry about
simple
even for these companies.
to
Right, a
at least
completely
be
different
able to
tone from
make
what we
sense of
heard
the chart
actually in regards
instead
to
of
Etsy yesterday.
seeing
This
it
analyst called this
as
name
this
potentially one of the
gobbledygook
winners of
of
2023.
boxes
Jeffries today does not
and
feel the same
wings
about
and
a name
stuff.
like
No,
Shopify, downgrading the
you
stock
know
to
now
hold from buy with a
this tells you
$40
something
price
about
target, which
price and the
is still
struggle.
implying about $4 upside
And
from
it's
its
no
current
surprise
levels,
that the next
even with
candle
its
was red
4%
because
decline
look,
today. But the analyst
it was
noted that, well, his multi-year blue sky
sellers
thesis remains viable. He sees a
were,
slowdown in e-commerce and
overall
Shopify's massive
victorious,
capital
but
expense
price
cycle,
opened and
limiting
closed so close.
upside
And you
beyond
can
his
see even
price
with that
target.
tail,
He
there
sees the
were
e-commerce group as a
buyers.
better
I'm sorry,
to
there were sellers
revisit in the
present.
second half of this
And
year
so
group of
sellers
stocks
pushed that
versus
price
looking
all
at
the way back down to where it
currently.
was.
He
So
does expect
you can
Shopify
see,
to
yes,
face gross margin merchandise
there's an
headwinds now into the
overwhelming
new year, which
presence
could
of
limit
sellers that
its
they were able
further
to push that price
upside.
down. And
Clearly
so
seeing a negative
here
reaction
comes a
today,
red
although I
candle.
feel
That
like a
makes
lot of
more
the
sense to
losses
me
we're seeing
now.
today, Alex,
So
are
yes,
steepening with the
learning these
overall
candles
weakness throughout the
and
market.
what this
No
means,
doubt
all
about it. And I
this
think that this is a
wicking.
pretty straightforward assessment in
Yes, that
terms
there were a
of
lot of
Jeffrey's
sellers,
outlook
a
on
lot
this
of
name and
selling
why
pressure. And
that's
so here you go.
limiting the potential
But
upside here.
still,
One, they
look
see a
how weak
downswing
this
in
candle
the
is
industry that they
too.
work in. So
But
if you're within the e-commerce sector, you're
just
tied to
telling,
that.
just
You have the
telling the whole
cyclical
story.
nature to it,
Candlesticks telling a whole
and
story.
you're perceiving
And the
that
fact
that
that
area
these
to be
are
weak.
so
Well, that's going to
squat,
impact companies
or
like
so small
Shopify as
compared
well as many of its
to
other
what
peers.
these look
But
like,
that
so
second piece that
robust.
really sticks out to
You
me here,
know,
it really
you
addresses
can
the
even
point that we were
tell
highlighting with
how
Etsy
close
and
these
the things
two
that
lines are
these back end
together.
companies maybe
When
have
they're
going
far
for them. But
apart
if you're
like this,
spending a ton of money right now to
you
try to
know
expand,
that
you're in the
speaks to
midst
the
of that.
intensity
Well, you're still spending that money,
or
and
the
so you're still
strength of that
going to have
trend.
that margin
When
pressure
let me
because your
get this
capital
out the way.
expenditures are
When they are
going into
running on
expansion
top
and
of each other
driving
and they
business
really
going
aren't
forward.
that
So
far apart, and you
interesting
see
one.
how small
Obviously, there's
this,
positivity on the
these
back end
bars
from
are
this
on
analysts, but at least in the near term, a little bit of sensitivity to the economic picture, as well as just the fact that they talk about just tons of spending and maybe a time that's not so good for it. So we'll see how things shape up. Going to say up though for Shopify. We'll see if the technical picture is any clearer.
Yeah, another name that we need more, I think, more technical picture on is DocuSign. DocuSign down 63% from its 52-week high, although up 38% from its low. So sort of looking at it on two sides here. Now, Jefferies also upgraded DocuSign, though, to buy from hold with a price target of $70 a share from 50. So this analyst feels much more
about what's
positive on a
likely
name
to
like DocuSign,
happen.
which is interesting
So
considering the
that's why
fact
I'm
that it
sharing
hasn't
it.
exactly been
And I'm
an
studying it with you.
outperformer as of late.
I'm gonna
But
be
the
a candle
analyst sees a
connoisseur
mixed to negative
when it's
outlook
all
in the
over.
first half of 2023 for software stocks with weakening fundamentals and continued multiple pressure. However, he
You
thinks
can't.
this is likely to come in the second half of this year with recent multiple.
Oh, okay. Thank you. I just realized that. Okay. Is that better? That's got to be better. Okay. I just realized it, but you guys know I like listening to it. And plus I'm outside. Okay, I hope that's better. We had the same problem the last time I was outside. I think because your voice gets lost. I probably need to put. Can you hear me now? It's like the commercial. Can you hear me now? We had the same problem before when I came outside. I think the sound gets lost. I wonder if it would help if I put on my earphones. Wait a minute. I'm going to get earphones. Let's see. I'll be right back, you guys. I'm going to go get my headphones. I'm sure we missed. Okay, hold on. Let me get my headphones. Okay, I don't know if this is going to be better. I was going to put on my headphones, but if I put my headphones on, you guys won't get the audio. I'll get the audio. So, if it was just me talking, my headphones might work. So let me know if you can hear. If not, then I got to go back inside. But it just gets lost out here. It's just, it's loud. I don't know. And then, so I turned this down too. So hopefully that's better. Let me know if it is. If not, then I'll go back inside. We can hear you better now? Okay, good. Yeah, I'll have to just kind of speak a little louder because we got kids playing downside, pools, all kind of festivities going on. Okay, so I'll have to keep that down low. And so let's see what QQQ is doing. Not much. Same old, same old. Get it on the 15. So I was just saying that we should be studying fundamental analysis too. So you guys didn't miss anything. Same thing I was droning on and on about before is that we need to, be looking at the big picture. That just, options are just one portion. And so we need to look at fundamental analysis too. Like how do we evaluate? Because it's going to be time to buy soon. We're hoping these prices and the Fed breaks the market, and at least I am. That's what I'm hoping. I'm sorry. I feel for people who have money in the market. I understand, but they'll have time to recover. They got great gains. And so I want us to have a bite at the apple. So do whatever y'all got to do. Let this thing shimmy down to the ground so we can jump on at discount prices. And whatever way you decide to move forward with your investments, you still need to understand how to research a good company. What is a good company for you to invest your money in? Whether you decide to invest in an individual equity or you decide to do index funds or ETFs, you still need to know how to research. And so I think that's something we should do. And you do that through fundamental analysis. And so I'm just peeking over here to see. Oh, I'm telling you, I literally live in the jungle. It's like bugs and birds and animals I've never seen before. 261.98. We're still hovering right around 262. Okay. So that is called fundamental analysis. And I have two videos. I showed them today, but they're TD Ameritrade videos. I'll drop them in a watch list or a playlist on my YouTube channel. I'll see if I can pin them in the community tab too. And any other resources we can find about fundamental analysis, because they give you a step by step. They even tell you which websites to use so that you can research the CEO, the board of directors, all of that stuff. You need to know. If you want to invest in Nike, I mean, we're not just going to assume that they are financially sound. We're going to find out for ourselves. And there's a way to do that. You can look at their profit and loss statements, P&E ratio, la 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 la. And you know, I don't know enough to be telling you definitively. So let me do what I do. I sprinkle the seed. So I'll drop those resources, and then it's up to you. You got to go, you know, watch the videos, and certainly go to the education tab. I think we started there. The education tab. Let me do that. L says, I think I'm going to focus on dividend investing and buy options when there's momentum. Yep. I'm going to study the credit spread too. I'm telling you, I think credit spread is going to be where it's at. I will be revising my trading plan. Yes. Me too. That's what I'm trying to learn. I am trying to learn as much as I can, so that I can pull it all together, because I know all these pieces are important. Learning how to plot support and resistance, including trend lines, that's important. Learning how to place stops, that's important. Having good technical analysis, being able to read charts and understand and stay abreast of the news. You want to be a trader. That's part and parcel. So yep, I'm with you. And learning different strategies like Johnny's RSI strategy and credit spreads. Yes. So I'm not in a hurry. I'm happy because I promise you every day I learn a little bit more just by talking about it with y'all. It forces me, it holds me accountable is really what it does. Because if I say, like, if it's just me, like when I was trading in isolation, I could say I'm going to study how to put, well, heck, I hadn't learned them all that time. You think I didn't know or want to learn how to put on a stop? But I kept saying I would study it, but I didn't have anybody to hold me accountable. And so when we say that we're going to do something on Wednesday night, I know that I have to be ready. At least I have to have read it, and so it forces me to interact with the information. And so that just makes, come on, it's good learning. I promise you, it's easy. It's easy and free. Yeah, L. Yes. Come on, there's no way you could consider yourself a well-rounded investor and not have long hold investments. I mean, I guess you could, but not, for me, you got to have balance. And so certainly you want to have a well-balanced portfolio, and you want to have a couple tricks up your sleeve. I like options, in terms of generating income too, because who doesn't need an extra $100 a day? And I'm telling you, $100 a day is doable. That I would be so much better off, y'all, if I just took the little $100 and ran. But I'm working it out. I'm working out all my stuff right here for the world to see. But Frank does it. Frank takes his wins. We were talking about this yesterday. Small wins, base hits. Take those small. Yep. Take the base hits because they add up. If you do $100, $150, let's just 3 days you do 100, 2 days you do 50. That's $400. Excuse me, to the good. So yeah. So yeah, please. You've got, at least for me, I'm with you. That's how I got started, with stocks, not with, not with options or anything else. Options came later. I told y'all how I got to options because my target stock was taking a beating, and I need to check on it because yesterday, I mean, she wasn't down by that much. Still not enough for me to consider selling. I just feel like I took the ride this long. We're gonna ride it out with Target. I'm not a ride or die about many things, but I'm a ride or die about, taking a loss on the stock. I just seems so unnecessary. So I'm just gonna wait it out. But that's how I got started because it kept losing. I was like, I should have got out, and I didn't. And then I figured out that I could buy, since it was already going down, I could buy a put and voila, make money. It was going down anyway. I knew it because I saw it in my account. So yeah, that's how I came. Just like that. I was like, this makes sense now. That's what somebody says. Yes, when they say get a slice of the pie, absolutely. I might as well. My money's going out the door this way, but I can make it back this way. So there's certainly a place for bonds, stocks, options, REITs. If you if well, see, I'm a firm believer in real estate, like for real estate. But since my time has come and gone, I did my bit with real estate, and real estate was good to me, and I'm okay. But I certainly think that that is a part and could be a viable part of wealth building for anybody's portfolio. I know. Snap and bind. You said that before. Yep. And you see how we have like you kind of gravitate toward what a stock that you like, or I think that's what I like about it too. We can all learn the same skill, but use it and apply it in our own unique way. And we're still talking the same language. Johnny trades something totally different. Miss Vice trades something totally different. But you guys, we're all looking at the same chart. I'm sorry. That blew me. And my friend who trades Forex, we're all looking at these same charts. So that's why I thought this was just, come on. That's a skill. If you never use it, if you just use it once a month, if you only do it during earning season, whatever. Just to know that you can whip that out and potentially make some money. I need skills like that. I need friends like that. So I'm with you, Marilyn. I'm taking my time. I'm not rushing. I feel like I got the big picture. And so now I need to fine tune and get all the little pieces that are necessary in place so that I'm not out here just tossing money in the wind and burning money. I don't have money to be burning. So yeah. I'm trying to think, is there anything else I need to share with you guys since QQQ was just toodaloo 262. What is she? Oh, 23. There's a little jumpity jump. So I guess we'll see if she's going to reject or what she's going to do, how she's going to respond to this 50-day moving average. Uh-oh, is she going to cut straight through it? Well, we'll have our answer. Wow. Wow. Are you all watching this candle form? But I'm always, those I always look at with a little side eye because many times, yep, you'll see buyers and sellers. You'll see sellers come in, or you'll see the next candle will be really, really red. So they're exciting to see, but unless it's followed up, yep, you see. Now we know that that long wick means there were sellers there that were pushing this price back down. I'm telling you. Priceless, priceless. We learned that in our candlestick class. And now here comes this red candle. I'm not surprised. Also, I'm not surprised because that 50-day moving average has served pretty much as a support and a resistance at times. And so it may be resistance. It may be, that it couldn't penetrate it and it's bouncing off. And that's why we see the formation of this red candle. But we'll see. But we definitely know since this candle didn't fill in like really big and green and strong, like full, that there were sellers present. Tug of war all day. Buyers and sellers. The fundamentals is awakening also for me. Oh, Marilyn says the fundamentals. Yeah, I'm telling you. Just, Marilyn, it's like the more we learn. Would y'all look at QQQ? What is she doing? She's climbing up. Elle says, I didn't like them, but it was a recommendation from the first class instructor. I learned to stick to my script. Uh-huh. And you should. The things that make you comfortable. Yes, yes. I don't do it either. I want to jump around. I want to look at something different, but this is enough. Because for me, it's like studying too. I'm trading sometimes, but mostly I'm studying. But do you guys see how these are starting to form? You see how this one closed and this one opened? The beginning of those stair steps that I love. So now it becomes about reading the rest of the chart. Look at the wicks though. Those are longer than I like to see them. It's a lot of selling pressure. But look at that nice big volume. Okay. Turned up. Yeah, I don't know. She jumped up pretty quick. 262, man. That was a whole dollar. That was a move. Did you guys see that from 262 to 262.95? That's where it was. Oh, that was a big jump. And at its height, it got up to 263, almost 263.50. Wow. That's a lot of volume. Those are institutions. Those are hedge funds and big money makers dropping money into the market. They move the market like that. Look at it. Look at it. Okay, that's on the 3. Let me look on the 5. I'm just going to pull out. I'll look on the 15. Look at that big old candle. And the beginning of an upward trend. No, maybe this is our move we were waiting for this afternoon. Let's see. Is she going to start? We're talking about consolidating, and then finally breaking out. 3 minutes. So we cleared these and closed above all of those. So I'm curious to see what this next candle is going to be. And this is why I go down on the 1, because if it's all green and clowning down here, well, look how oversold or overbought. I don't know about that one, y'all. But it sure jumped up quick. I have to see.
And so you can see on here that because of the long-term nature of this particular strategy,
Did you all see how that price jumped up like that? Oh my gosh. See? But I would need to see a couple more of these for me to go in. I did not know. This looks like the beginning, and it's fairly wide open, but it's cooling off a little. Oh shoot. I think this is just gonna flip green. Oh shoot. But look at that wick. That means the presence of some sellers. See, yeah. I guess that's the beauty of being able to read these candlesticks and how they come in. And look, that's not as much volume as it was before. But more volume than this. I don't know. So those are all the things you're weighing. And look at the price going up. I don't know. I'm going to let this one roll too, because feel gun shy. Ooh, she looks like she woke up, y'all. Oh, shoot. I'm going to see. Let's see.
Looking beyond direction to high volatility and help the trader choose between them. We also introduce strategies designed to harness changes in high volatility. For instance, time spreads like counters and diagonals are designed to benefit from increases in high volatility. Iron condors, on the other hand, are designed to benefit from falling high volatility. After learning about the strategies, take the final assessment to test your knowledge. Head to the education tab of
Y'all, I'm looking at a call. I'm waiting for the pullback to see. I think I'm only going to buy one call. I should paper trade this. You know what? I think I shall. Y'all know what? I think I'm going to paper trade this. So I'm going to disconnect and go over to paper trading. And I think I'm going to paper trade the rest of this for the day. So hold on, you guys. I'm going to log out and log in again and paper trade. Yeah, let's do that. Because this is interesting. Let's see, while you guys are waiting for me, let me give you something else you can look at. I think this is the video on fundamental analysis. Let's see.
Net uses these statements to help. Fundamental analysis is the process of examining a company's financial statements to help decide if its stock is a good investment. Financial statements include balance sheets, income statements, and cash flow statements. This information helps determine the financial makeup of the company behind the stock. In this video, we'll explain how fundamental analysis uses these statements to help evaluate a company. Let's start with a balance sheet. This document compares the company's current assets to its liabilities and owner's equity. Let's define these terms. First, we have assets, which are items the company owns. Assets are usually comprised of cash, equipment, and property. Next are liabilities. Liabilities are usually debts or accounts that need to be paid. Often, a liability on the balance sheet has an offsetting asset that helps the numbers stay level. For example, if a company were to take a loan out to buy a property, the loan would be a liability and the property would be an asset. The third term of a balance sheet is capital, or owner's equity, which is the amount of assets raised by issuing stock. For example, when a company issues stock either in its initial public offering or in a secondary offering, it raises money or capital that can be used to fund various business expenses. Balance is achieved when the value of the assets are equal to liabilities and owner's equity. The balance sheet helps you see how a company raises money for its assets and can help you determine if the company is overextended. However, if you want to know how the company earns money, you'd look at its income statement. An income statement shows a company's revenues and expenses. These are the costs associated with running the business, including operations, interest paid on loans, and taxes. When you take revenues and subtract expenses, you get net income. Net income is the earnings of a company. Earnings are usually handled in two ways. The first way is to share the earnings with shareholders by paying a dividend. The second way
Once this
is to
is done, you
reinvest
guys,
these
I'm going to
earnings into
switch
the
back
company.
over. I'm getting ready to place
Reinvesting
paper
earnings can help a
trades.
company's
I got
cash
my
position.
Thinkorswim paper
A company
trade
with a good
platform
cash
up.
position is
I'm
usually
going to
better prepared to endure economic ups and
trade,
downs.
baby.
This is why some investors say cash is
You know.
king. It's also why the cash flow statement is an important item to consider. This statement shows how the company uses its cash to operate the business and make investments. It also shows how much is borrowed from a bank or a bondholder. These figures are totaled to show changes in the company's overall cash position. This statement is important because it gives a more detailed account of how the business generates revenue and is therefore much more difficult to manipulate than an income statement. As you can see, there is a lot of information in the three financial statements. With all of these facts and figures, analysis can be a little tricky. This is why some investors may use ratios. There are several ratios that can help an investor compare stocks, but we'll focus on one of the most common, the price to earnings, or PE ratio. Let's say you have one stock that's trading at $6 a share, another at $35 a share, and a third at $132 a share. How would you know which one is the best value? Some might assume the $6 stock is the best value because it's the cheapest. However, this might not be the case, because a company's value may depend largely on the company's earnings. The PE ratio allows you to look beyond the price of a stock to see which company could be the best value. To create this ratio, first divide the net income, or earnings, by the number of outstanding shares. This number is called earnings per share, or
I'm going to
EPS.
stop this,
Next,
and we can pick
divide
this
the price
back
of the
up.
stock by the EPS to get the PE ratio. The first company is trading at $6 and has an
Only
EPS of
because
20
I want to
cents,
show you guys what I'm
resulting
going
in
to
a
do with this
PE of
paper
30.
trade.
The second company is trading
Yeah. And let me go find where it is, because this is just chat. I don't know where it's playing. So let me turn it back up. Okay, I'm trying to figure out where it's playing. Got it. Okay. So I'm going to show you guys where's the next scheduled Zoom class. We had one last Wednesday or just yesterday. Let me look at the calendar. So we had one on the 4th. The next one will be scheduled for the 18th, Wednesday the 18th. If that's okay with everybody. Our next Zoom, I'll put it in the chat. Our next Zoom will be Wednesday. Okay. Let's see. That would be the 18th. So our next Zoom will be Wednesday, January. Nope. Nope, not that. That's not it. So I don't know how to get rid of it, because it should have said January 18th. So let me redo it. Wednesday, January the 18th at 6 o'clock p.m. Eastern Standard Time. Okay. Let's see. Our next Zoom, Wednesday, January 18th, 6 o'clock. Yep, that's it. don't know how to delete that other one. So that's the time. And if you need it, if you want to be invited and you need the link, just email me at from lack to legacy at gmail.com. I'll put it in the chat as well. And if you email me, I'll send you the Zoom link. And if you're a subscriber, I will give you access to our wonderful resource bank. So yeah, don't forget, like, subscribe, share the channel. We want everybody to know. We want to share these resources with anybody who's interested in just learning this skill. So let me go ahead and pull up the screen for paper trading. Yes, there we go. Okay, so hopefully you guys can see this good. And we're at 263.32. I'm going to look at the chart and I'm going to just see what's happening here. And I think we can get the news here too.
Come back. Stocks are sliding today after those private payrolls surged in December, dashing hopes of an easing labor market. All three averages down more than 1% at the lows, but the hawkish Fed and recession concerns have boosted gold and silver. The precious metals rallying about 10% over the past 2 months. My next guest has been touting them for a while and is sticking with it as part of his diversified portfolio. Michael Cugino is here. He is president and portfolio
So I'm just
of the
watching.
Permanent Portfolio Family of Funds. Michael, I'm so glad you're here because sort of like I haven't had time to catch up on the precious metals story. Why are we up so much in the past couple months? The miners are up 30% since October. I mean, this is out of the ordinary.
Good afternoon, Kelly. Well, I think they were.
So just as fast as that thing jumped up, it can come right back down. That's why I never, can't get too excited.
There were some reasons for that. I think the biggest was probably the strong dollar.
We want long-lasting, strong, easily identifiable, high probability setups. I want something sweet like Jell-O.
Plus, you have the aggressive.
These kids are enjoying this pool. It makes you want, it makes you remind you of like popsicles and ice cream and stuff. I wish you could see them. They are having such a good time.
But maybe a direction we're going in, and the dollar is not likely going to sustain
Look at
the levels
this.
it has. Investors, I think, are taking a fresh look at the precious metals on a longer-term basis, as they should.
That is so
this
crazy.
Is a good hedge against stock and bond risk,
Let's see
against
what's happening here.
uncertainty and inflation and money creation. And those issues are all very relevant right now. They were last year, but prices didn't reflect that.
There's the
They continue
NASDAQ.
going forward.
Right. And so I guess now we have a situation where we say, okay, you don't want to
But
jump
look
in
at
on
Ford
something after the
shining,
action's already
outshining
happened.
everybody.
And are the same conditions that led to
Did
the
you all
rally
see
the last
Ford's
couple of months
chart?
still in place right
That
now?
would have, look at that, all day long, just
And I think that gold could go a lot
making
higher
money
as well as some
for
of
it.
the other precious metals. Obviously, like real estate,
From
every precious metal has its own individual
1190
dynamics, but the fact
to
of the matter is,
1238 at one
we just
point.
passed, what, 3 trillion
Wow,
plus in
that was a
new
nice little
spending in the
move.
last 6 months that
But
hasn't
there
really
was some
hit the economy yet.
news.
You've got
Ford
potential
had, there
recessionary
was some
scenario where
news.
gold
Let's see,
typically
it's not over
performs pretty
here.
well in that environment.
But generally, if you look at
And
these
so I
little
think the
dots
reasons,
here,
look, we look at it
they'll
longer
tell you
than
something.
spot
Like
trading.
here,
If we
Meta
were
had
trading at,
earnings. They mean something. This
might wanna
yellow
wait
one is
until
news.
a
I'm
better
surprised there
opportunity
wasn't one.
comes.
It may have been the other day
We would do
for
it once,
Ford.
figure out how much of this
But
you
yes,
need
Ford's
in a
looking good
diversified
today.
portfolio and as a hedge or whatever reason you want to own it, and stick with that. And then maybe you buy on dips, but you hold
Better
it
than
and
anybody
gradually
I'm
add
watching.
versus trading.
And like you said, this isn't the
Let's
whole
see,
portfolio. So what
Google.
else do you think is attractive for this year and for the kinds of
Yeah.
conditions that you just described?
Well, it's a mixed environment with a lot of volatility. We see a lot of volatility from last year continuing this year. I think there's a big push-pull between the idea that we're getting close to a recession or at best a soft landing. but and that's restrictive interest rates, et cetera. That's being offset by liquidity being pumped into the market.
Yes, they had something came in better than expected. I was just reading it. It's on my regular chart. It's not on that one, but there's like a little fan, and if you hit it, it's news. And so something came in better than expected, some kind of report. But earnings season is coming up too. So you guys, if you don't have access to the earnings whisperer, you want to make sure that you at least Google it and get it, because they publish weekly which companies are going to have earnings. And you want to know that, because if they have a good earnings report where things are looking good, you might see what happened to Ford. Or if it doesn't, pan out so well for them, they may plummet, and that makes money too. So earnings are a critical part of, investing too. So if I get them, see, yeah, y'all need to do that. Everybody needs to do that. That's like you need to have CNBC. You need that should be a part of your kit.
Right here. Now, still ahead, if you thought Tesla was the only EV stock getting walloped, you should know better. But shares of this company are also falling about 83% over the past year. It's not stopping two luxury car makers, though, from making a big push into the market. That's next on the exchange.
Well, I know what I can do. I can go in and, what did they say? Something MACD crossover. I can go in and set up these orders, so you can watch me do that. Since I'm thinking, I'll just do both. I'm going to do a call and a put. And I'm going to close this options chain up and show you what I'm picking and why I'm picking it. And somebody out there who's smarter than me can critique my selection or give me some feedback. I would appreciate that, seriously, because I'm going to talk out what I'm doing and why I'm doing it. Okay, so because I'm a new trader, I'd never like to get contracts that expire, really quickly, because I might find myself in a pickle and I need time for that trade to work itself out. So I would probably minimally pick this Saturday trade. And what's today? Today is, what day of the week is it? Thursday. See, and I don't want to give up a lot of time over the weekend. So, I don't know. But let's say it was a Monday. Then I would probably pick one of these. And since we've got the weekend coming, I'm going to pick this 12-day out. They're more expensive, but it gives the trade plenty of time to work itself out. That might be excessive. Someone could give me some feedback. Am I going too far out? But that's what I do, because I always want to have time in case the trade doesn't go my way. I got plenty of time for it to work itself out. I also generally go well into the money, and what I'm looking at is open interest. Like, is anybody else going to be in that thing with me? Because if there's nobody else in there, you don't want that. You can't even get out of it. So it's not a lot happening here. So let me reel it in a little and maybe go here and see. Okay, so there is some open interest here. And open interest just means how many people are in that, how many contracts are currently open. You all know what delta is. Let me turn this down. Delta has to do with how price reacts to the underlying. For every dollar that your underlying stock or your underlying equity increases in price, that's how much your delta is telling you will get paid. So 69 cents for every dollar that QQQ goes up, and theta is price, it's what we're paying for our contract in addition to the premium. This is price or time decay. So for every day that you hold it, this is what you're paying. So you want to know how much you're paying. You want to know how much you're making. You want these numbers to make sense. This isn't ideally what I would want. I prefer something like this, but it's just not a lot of open interest there. So you just got to pick and decide. So do you want to run the risk of not having someone there to purchase your contract when you get ready to sell it? Or do you want to get a better delta and a lower theta? So, and then do you want to pay more? So it's all those kinds of things. And so maybe you don't see anything you like there. Maybe you do reel it in a little. Let's see. Maybe it looks better here. So that's it. Okay, so this looks pretty good. This is a little better. I like how much open interest is here. I'm not concerned. That's nice. 46. I'm looking at the bid ask spread to make sure it's tight, as tight as possible. This is the kind of bid spread you want. You see, that's like 2 pennies apart. That's perfect. So, no contract is perfect, but you're weighing those things. So here's what I like. I like the theta. I like the low theta. I like the higher delta. I like the lots of open interest. Not so crazy about the bid ask spread. But, on the contrary, I don't know. No, all in all, we're going to roll with this one. And so what I'm going to show you is what the ladies and gentlemen showed me, how to put on an OCO order. So you double click here and we're going to buy custom. We're going to go to this OCO bracket and there you go. There you have it. So we're going to set it up as a template and save it so that you don't have to create it every time. I normally purchase 3 contracts. So you would set this to whatever you normally purchase or whatever you want it to be. And then let's see, 3. So what I'm doing is I'm setting up, I'm telling this order is saying buy these 3 contracts at this, within these parameters and sell it if I start to make, I'm going to set a limit for my top. Once it makes this much, stop me out. And if I lose this much, stop me out. So it's a limit and a stop. And so I'm going to go over here and set the parameters. And since I'm working with percentages, because I know that's just easier for me, I know what percentage. I don't mind. You can stop me out. Okay, I'm going to be realistic. You can stop me out at 20%. I'm just setting it high because I have high hopes. And you see, I changed this to percent because when you first look at, there's nothing over there. So I'm going to do the same thing for this one. I tap over here. And once this comes up, I'm going to change it to percentage. And then this is the percent. I like to set a tight. I don't like to lose a lot of money. So to be honest with you, truthfully, my stop is tight. I'm like at 5, okay, 6%. That's it. And so what I just did was I'm executing an order to buy these. I'm going to save it. I'm not going to execute just yet because I'm looking at the price. I'm looking for a good place to get in. Although right at 263, right there, it might be a good place to get in. So I can either confirm and send this like right now, but I want to look at my chart before I do. Or I can hit this. It says save custom. Wait a minute, what's this one? It says save custom template. And that's what I want to do so that I don't have to do this every time. I'm going to save it. And I'm going to rename it. I'm going to name this 3QQQ calls because that's what it is. 3QQQ calls. And save. And so now I have this custom template. So every time I get ready to place an order, this will pop up. So now I'm going to confirm and send, and I'm not really sending it. I'm going to read it over, blasey, blasey, bluesy. You shouldn't do that. You should really read it. But I want to look at my chart because something's going on over there. So you read this through. You read it through 2 times out loud. You look at what you're paying for the 3 contracts. It's about $1,900. And you read all the upside downside and we save it. So that is saved. And I'm going to go over to the chart because I don't know why my chart does that. I'm going to go look at this to see if we are at a place that might make sense to place an order or to buy a contract. So we're doing this, playing right around $263. Well, see, that makes sense. I could draw definitely. So let me do it. I'll go ahead and draw this just on this one. Because we were talking about this today, how this is trading in a range. You can see it. This is what she's been doing most of the day. And so she finally broke out of it. And where this was like, you see how it was kind of containing it? This was support, and it was resistance, and it breaks out. And now this, instead of being resistance, now becomes like a support. And so it's bouncing on top of it now. So support is what prevents it from just free falling, and resistance is what keeps it from just floating up and away. And you can see that this big volume green candle cut right through that resistance. And so now these candles consequently are on top, and it is no longer serving as resistance. This price point here is serving as support. And they're just bouncing off the top. So I'm just going to sit here and see what are they going to do. Are they going to continue? Are they going to go up? What are they going to do? Are they going to bounce off of this? Are they going to come back down? So you always want to pay attention. And that makes perfect sense, because that's right at $263. Makes perfect sense. And this was right at just about $262. So yeah, it's been trading in this dollar range. All of this is, I just, that makes sense. It's just been range trading in this $1 range. And so now we get this pop, and what are you going to do, lady? Is it go time? So then you start looking at all your other indicators. You start looking at your MACD. See, this is reversed in my, you see your RSI, you see your lemon squeeze, and you just watch. That's the name of the game. Some bearish wicks. Zoom out to the 15. Okay. Thank you, Johnny. Zoom out to the 15. Some bearish wicks. Okay. And by this, you mean bearish? Yes. Johnny, I'm assuming you mean this, because this green candle seems pretty strong, but there must have been some sellers present to push this price down. And for sure, right here, definitely sellers were present, because this candle, wow, is one of those dojis that we talked about. And again, that makes sense why this next candle is red. And look at the diminishing volume too. So Johnny, is that what you meant by these bullish, or did you say bearish, by bearish wicks? Are those the wicks that you were referring to? Mm-hmm. Yeah. And they show, like what we were talking about yesterday, that there are sellers present, and so much so that they pushed the price down, and almost they could have overtaken and been actually, even though in this 15 minutes, buyers finished in charge barely. So you can tell that there's lots of selling pressure there. And then you see this red candle come in, and it all makes sense now. It just all makes sense. These wicks are telling you something. So I know Johnny is always reminding me to pull out, because that tells more information too. I'm telling you, Frank and I were talking about that today. Johnny, you have made an impression. Frank and I were saying the same thing. Pull out, so you can see the bigger picture. Pull out. Okay. And I do, but I never stay there. So I should probably spend some more time here, because there's information here. Look at the RSI right smack dab in the middle. Look at the beginning of this trend. And so those are the things. Wow. Okay. I'm always now more cognizant of volume, because volume has so much to do with, is a trend sustain, is it building? Is it waning? So it almost feels like a bunch of touchy-feely stuff, because you aren't calculating with a calculator. You aren't figuring out some formula. You are interpreting. You are looking and interpreting. So, yeah, you got to be up for that because it's constant. That's all it is all day. The overall structure of the market. Yeah, I'm telling you, that's why I'm sitting here just talking and chopping it up with you guys. Hey, L. Yep. You can see all that, or just sideways, just nothing. Here, it just traded right all day, right in this little dollar range. That's it. That's all. Finally bumped up here a little bit above. It's able to sustain a little bit above 263, but barely. We haven't even gotten back to the days where we opened. We opened at 260. Well, yeah, opened. Yeah, opened at around 264.03. Yeah, so yep. All in this little range. Nothing like those days we talked about, those beautiful days we saw. We had some beautiful look. I don't have to keep showing y'all. This was a beautiful trading day. That's all I'm going to say. These are the ones you wait for. And see, you can see it on the 15-minute, but I think you can see it better on the 5. You can see how dramatic it is. You know, that drop. So yeah, it's like why fool with that? You know, why fool with this choppy crazy like this when you can wait for days? You know, even this. You know, at least a swing, give yourself a chance. But really seriously, if you just wait patiently, QQQ, I'm telling, she'll serve them up. If you just wait, because this was one for the books. If you just wait patiently. That was all kind of, you know, and then and finish lower. So yeah, that was you have to be patient though. That's what I'm learning. That's my lesson. That's the lesson of the day for me is don't overtrade. We may continue to chip until the unemployment numbers in the morning. Yeah, probably so. I don't know what time. Do you know what time they will come out? Is it usually like 9 or 10? Yep. Let's go see what everybody else is doing. Let me go take a peek at SQQ. Y'all, I am going to switch it up because I want to learn something new. Okay, so it's inverted. Let me see. How did QQQ do first thing in the morning? Oh, it's flipped. QQQ was down and then up. And SQQQ is the opposite. SQQQ did the exact opposite. It was up, then down, but then the same, and now it's going up. I see. And let's see, what are options contracts on here? Let's get rid of that. Let's see what contracts cost for SQQ. Let's see, we got 15 days out. Oh, a lot of open interest. Oh, what? Wow, okay. Let's see what this contract costs. I'm going to set up a buy custom for SQQ. Well, this is MI, whatever, but we'll set it up all the same. So again, I'm just adjusting the number for the number of contracts. So I want to sell the right amount. I'm buying 3, so I'm setting this order up to sell 3 in the event that I reach my price target in terms of profit, or in case I get to my limit, my loss limit. And so I like my stop tight. So let's change this to percent. And I'll go stop me out at 20%. Paper money. And somebody needs to talk to me about that because I don't know if that's appropriate, but that's where I'm setting it. And I like my other loss to be pretty tight. I don't want to lose too much. So I'm usually like, truthfully, about 6%. That's the real truth. And I'll limit in. So I'm going to save this. And I'm going to say this is 3. Oh, shucks. Oh, no. Okay, I don't know if y'all can see the window when it opens. I might just be talking. But anyway, so I'm going to save it as 3 SQQQ puts. So these are calls. SQQ calls. And save. So that template is saved. Okay. Wow. I want to see how much those cost. Oh, well, those aren't cheap. That's 2,200. Okay. Let's save it. And so we've got some SQQ calls. We got a bunch of calls here. Let's see. I don't know why, but SQQ. So it's the opposite. SQQ is a leveraged. Okay. Tell me. SQQ contracts probably will be high because they move 3 times as much as QQQ. Is a leveraged ETF. So what does that mean? I need to place this paper trade because I want to see what that means. I'm going to place a paper trade with a call and a put, and I'm going to stretch it out a few days. I'll go out because I want to see what the money looks like on that. That sounds intriguing. So I'm going back in. Okay, I'm going back in. And I'm going to go back to the options chain. And I'm going to go out. Since we got paper money, it's paper money. Let's see. Okay, I'll go out 15 days. And this looks good. This is, I'm okay with this. It's a lot of opening. No, we could do this for a lot less. Let's go down here. That's still a nice. Everything looks good. Let's go. We're going to buy custom. And I'm just going to buy them flat out. Let's see. And I would buy 3. So let me do 3. I'm curious about what the money looks like. Okay. Can you guys see this? I hope you can. And I'm going to still set my tight stop at 6. I'm still prepared to limit in. And we're just going to go with these. Okay, let's in. We got nothing but time. We got nothing but money. Okay, so we're filled. I'm going to also do the same thing with some puts just to see. And if I were to pick puts, I'm going to pick something I really would pick. I'm looking at delta theta and all of that stuff. Open interest, delta theta. I don't know. But that's cool. I like that it's a lot of open interest in it. Let's see, maybe something else for my put. Are we working on it? Did it get filled? Y'all do know I will mark it into an order. I will mark it in. Okay. I'll let that work for a little bit. And I'm going to keep looking for. Am I doing something wrong? Am I doing this? Since it's leverage, you only need one option. Only need one. Okay. Okay. So I'm going. Then I'll do that. I'll buy 1 put. Thank you, Ms. Vice. Okay. So only pick 1. Okay. I don't want to go out that far. I don't even want to go out that far. Let's go here. Put. That doesn't look right. Let me go back here. Okay. I'm gonna roll. Well, just because we're gonna buy here, and we're gonna buy custom. We're only gonna buy one. Okay. Whoops. All right. So I'm getting this order together. We're gonna present. I'm gonna do it just the way I did the other one, except I got 3, so we'll see what happens. Okay, and then I'm gonna stop tight like always 6, and I'm just gonna go ahead and send them, and we will see what happens in our paper money account. They're working on both of those. Bought, filled. I don't know, still something working, but okay. So let me go over here to the home screen. Will that work? Okay, well, we got some money. We're making some money somewhere. I don't know who. Okay, so here are our SQQ purchases we just purchased. So we got, and something's still working. Or is it? View order. What do you mean working? Well, price is moving, so working my foot. Let's see, maybe that one's working. Let me view this order. I don't know. But at any rate, so we got those going. What else is over here? Oh, these QQQ. What are these? Days. Oh, that must be just what we made on them. I don't know what that is. And then whatever this is from Amazon, we're losing money on. I'm selling it. Okay. And this QQQ, we might as well realize those gains. It's so much easier when it's paper money. And so here's our position. So we've got our calls and our puts. That's the only thing that's working. So basically we kind of broke even with our QQQ and Amazon, whatever. We came out at $122 and we got something cooking over here. So we'll see. I'm going to, let me go look. All right. So that's it. This was a snooze of a day. Oh my gosh. What a snooze. Even the little pop-up wasn't that exciting. And it's 2 o'clock. I got a feeling this is the way we're going to ride out. Well, we did get up $1 because remember we were playing right around 262. We did get up to 263. We're to, what's this down here? So we did get up $1. That's crazy. Let's look at Market Watch.
For you have these kind of metrics, and we were all sort of going, that's interesting, that's a little strange, and boy, don't we know now just what a struggle they've had and are having. So let's talk specific before we let you go. Okay. What stocks do you think are a buy here? What names do you think investors should be really worried about?
Yeah, so we approach stock selection from both a quantitative and macro approach. So it's not specific fundamental analysis. So, again, we like to give examples of stocks that show up and overlap in both our fundamentally driven or quantitative models, as well as where we want to be avoiding in terms of the macro outlook. So today, I'll talk about two stocks, Booz Allen Hamilton and Allstate. Those are two stocks that are in our fundamental long model. So what are the fundamentals? Stocks that have lower beta, higher profitability,
Nice. So
better
there are
realized and
trades.
current earnings revisions. So companies that are growing and they're not super cyclical, and they're also counter-cyclical. On the sell side of things, Block Inc. or SQ and Comerica, which has been a name that's been in our short model for some time.
So I have
These
to
are
thank
stocks
the
with,
community because
red
I can
flag
now place an
fundamentals that
order
are
with a
also very
stop and a
cyclical.
limit.
So combining
That is
micro and macro
amazing.
is our
That's amazing.
approach,
Thank you. I
and these are
learned that
stocks
right
that
here.
pop up to the top of the
I
list.
am
Come
looking
back
at
when you have better
different
news. I guess
equities.
Booz Allen and
I
Allstate.
can't
You
say
had
thank
some,
you
had
guys
some better
enough.
news for them. No, Michael, we really appreciate
Can't say
it.
thank you
so much for
enough.
joining us today.
All right, thank you. Bye-bye.
A big move is setting up once we break out of the range that we've been in since mid-December. I know, Johnny, but is it going to break up or break down? And when is it going to break? I hope I'm sitting in front of my computer. I'm sure I will be. I'll just be sitting here waiting and watching.
Earnings now down about 7%. Should you pick up this stock on the cheap? Our trader will weigh in later this hour, so stay with us for that and much more on Powerline.
Look at SQQ. Let's see what we're doing. Oh, shoot, somebody on the move. Okay, our calls are at break even. And let's see. Price is moving pretty slow. This is interesting to watch. I'm excited, Johnny. I can't wait. I need it to break. Okay.
this CES that we're selling our first Roku designed built.
I forget when I take
sold
myself out,
television.
the sound
And
is
that the reason we do that is that it allows us to continue to drive innovation, a
I'm
platform
gonna
for
go over
innovation
here and check out
that we
the
then give back to our TV partners.
But so it sounds like in a way you see these hardware devices as being loss leaders, but you're launching them at a time when there's concern about consumer demand. There's inflation, there's talk of a recession. Isn't this a particularly tough time to be doubling down on the hardware side of the business?
Roku's a service company. We generate billions of dollars a year in revenue from advertising and from distributing streaming services, and we have a great platform to do that. But the core of that business is the market share of our platform. And so 70 million plus active accounts. The way we get that is through selling TVs and players, and that's a big focus for us.
Now, let's talk a little bit about advertising. You said you generate revenue from advertising, and obviously there's been concern about an ad contraction. There's been a concern that some of the streaming players are going to be spending less on content and perhaps even spending less on marketing, which is obviously important for you. Talk to us about what you anticipate in this economic environment right now.
Roku's streaming hours were 87 billion hours of streaming last year, meaning our viewers, those 70 million active accounts, watched 87 billion hours of streaming. That was up 19% year over year. The world is moving to streaming. All TV is going to be streamed. That means all TV advertising is going to be streamed. And Roku is the #1 streaming platform in the United States. So, it's just, there's temporary headwinds, obviously, in terms of the ad business. It's affecting us just like it's affecting everyone. But the world is going to continue to move in streaming. The ad business is cyclical. It'll come back. Roku is extremely well positioned as the #1 streaming platform.
So in addition to those ad headwinds, you have the fact that you now have new competition for ad-supported streaming from Netflix as well as Disney. What are you seeing so far? I know that both of those businesses, those versions of their streaming services are relatively new. Do you think they're going to really eat into your revenue when it comes to the Roku channel?
If you just going back to what's happening in the big picture is all TV ads used to be on traditional pay TV. Those viewers are moving to streaming. We're still pretty early in that process. Most viewers have not switched yet. And as TV ad dollars move to streaming companies are getting this advertising. It's becoming mainstream. That's what you would expect.
Anything specific you're seing as CEO of Roku with your advertisers and your clientele?
Well, we're seeing that if you look at our overall ad business, obviously the ad business, the industry is hurting right now, but the traditional pay TV ad business is a lot lower than the streaming ad business. So streaming, if you look at where the ad dollars are going, they are moving to streaming. We are seeing that in our business. And the big picture also is that in times of economic uncertainty is when businesses make hard decisions. And the biggest obstacle to the growth of our ad business is just all those TV dollars moving from traditional TV to streaming. And this economic downturn in advertising is accelerating that transition.
And we are unfortunately almost out of time. I just have to ask a quick final question on M&A. Does it make sense for Roku to be a standalone business? You've been speculated about as potential acquisition target or partner for a deal. What does the future hold?
Like I just said, the world is switching to streaming. It's a huge opportunity. Most of the opportunities in front of us, and that's what we're focused on, is building our business.
So no comment on M&A, but I have to ask. Anthony Wood, CEO of Roku, thanks so much for joining us here today.
Thanks.
Guys, back over to you.
Julia Borsten and Anthony Wood, our thanks to you both today. We appreciate it. Up next, tech struggling again today with some key chip stocks back in the red. There's NVIDIA down more than 2%. We'll break it down next. And further ahead, 2023, a search odyssey. Microsoft looking to unseat Google's search dominance, betting big on AI to get the job done. Plus, the FTC proposing a ban, get this, of non-compete clauses. More power potentially in the hands of workers. Those details when Power Lunch returns.
Whether you're an experienced just getting started, TD Ameritrade offers a webcast that's right for you. Are you an active trader? Our active trading webcast series is designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcast and start learning today.
I'm Nicole Petalides coming to you live from the New York Stock Exchange every single market day, from the opening to closing bells. Tune in to the TD Ameritrade Network.
When traders tell us how to make Thinkorswim even better, we listen. Like Jack. He wanted a streamlined version he could access anywhere, no download necessary. And Kim. She wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web. Because platforms this innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Trading has changed forever as a new generation of investors make their impact on markets.
It's more important than ever to navigate through the frenzy of meme stocks, IPOs, and the next wave of tech.
And that's where we come in, discussing strategies and example trades on trending names.
Take control of your financial future. Next Gen Investing, weekdays at 1 p.m. Eastern, only on the TD Ameritrade Network.
It's a 13-hour flight. That's not a weekend trip.
15 minutes away.
Why not? I'm going to take off. Now, you downloaded the TD Ameritrade mobile app so you can quickly check the markets?
Yeah, actually, I'm taking one last look at my dashboard before we board.
Excellent. And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
You two are all set. Have a great flight.
Thanks.
We'll see ya. They're getting so smart.
Choose the app that fits your investing style.
TD Ameritrade Network has arrived on the floor of the New York Stock Exchange new location with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, bell ringers, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
Welcome back to the watch list. I'm Caroline Woods. It's time to talk about cruise lines. And for that, we'll welcome in Paul Golding, lifestyle and payment analyst at Macquarie Group. Paul, good to have you here. So we're going to talk about cruises, but first I just want to talk about the overall sector for just a second, because I was taking a look at my watch list and seeing that travel stocks actually, for the most part, bucking the downtrend today. We see cruise lines, airlines higher, seeing Expedia, Booking.com higher. So seeing some strength in the market today. But just in terms of travel stocks overall, what should investors be? How should they be approaching this market or this space, given all of the macro headwinds that it faces?
Well, thanks for having me on, Caroline. In terms of the pieces of the travel sector that we cover, and in particular for this conversation for cruise, while we've been hearing a lot about consumer and potential consumer weakness, the key focuses for us have been the abatement of COVID protocols and inbound testing protocols, unlocking the international opportunity, the opportunity for that to drive incremental experiential spend relative to 21 and early 22, and how that might drive this long tail reflation in travel spend, as we've seen some of these persisting COVID overhangs come off finally. And so that is, in our view, bucking some of this trend or discussion around potential consumer weakness for spending in the sector.
Okay, so when we talk about Carnival, it's actually up about 2% today. You have an outperform rating on the stock and a $10 price target. It's inching closer to that. It's trading around $8.93. But why the bullish call on Carnival?
Well, we're bullish on the space deleveraging as the operating leverage finally comes back in full force. We still think 23 is a transitional year in the sense that at the outset of the year, we won't have full occupancy in our view relative to baseline as we had in 2019, for example. But we are getting closer. We now, in our estimates, forecast a $4 billion adjusted EBITDA number, which relative to 2019, delivery on our estimates. Last year was a $1.7 billion EBITDA loss. So we see how this operating leverage picture for cruise lines is able to potentially deliver a really strong earnings result. And so we see that starting to come to fruition in 23.
What's demand looking like for cruise lines right now? Because to be honest, I've never taken a cruise. I would have even less desire to take a cruise after COVID and seeing some of those documentaries and being trapped with all those people in a pretty small space. But I know that there are people who are ride or die cruisers. Well, how does demand compare to, say, before the pandemic?
Well, booking volumes have been at or above historical levels and at pricing that is above historical pricing. So if that's any indicator of the strength of the return to cruise fan, as well as the strength in cruise lines' ability to cater to new to cruise despite this post-pandemic sentiment that you're referring to, I think those both go to show that the cruise lines are able to deliver a value experience that enjoyed by their customers. Carnival, for example, on the most recent result, noted 99% of 2019 capacity levels in service in the fourth quarter, and that they're closing the gap to 2019 levels on new to cruise mix.
We've seen consumers, though, in this shift from spending on goods to services, they're willing to spend anything to travel because they hadn't been able to travel for so long. So, it's that revenge travel, if you will. But if inflation remains high and we continue to be stretched, money eventually runs out, right? So will these cruise lines continue to have this pricing power, or is this a consumer that if we do in fact head into a recession, if we start to see more job cuts, the unemployment rate tick higher, that the cruise lines are going to be susceptible?
I think the question is, will the consumer continue to want to travel to any degree? The reason we see that as the baseline question here is that the cruise experience is a value experience relative to the land-based alternative. And so if you are looking to travel at all for leisure purposes, cruise is actually quite competitive. And so while you may say, well, you're going to see a consumer that's less likely to spend on these leisure experiences, they might actually be more willing to get over the line to actually pull the trigger on a leisure experience if it's cruise, and cruise is delivering this value versus the land-based alternative.
You're telling me that I might eventually have to take a cruise because that's all I'll be able to afford to do. All right, let's just talk about some of your other picks. Carnival, obviously, when you take a look at it versus, say, Royal Caribbean, Norwegian, the worst performer over the past year. So what other names would you like in this space?
We like Royal Caribbean in this space. In terms of operations, it's, in our view, managed the securitization basket best out of the group, managed its leverage best out of the group. It's also been able to ramp back to close to normal operating levels more quickly than its peers. But this is in the space, generally a consensus favorite. And so if you're looking for other picks in the space, Carnival, in our view, has been a bit less loved, given maybe more of a transitional period through COVID, continued capital raises. But some of that could deliver solid performance on the back end in terms of the transformation of the fleet. The company's disposed of over 20 ships throughout the pandemic and is still looking to deliver pretty consistent capacity relative to 2019 levels as the new ships that come on have more capacity and are more efficient, which leads to better yield, better EBITDA per sailing. And so we just have to let some of this play out over time as the operation gets back to normalcy.
All right, we have to leave it there, but appreciate you breaking it all down for us. Paul Golding, Lifestyle and Payments Analyst at Macquarie Group. Thank you so much.
Thanks for having me.
Still ahead on the second half of the show, Ben Lichtenstein will give us an update on the uptick we've seen in the dollar today. Then we'll get a look at private companies and if we'll continue to see less and less IPOs in the new year. So we had to break. Let's take a look at some of today's winners and losers in the S&P 500.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to tdameritrade.com/webcasts and start learning today.
Thinkorswim by TD Ameritrade is more than a trading platform. It's an entire trading experience. With innovation that lets you customize interfaces, charts, and orders to your style of trading. Personalized education to expand your perspective, and a dedicated trade desk of expert-level support that will push you to be even better and just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Before diving into the markets, prepare for the trading day with the Market Minute newsletter. Videos, market insight, and more delivered right to your inbox. Go to tdameritradenetwork.com, click on the pop-up to subscribe now.
Binge watch the market with TD Ameritrade Network.
The dollar, interesting activity.
So now I did some deep research into this.
People are out of the house and engaging with the U.S. economy.
Tune in 24 hours a day, 7 days a week on tdameritradenetwork.com and all your favorite streaming services.
You can also take us on the go with our CarPlay-enabled iOS app and our audio-only podcasts. TD Ameritrade Network, available anytime, anywhere, on any device.
Welcome back to the watch list. I'm Caroline Woods, coming to you live from the floor of the New York Stock Exchange. Let's take a look at the markets with 90 minutes left in the trading day. Stocks firmly in the red. Dow, NASDAQ, S&P, Russell, all down almost 1% or a little bit more on NASDAQ, the worst performer today, off about 1.2%. To dig into today's market action, let's bring in Ben Lichtenstein, Senior Futures Contributor here on the network. So Ben, I guess the good news is we're off the lows. The bad news is we're still pretty deep in the red. What's going on with this market today?
Yeah, lower on the day, off lows, as you mentioned, Caroline, but even today's lows, unable to take out lows from earlier in this week. So for the most part, relatively range bound and kind of contained. We'll get into that a little bit more in a second, but I noticed the SPX stayed down to 3802, as I mentioned, still holding above the lows from earlier this week. I think it was around Tuesday, well below the high from earlier this week of 3878. I looked at the NASDAQ down to 10,786. Just to give you an idea, that's off the mid-D's high we saw up around 12,166, so about 1,400 points here in just a couple weeks to the downside. Now, some of this tied to the numbers that we saw earlier this morning, the jobs reports and really strong labor conditions that remain here in the U.S., but some of this also tied to Fed speaker comments. We heard from James Bullard, who said the Fed policy is the rate is not yet in a zone that can be considered sufficiently restrictive. He said it's getting closer, and while inflation's moderating, it's still too high. We heard from Fed's
Bostic, who said basically that they remain determined to beat inflation, and that's the biggest headwind to the U.S. economy. Fed's Esther George, said that high inflation requires Fed action and favors rate hikes above 5% and staying there for some time. So that's going to weigh on the indices when you get that kind of a hawkish tone along the lines of what we heard from the minutes yesterday. And here you can see again a reaction to that. Now, I also noticed that we're seeing again some activity in terms of rates. They're right around 3.7%. And I mentioned the indices kind of contained in terms of just this week's trade, today's versus the highs and lows from this week. But even as you look at some of the bigger picture levels, again, we're kind of range bound, holding for the most part contained. And we're seeing a similar situation with rates, as mentioned here, around 3.7%. Again, holding well below the 4.3 high that we saw earlier last year, and around a 2.5, 2.6 low that I've got my eye on. So again, around 3.7, not exactly in the middle of that range, but very much contained as well.
So all that hawkish Fed talk, is that what's making the dollar tick higher today?
Well, I think there's a couple things. I mean, we've been watching foreign currencies, which have been weakening recently. Again, that's helping the dollar kind of come off some of the lows that we had seen. And again, those foreign currencies had strengthened earlier, and that's what was weighing on the dollar off that 114 handle. The other central bankers that have turned hawkish along with the Fed, and just the idea that the Fed's heavy lifting has been done at this point. And, you know, even just this week, we saw PPI coming in out of Germany. I think it was up around 25%. So producer price index down from about 30%. It's easing, but still well above where they want to see it. So, yeah, some of these other foreign currencies coming off a bit here, I think, is helping the U.S. dollar. The indices selling off that oftentimes will buoy the U.S. dollar as well. And then definitely kind of a safe haven trade we're seeing come back into play. I did notice, though, speaking of contained, though, I've been watching the dollar on the bigger picture. You've got it right around 104, Caroline. The low from last year, 94. The high from last year, 114. So, again, well, we're at 105 today. We've come off that 104 low from this week, but hanging out right around the middle of the range that we saw last year, even in the U.S. dollar. So it seems like a lot of markets are kind of just in a waiting, holding pattern for a little bit more news. The bit we've had recently, again, Fed minutes and some of the other data just hasn't provided that catalyst for a breakout yet.
Yeah, and actually Bitcoin's higher today. So maybe a safety trade there too. Just kidding. Ben Lichtenstein, always a pleasure. Thanks so much. Mm-hmm. It's time to discuss, well, let's shift from public markets to private markets, talking some PE now with our next guest. For that, we'll welcome in Christopher Kersey, founding managing partner at Haven Crest Capital Management. Christopher, great to have you here with us.
Hey.
So, Christopher, I was looking through your notes and I see, despite uncertainty, confusions, and turbulence in public markets, we're feeling that 2023 could be a boon for private equities. So what's going to help it regain momentum?
Well, I tell you, I see a lot of red on all your public market indices before this segment. And, you know, Charles Dickens started his novel in The Tale of Two Cities with that statement. It was the best of times. It was the worst of times. And nothing's a perfect analogy, but it's interesting. I mean, lots of uncertainty, inflation, interest rates in the public markets. It's kind of the worst of times there. But in a lot of ways, in private equity, in the private markets, it could be a very good year, as you intimated in your initial commentary there. I think deal velocity is going to increase in private equity through a number of different routes that I can get into. But this is going to be a year where the prescient and the prudent and the wise general partners in private equity get aggressive, because historically we've learned that the best performing vintage funds are those funds that deploy capital in really rough economic waters. So it's time to get aggressive. But I do think there'll be more deal velocities in 2023.
Well, I want to talk to you about where we're going to see some of those deals and what sort of deals we're going to see. But I guess my question is, this is an area where we saw a pretty stark slowdown last year. And so what's changed this year that's going to be a boon for it?
Well, three ways to answer that question. First is on the private company valuation side, those valuations on the private market stayed surprisingly and stubbornly high throughout a lot of 2022. Maybe 5-10% correction is what we see.
here in the lower middle market in healthcare for U.S. private equity investing, but it wasn't the same kind of correction that you saw in the public markets. Now, it's a well-known fact.
So you
it's
see what we're
well
waiting
understood
on.
that the private markets will lag the public markets. But these
Everybody.
valuations on the private company side will start to moderate. They will go down.
Hey,
and that's
living
a
my dream
direct
trading.
spurring of private equity deal velocity. But what's also interesting is the other type of deal that will, I think, increase are these take private transactions. This is when private equity rummages through the public markets looking for companies that are market leaders in very interesting market spaces that are oftentimes profitable, but their share prices have been plummeting over the last 12-ish or so months. There's a well-established track record in private equity for firms doing that and doing it well. I mean, you can buy public companies for material discounts. It was 7% last year. The average the average discount to the 52-week high for the average target company. So there's kind of your baked-in return right there if you can show that you can add value during your hold cycle.
I guess nothing's
as a private
happening
equity
here.
fund. But this is an important fact also, Caroline. There were 1,000 companies that went public during the bull market of 2019 to 2022. 1,000 companies. 2.6 trillion in inception value or initial market capitalization, but they're down on average 45%. You look at the SPAC index, companies are down 70% on average. You look at the PE-backed IPO index, they're down 45% on average, and the VC-backed IPO index is down 60%. It's a lot of lost value. Now, there are some of these companies that I would call kind of pre-revenue .com zombies that still have some demonstrating of their business model to prove, but there are lots of companies that I mentioned before that are profitable. Those are the companies in interesting growing market spaces, including in healthcare, that are the prime targets for PE.
So you mentioned healthcare. Where do you expect to see the most activity in terms of this deal-making space, especially in the take-private space? Can you list any companies that are kind of flashing signals for, okay, this is, a good option to take private?
Well, we don't talk about investment prospects for us, but what I do want to say is in terms of some of the big themes that are taking hold in both the public markets and the private markets, let me first mention behavioral health. The pandemic has spawned an epidemic. The pandemic has spawned an epidemic, and that epidemic is in mental health issues that are plaguing both the adult marketplace as well as the adolescent population. We're private equity investors, so we're looking at some public opportunities, but mostly we're looking at private transactions. We invested in a company called Apara Autism Centers that focuses on the adolescent marketplace. It's one of the largest adolescent autism service providers in the state of Texas. Tyler Moore, the CEO, is doing a phenomenal job. We're now growing nationally, but it's targeting the adolescent behavioral health plague that's ravaging through the younger demographics in America. But you can also play from an investor's perspective, behavioral health from the adult perspective. There's a plethora of substance use disorder or SUD platforms you can invest in, but also from a diversification perspective in behavioral health, you can invest in alternate site models, companies that are basically providing behavioral health services, psychology, psychiatry, et cetera, in venues that you normally wouldn't expect a healthcare company to be operating in. For example, school campuses. One of our companies is called Effective School Solutions. CEO Duncan Moore is on fire, but we're providing on-site, on-school campuses, mental health clinical services for untold numbers of K through 12 students. So huge tailwinds in this subsector of healthcare and huge clinical needs. And quickly, the other big trend, Caroline, is value-based care. Now, value-based care portends, and is a little more relevant to your question on some public company opportunities, because there were a number of companies that went through the de-SPAC route or the IPO route that actually have been underperforming relative to their peers or to some other subsectors that might be candidates for those take privates. Now, let me just paint 30 seconds on what value-based care is for the audience. This is the mega trend within healthcare. This is a $2 trillion a year industry where it's really the anecdote to fee-for-service model, where provider X does procedure Y and gets paid Z amount of dollars. It's basically the more you do, the more you get paid. We'll flip that on its
They're gonna
head
kill us all.
with value-based care, and providers are incented to look longitudinally and make the right long-term healthcare decisions for their patients. Talk about aligning incentives. Now, patients like this, the payers like this. Very important to talk about the payers. They're the cash-rich entity in healthcare, and they're willing to spend to buy companies and to invest in opportunities. But you look at value-based care, providers win also because it's a much more predictable stream of revenue for them as they build their own practices for a physician or as they run their enterprise if they're a hospital CEO. But value-based care, you can do the same diversified approach, Caroline. You can look at primary care, Amazon buying One Medical for several billion several months ago. That's receiving pre-regulatory approval. It's still in the process there. But you can also play value-based care from a specialty care angle. We de-SPAC'd a company called the Oncology Institute with Deerfield Management and Fidelity Research about a year ago. It's the nation's leading cancer value-based care company. But you can also play value-based care from the data analytics perspective if you want to do a little more technology and less services. And there are a number of companies that are doing that in the public markets that also haven't been performing well. But there's a long answer to your short question.
All right, well, lots of ways to play it. Appreciate you breaking it all down for us. Christopher Kersey, founding managing partner of Haven Crest Capital Management. Thank you so much. Really appreciate it.
Caroline, thank you so much. Appreciate it.
Have a good one. Still ahead, we'll bring in our panel to discuss all things cybersecurity and what we can expect from that sector in 2023. Stick around, TD Ameritrade Network. Watch us. We'll be right back.
I know, it was an easy day because there wasn't a lot to do, but you got the chance to see that's real consolidation.
Many traders may be willing to take on additional risk in pursuit of aggressive growth in their portfolio. More power to them. But if you're looking for a less risky alternative, you might want to consider checking out our income investing course. In the income investing course, you'll
just nothing in there.
Designed to generate regular income and preserve capital.
I got out of 2 puts in the morning just in the nick of time because after that it was nothing left.
Different ways to allocate a portfolio and create a payment schedule. Then we'll take a deep dive into
it's 3, yeah. I don't see anything jumping off really too exciting. You could just see from even the RSI is like just kind of chilling. It was an easy day.
Along the way, you'll watch videos, take quizzes.
Yep. And tomorrow, I think there's some announcements. So we'll see if we get some bounce off of the announcements for tomorrow. We'll see. Let's look at Microsoft.
Binge watch the market with TD Ameritrade Network. The dollar, interesting activity.
So now I did some deep research.
Let's look at it over the course of, let's look back 20 years. Let's just look at the whole thing. We're going to look at it by quarter. Okay. And so you can see a low of, at one point, you could get the stock for $14, Laura. Back in 2009, you could get it for $15. At its high, it was $350. That's what I'm telling y'all. On sale, and that wasn't that long ago. When was that? That was in October 20. Or was it 2020? Yeah, I want to say October 20 or either October 2021. Let's see if we get a date.
Constant assessment.
Anyway, that wasn't that long ago. Matter of fact, let's blow it up so we can see. Yeah, that was in October 20.
Hard to find, like catching lightning in a bottle. In uncertain times,
it's in 2021. Yep, October 2021. October 2022. That was less than 2 years ago, not even 18 months ago. Microsoft was trading at $350 a share, a high, and then it has just been in this little dip ever since. It's down to $224. That's $125 off. Sheeks, that is 25%. Or something like that. Don't quote me, but that's significant.
research analyst, technology infrastructure
Okay,
team,
that's what it
New
looks
Street
like over the
Research, and
quarter.
Gordon Lawson,
Let's look
CEO
at
of
it
Seal.
over the
Great to
last
have you both here.
year.
Antoine, let's start with you.
One
We
day,
know
1
companies
year.
are reassessing their budgets
Yep,
in
it was
the
a
new
high
year.
of
How could this impact
326. So it's
cybersecurity?
$100 off a
Yes,
year
I
from.
think cybersecurity in general
Wow.
is a good place to be.
And this
At
is
the
what it's
moment.
doing on the
Because it
daily.
is in
So,
essence fairly resilient
and
to macro.
nice little
So
gap
that you as an
down.
investor
Usually,
should remember
I
to
don't know,
invest in
Johnny or
higher
somebody else could
vendors
tell you. I
that
think
are
when it
seeing
gaps down like
deeper
that, it'll try to
technology
fill
reviews,
that gap back in. So,
transformational projects,
but
and
look,
those
we got a
moving in real
doji sitting
time.
up there.
So if I had to choose specific
Telling
names,
you
I would
beware,
recommend
beware.
to
And
invest
then I
in
love
one
these little
with a
stair
robust
steps.
cybersecurity
Those
portfolio
3,
that can secure both
I think those are
on-premise and
either
cloud environments. And
soldiers
for
or
two reasons.
crows. One of the
The first
ones,
reason is that
3
the
going
largest
up and 3 going
enterprises
down.
today still operate in hybrid
So yeah, we
environments,
can start to see some
and
of
those
those
companies don't want to
candlestick
have to buy
patterns
from
too.
multiple vendors, especially when IT budgets are under high scrutiny because
Is
of the
anyone
challenging
buying
macro
shares?
environment we are all currently experiencing.
I
The
will
second
be
reason is
later
that typically
once
vendors who
everything
offer network
bottoms out.
security are more mature today.
And I
and
say
deliver
that I'm being
strong
so facetious because you
profitability
can't
over
time the
some
market,
platforms
but
that offer only
it's a
cloud-native
lot of
security,
red out here,
which are still
y'all.
heavily
It's a
investing in
lot of
regulatory.
red.
And so with that
Okay, so let's
context,
look
the
at
first name that comes
Microsoft
to our mind is Palo Alto, which
on,
has both a network security business
see,
and a cloud security
get it on
business.
the hourly.
Okay, so
What's she
we'll talk
doing
more about some
today?
of these picks in just a second, including Palo Alto. But Gordon, I want to get you in here and just
Ooh,
talk about your outlook for the space.
ooh,
Antoine was talking about
wow.
it being resilient
How
to
did we
macro.
sleep
How
this? This
much
is
do
why
you
you need
think
to look away.
cybersecurity could grow this year?
On the 15
Yeah,
minute.
absolutely, Caroline. I think
Look,
that we have a lot of geopolitical forces that are continuing to allow
that wasn't
cybersecurity
a
to grow
bad.
bullishly.
Opened at
You know, think about what's
227 and
going
got
on,
down to
obviously, with
221.
Russia and with China, more aggressive activity there,
Oh my
especially with regards
gosh.
to ransomware.
Microsoft was one that sat right here and
2022
didn't even
went on
pay
record,
attention. Where's
as the
Tesla?
year that cost the world
Microsoft
22 billion
and
in ransomware.
Costco.
It's only getting worse. 24 billion, and then
Microsoft went down
8
almost
trillion in
2%.
total cybercrime
Tesla and
costs predicted in
Nvidia. Let's see what
2023.
Nvidia looks
So
like.
companies of all sizes, not just the largest companies, are going to have to
Not
continue to invest
as
here.
dramatic.
And I think that
I
ease
don't
of
know why. It doesn't look as
deployment
dramatic
is
as
going to be a
Microsoft.
key factor, as Antoine mentioned.
That was an easy. Oh my goodness.
Let's
Let's
get
look at
some
it
of
on
your
the
picks
3.
before we go back to
See if it
Antoine.
makes
What
any more
specific
sense.
companies do you think could be outperformers in this space?
Oh
Do you like
my
Palo Alto
goodness.
as well? How do you decide?
I think Palo Alto is an
On
excellent
the
company.
30
The other
minute.
place that I would look at is think about companies that are sub 5,000 employee bases, right? So think about like
That
a
was a nice little
SecureWorks,
ride
where you
and
have to
back
be
up
able
too.
to deploy
Did anybody trade
comprehensive
Microsoft
cybersecurity
today?
solutions, where that company does not have the
Anybody do
organic staff
Microsoft
to look at all
today?
those alerts that are coming through. So I think on the public side, SecureWorks,
Yeah,
private
REITs are
binary
for
defense, or
definitely.
eSentire, these are all MSSP providers that provide tremendous value.
Yes, normally
to
tries
companies
to
across
fill
the
in
spectrum.
gaps. That's what I
And
thought.
that's where an IT decision
Took a
maker and
couple
security decision
stabs.
maker is going to
Yeah,
have to
fixed
continue to
with
support
puts.
the infrastructure of their firm.
And
Calls to
Antoine, you
hedge
know,
the
speaking
puts.
of on the private side, we were just
Just made
talking
a
about
couple
PE
bucks and puts
potentially
slowly
seeing a
coming
big
back.
uptick this year. We
Yep.
have seen private
Sometimes
equity
you just got to give a trade time to work
focus
itself
on
out.
cybersecurity companies
I'm waiting
recently.
later on this year for
What could that mean
long-term
for this
buys.
space?
Yes, I think everybody that second half of the year, I think we're all looking forward to, you know, some more promising.
So I think we could potentially see more.
What's the difference between a REIT and an MLP? I know what a REIT is. I'm not sure what an MLP is.
Also that from a valuation standpoint, there is a big
And somebody's looking at Baba. Hey, BB. Welcome, welcome, welcome. Don't forget, like and subscribe. Hit the button. Welcome, welcome. I'm trying to see if there's any other new faces. Johnny, what's the difference between a REIT? I know what a REIT is. It's a real estate, like an ETF. But what is an MLP? I haven't heard of that before. And while you guys are doing that, let me get back over. So that's Microsoft, you guys. That could have been a decent trade for today in the morning and in the afternoon. Let's see. It hit a low of 221. It got up to 224. Heck yeah. A $3 move. So let's see. It's QQQ just doing the same foolishness, same range trading. Not moving. Still stuck in the middle.
So Gordon, room to grow for
I want to
cybersecurity in
delete
particular,
that.
but what about tech? As you think about tech performance this year, given that the Fed is continuing
Okay.
to rate high
So-
rates, given that there is a possibility recession.
Welcome, BB. Welcome, welcome, welcome. I've been dollar cost averaging in the past few months on SPY and some large cap 10-year plan. Yeah, I like that. Well, you know, SPY and QQQ, you know, basically one and the same, except for QQQ is probably a little heavier in tech than SPY, but they run together. They run like cousins. So yeah, I get it. Yep.
The bad guys are not
that sounds like a plan.
And I think just look at the recent news.
Because I don't think I'm going to be doing individual, you know, buys. I'm looking at, well, let's get rid of you.
All of these pieces not in just to your security strategy, but you better have.
They say, you know, you arrive once you get trolls. But why do all the dirty talking trolls want to come? Troll us with some giveaways. Some travel giveaways or something. EPD is one. Okay, I'll look it up. EPD. Is that the call? That's the ticker symbol? EPD. EPD. Okay, here we go. EPD. And generally, there's some place up here where we can get information about the company. EPD.
Whether you're an experienced investor or just getting started, TD Ameritrade offers a webcast right for you. The platform demo webcast series is designed to help
there's some place that if you go, oh, I think it's here, that you can get information like right on the spot about the that equity. Let me see. It's one of these tabs. It's not Market Watch. Nope. Analyze probability economic. There it is. It might be this. No. Does anybody know where you can go and find the information on a particular, like we just put in, let me go back to the chart.
With innovation that lets you customize interfaces, charts, and orders to your style of trading.
Okay, so the ticker, who is that not ringing my bell? Hold on one second, you guys. I'll be right back.
And just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
TD Ameritrade Network has arrived. New York Stock Exchange, new location, with access to the biggest newsmakers in Wall Street, bringing you in-depth market coverage and real-time trade ideas. Do not miss our exclusive interviews with CEOs, governors, traders, and stock pickers, keeping you informed as you navigate your investments. Don't miss Trading 360 at 11 a.m. Eastern and the watch list at 2 p.m. Eastern, live from the New York Stock Exchange, only on the TD Ameritrade Network.
Oh my God. Can you all hear all the kids, all the noise? Okay, let's see. Where did we leave off? Also green and HD for the year. Okay. Let me see. Who's been trying to get in touch with me?
Good afternoon. Welcome to Market on Close. I'm Oliver Rennick. We got an hour until the bell right now. Stock's still down. NASDAQ lower by about 1%. So 2 out of 3 days of 2023. Right now
I was trying to find a place where, let me go back and find that ticker. EPD. EPD.
So we're pretty close to
and
the
somewhere fundamentals. There it is. Is that it? No. Fundamentals, economic data, probability analysis. Somebody has to talk to me about that analyze tab. That's how you analyze the probability of your trade. So I'm going to do a phone call with them about that. Added stimulus. No.
Has still been downtrending. It's been a pretty confusing chart. And it arguably does have some of the more powerful, optimistic narrative behind it.
I'm not going to stop until I find it. Monitor's not that. It can't be scanned either.
willing to spend a lot to travel. Catch though is that you're only a few bucks away until
Market
Jets
watch.
runs into the previous
Financing rates, visualize alerts.
than the one before it. So it's a pretty
Pulse
clear
calendar.
technical
Huh,
downtrend.
I'll find it. But generally, like if you
If it's going to hold that trend. Note, however, the recent bounce
I gotta go
around the
back.
holiday travel period obviously is well off the lows for the chart. So maybe watch airlines and some of the consumer reopening trades, as well as the China stocks too, which have been very strong. And the reopen potential for that economy might be helping out some of these travel stocks as well. Other than that, not a lot of positive.
Oh, I don't want this. I want to get rid of it. At any rate.
Stocks here and there higher on some specific news, but generally the sectors and the themes that have been troublesome areas for investors continue to trade down. You've got cloud stocks under a lot of pressure, 2.5% down today, as Salesforce and the bounce after layoffs yesterday did not stoke a meaningful rally in the group. We talked this morning.
Oh, everybody like Abby V, HD. They got beaten down so bad. Dividend, that's a nice dividend.
But it's not working for the broad group. So that's obviously an area that we have to keep watching.
Can we keep playing with this?
That remains that way. Today we do have the dollar up, bouncing back after yesterday's drop. The dollar chart is kind of interesting, where the drop from the highs is still the short-term trend that we should describe this chart as being in a downtrend. But after a few big days here the last week, and to start off this year, those green candles in the bottom right for the dollar do potentially get interesting if we get some more of them. We're kind of rounding out maybe a little short-term bottom in the dollar. And that's happening also as bonds are finding a little bit of selling action, not a ton, but treasuries are seeing a little bit of pressure again as some of this data comes in better than expected. Rates are creeping a bit higher, but they're not getting too far. What's more important is that the yield curve continues to flatten. So whether or not rates on the long end are moving higher or lower, the yield curve really only goes in one direction. Probably the most important thing to realize right now is that the yield curve is dropping down to the lows of the year, as we see in the bottom right corner there, even with 10-year yields in a range. We haven't seen any new highs for the 10-year yield in 2.5 months. We haven't seen any meaningful lows. What's happening here is that the short end continues to apply upward pressure as short-term interest rates reflect some of the hawkish tendencies by the central bank and the Federal Reserve. And so you still get yield curve flattening.
So we still got nothing going on. It's been a very quiet day. It's been a very quiet day. Chinese stocks are up, you all? That's good to know. Let's see if we can get some more. What's going on over here? CNBC.
But we still curve the expectation that rates are going to be cut is likely an incorrect expectation, particularly if you get a situation where the recession is short and shallow. But the good news here is that stocks can still do well, even if we get that growth slowdown, as long as inflation is coming in. And we think inflation comes into 3% this year.
What types of stocks?
So for us, we want to continue along the value line. We think basically value over growth has worked for the last year. That's a multi-year trend. We want to stay defensive.
That can work in recession because a lot of those value stocks are also cyclical.
Well, so interestingly, consumer staples, which is one of our overweights, healthcare is another one, and frankly, energy, which you might not think works well in a recession, but the fact is the sector is already pricing in a recession at around 10 times earnings that the rest of the market is not, and is 5% of the weighting with 9% of the earnings expected
So I'm
this
trying
year.
to think of what could go wrong here in your forecast. What if we keep getting really healthy jobs data like we got today, like we're anticipating tomorrow? Because if that happens, then do you have to revise your forecast for not so shallow recession if the Fed just has to keep going?
So that's been a very interesting in these first couple days of the new year. The conversations are very nervous, and part of that strain is basically this idea that the worst thing for the markets could be that there isn't a recession, which forces the Fed to keep going, particularly if inflation remains sticky. Look, we have sympathy with that view because it certainly would mean sort of a repeat of 2022. We just don't think that's going to happen because we do see signs of inflation starting to come in, and we think that's going to continue.
But can that continue if wage growth does not moderate?
No, but you actually are starting to see anecdotal signs of wage growth moderate. And look, you think about the layoff announcements, you think about the competition for labor at a place like tech, that's starting to moderate. To us, again, it's like everything else. It's a matter of time.
So bottom line, bumpy first half, make new lows on recession, year ends higher because it'll be mild and then we come out the other side.
Exactly.
Got it. Julian Emmanuel, thank you.
Thank
for
you.
clarifying. A lot of twists and turns there. Evercore ISI.
Welcome,
By the way, don't miss
BB. If
billionaire
this is your
investor
first
Leon
time,
Cooperman's
BB,
take
don't
on this
forget to
market
like
weakness
and
coming up
subscribe and
later.
share the
He's going to be on with
channel.
Scott on closing bell
My name
overtime.
is Sandra, and welcome to my channel from Lack to Legacy. On this channel, I'm sure you figured it out by now. We're all things money, investing, and mindset, particularly how to go from a scarcity mindset to a mindset of abundance. So if that sounds like something that you're into, you have found your place. We are a group of a community of traders. Some of us are very experienced, and some of us are new, as in we've never even placed a trade. So surely you can find your place somewhere in that mix, but you are more than welcome. It's so nice to see our community expanding. It's nice to see new names in the chat too. So BB, have you subscribed? I got some stuff I want to share with you. You can email me at fromlacktolegacy@gmail.com, and I will forward to you our Zoom link. We have a bi-monthly study session on Wednesdays at 6 o'clock. So if you're interested, I'll drop my email address in the chat, and you can email me, and I will email you the link. From lacktolegacy@gmail.com. And I'll post it up too. And if you email me, I'll check my email too. I will send you that link so that you can be in the know and get to learning with us, learning to become a better investor. Feel. And that's it. That's how we do it. Let me go check let's see what's happening over there. I'm just checking my email to see if I got anything. Okay, I got something. WordPress. Okay, we lost. What time is it? So we're, oh, well, wait a minute, y'all. Maybe she's doing a little move. Lulu, you want to look at Lulu? Let's see. Well, sure, we might need to look at this one. What the heck? 15, 20. That's a whole move, folks. There it is. Y'all see it? Y'all see the stairs, what I'm talking about? How one closes and the next one opens, opens and closes, opens and closes. That's a legitimate right there. 5, 10, 15, 20. Let's look at it on the 3. I won't try to jump on it, but look at that while we were talking. 3, 6, 9, 12, 15, 18, 21 minutes. That's a legitimate, you could have got in there. I'm just not, you can't take them all. So
aid prices.
We were looking at Lulu.
Delta shares in the green today. That comes as the company says it will be the first U.S. airline to offer free in-flight Wi-Fi.
Lulu did that same little, she did the same little step down. Oh, but Lululemon is killing the game.
Join their frequent flyer
Let me
program
add
to take
that.
advantage. Joining us now, first on CNBC interview, Delta CEO Ed Bastian,
Lululemon
and of
is
course our
up
own Philip.
5% today. So it's
Sarah, thank you very much, Ed. Sarah
SQQQ,
gave the news right off the top there.
Meta, and
Free
Ford.
Wi-Fi in your domestic route network. Basically, starting this year, by the end of the year, you expect to have most of
Ooh,
your
look at that
planes there.
morning.
What's the idea behind this? Aside from improving the passenger
Let's see,
experience.
from 317 to 327, a $10 move. Please tell me you got in on that. Who got in on the Lulu move? Please. Who got in on the Lulu move? Check your SQQ to see if you're making anything yet. Okay. Let's go check.
Is not good. And there's a lot
Oh,
of
sure, we made some money.
Delta, we've been investing.
We made money on the 3 calls. We made $75. Yay. And that wasn't very long. Let's see, what time did we get into this trade?
It'll be available to all. Yes, you have to have a SkyMiles
We
account
got
to access it,
in
which is free
at,
as well. But it's going to be a game changer, and we'll have it on our
it usually
domestic
tells
thing
you
with
the
80%
time.
starting the 1st of February. And we're every week goes by, we'll have
At
international rolled out next year,
2:04.
regionals next year.
So what
it'll be
time is it?
100%
About an
by the end of
hour.
2024,
So
plus every
$75
Delta
an hour. That's not
every
bad.
seat in the sky.
You're just minding your own business.
The first thing they said is, well, look,
That's
you guys
not
are in the
bad at
business of
all.
making money on ancillary revenue. Is
So
this
those
going
were
to hurt you?
calls.
People are
Let's
not
look
gonna
at the
have to pay
chart.
for Wi-Fi.
Okay, let me go back to my
You have the belief, though, that
SQQQ
this
chart.
essentially opens up so many more opportunities, correct?
This creates loyalty. You know, it creates a better experience for customers. It'll
We
be
got
one more
in
reason why
around 2,
customers will choose
around
Delta as they look
here.
to fly. And in addition to
Around
that,
2
we're going to have
o'clock.
a new product, which we also announced this morning, called Delta Sync, where
And
we're bringing
so
partners in. So
it's
we announced that
okay.
we got Paramount
Not
Plus
bad.
joining us.
Not
We
bad.
got
That was
T-Mobile joining
easy.
us. We have American Express joining us on
You
this
can't beat
launch.
it.
And
Did
that
you see
umbrella
it?
package will give customers opportunities to receive exclusive content, exclusive offers.
And
They'll
potential
do
revenue.
Is that what it is? Is
potential
that why
revenue sources
Lulu
as
is
well.
up?
So I've always believed that Wi-Fi has to be free. It is basic to
I
it
do
has
a
to work.
combination
By the way,
of
it also has to
things,
work
but I
on
generally
sitting on a
day
reliable
trade.
foundation of
But
quality
I will
service
swing
and
if I
on-time
get in a
delivery of
pickle if a
product
trade doesn't work
that
itself
demands.
out
Ed,
the
Sarah,
way
you
I
got a question
thought,
for you,
or
Sarah?
if I get caught,
Hi, Ed.
then I
Sarah,
will
I'm
swing
here in
trade
New
it.
York. Beyond today's announcement, just curious for a flavor of what's happening with demand. We know leisure's been super strong. Is that still the
Maryland,
case?
that's
And
how
have you
you
seen any
do it.
softening in
Yep.
business?
Yep. I get information from
Well, Sarah,
everywhere.
we are in a bit of a quiet
The
period because we have our
internet,
earnings we're announcing next
YouTube,
week, so I can't
reading,
give you too
people
much
pass me
current color
stuff.
other than to tell you that as you
Definitely.
saw during the holidays,
All
demand
this
was very,
free
very
info,
strong.
all
So
this free intel.
no
Look at
signs of any letdown.
SQQ.
What about labor
Yay.
shortages? Has that been dealt with? We saw the problems with
Let's see.
Southwest after the
Oh,
storms,
shucks,
getting
did it
people
change?
around,
60.
supply issues,
Okay, we were
computer
up
issues. I'm curious
75. I
what
probably should have
you're dealing
cashed
with on
out.
that front.
Let's see.
Well, Delta, we've got the staff we need. We're continuing to hire.
Because it
We're
looks like
hiring
the
flight
trend
attendants,
is
we're hiring pilots, we're hiring
changing.
mechanics still for
Okay, wait
some
a
growth
minute.
coming into 23.
60. I think I'm going to take my little 60 and call it a
during the holiday
day.
period. Is very proud of them.
I'll
It was a
take
very
that.
difficult set of conditions that they were operating in.
It's a nice
and
little
they got
base
customers
hit.
where they needed to
We'll
go.
take it.
And
And we'll let
China
that
is
other
such
one
a
work
big
itself
part
out.
of your business.
Oh, I
Obviously,
wound
things
up
have
with
changed over the last 3 or 4
$90.
years, but now you have
Yes.
the Chinese government opening up.
Okay, that was
What do you
cool.
expect, just in a broad sense, happens over the next
So we made
year when it
$90 on
comes
those
to
calls.
demand and traffic to
We
and from
were
China?
in the
I think you're
call.
gonna
We
see
were
the
in
same
that
thing happen in
position
China
for
that you see
just
in
a little
every
over an
country
hour.
as countries have
Miss
opened up.
Vice,
You're
we
gonna
made
see an enormous amount of
$90.
demand.
for travel, leaving the country, and as well as a large
on the
number of people wanting to
calls.
get into the country.
And
Obviously,
we weren't
China's
in
a
that
little
trade very
complicated
long
given
at all.
They've had a little different policy
Okay,
towards
so let's
protecting
see.
COVID. We'll have to see how it rolls out over the next
We sold
3
those,
to
we
6
sold
months.
those, we
But we're
sold
expecting
these. So
certainly
we're
the
just
back
waiting
half
on
of
this
23,
put
some pretty
to
strong
work
Chinese
itself
demand.
out. We
And as you
made
mentioned, this is, well, the Wi-Fi is
90
free
bucks.
most quickly here, and domestic flights internationally, that's going to
Not
roll away
bad.
over time, correct?
Yeah, so
Not bad for just sitting on your balcony. That's not bad at all, huh? For just sitting and chatting with your friends. And we'll see what happens with the one put. Oh, look at it still going.
Ed Bastian, CEO
I
of
should
Delta
have
Airlines.
hung in
How
there.
do you like Vegas for consumer electronics show?
I started to sell one and leave a runner,
The buzz is phenomenal.
but I was happy that we made that.
It's crowded. I love it.
Love-hate relationship with the crowd.
That was easy.
Guys, we'll send it back.
Did you guys see that? That was easy, Reezy.
Going on in that sector that you guys are both there.
That wasn't
So
bad
thank
at
you,
all.
and Bastian, good to see you. Thank you
Nope,
both.
and it could have
Let's show you
still been
what's happening
going
with the
too.
markets here as we head into the
Let's
final
see.
40 minutes of trading.
Look at it still
300 or
going.
so on the Dow. It's a broad-based sell-off given back yesterday's gains. The S&P 500 is lower by almost a full
So
percent. Now,
QQQ
energy
must
is
be
the
cutting
standout,
up too.
2%. Everything else is down on the day.
In the
Real
opposite
estate, the hardest
direction,
hit,
yeah.
Utilities, materials, technology.
Oh, look at
The
that,
Nasdaq is
y'all.
up
There was the move,
1.2%.
y'all.
Microsoft,
Slept that
Amazon,
one.
Apple, Nvidia, and Tesla
3, 6, 9,
weighing
12,
down on the
15,
Nasdaq
18,
in
20,
particular.
24,
It's been a rough
27.
session for the chip stocks.
She's not
Bernstein's
done.
Stacey Rasgon says 3 names are solid buys for the year. He'll join us to name names.
But see, that's what you're looking for. Did everybody see this? This is why I say anybody can do this. When you see that, you know what you're looking at. Look at all that. Look at all that. Look at all that. So I don't know if I want to jump in. Oh, I could do a paper trade. Let's go ahead and do it. What the heck? What's the harm? Let's see. Where are our saved trades? I think I got something queued up. Nope. I thought I did. I thought I had some. So let's go on in here. I thought I had some stuff all queued up. Okay, let's go ahead and do a put and see what happens if we were to jump in this deep into the trade. And we're not going to be in it for long. So let's try that. I'm just going to go for it. I'm going to mark it in because I'm in a hurry. And I just want to see what happens. Okay. So let's go to the home screen, see what's going on with these puts really quickly. Now, if they make a ton of money, I'm going to be mad. Let's get over to the chart and see if it's still going down. Still looks like a strong downward trend to me, folks. 22623. And let's just watch them. You can see how quickly they'll get profitable. So we've been in the trade less than 10 minutes. And hopefully we'll get profitable pretty quickly. We'll see. Chart. 3 minute. That was a late entry because remember we saw it way up here. And I was saying if one more comes in, so that was, it started at 263.59 and went all the way down to 262. That was like $1.25. It could be a nice little move. So maybe it was definitely a late entry, but you know, paper money, we'll see. So I would probably bail on this one because it was a late entry, but you know, it's paper money. I keep saying that, but that's the truth. So here are the things that are telling me that this might be, well, I don't know. Well, what do you know? Just like that, you get a hold tight. So let's see. These are those 3 puts. So, and they're profitable, 450. And so you can actually watch how the money adds up. 750, 1050, 21. Let's just look at the chart, see what it's doing.
Kramer Guide.
Interesting move. Dell reportedly joining a list of
Yep.
companies.
And what I normally
attempting to
do,
reduce their
I
reliance
know
on
nobody does this,
China
but I
for
do. I
chip
just go
production.
peek down
Nikkei
here and see
writing
what's
earlier today,
happening.
the company aims to
Oh,
stop
that's
using
looking
chips
pretty
from China
good. That's
by
looking pretty
2024.
strong.
Dell
A
also
little
telling suppliers
oversold, but
to do
still
the
everything.
same. Joining us
Okay.
now is Stacey Rasgon
Let's see.
from Bernstein. Stacey, first of all, is it possible to reduce chip usage from China fully by 2024
So
at this point?
$18.
It's probably possible. You got to remember they're not buying like.
But if we had
CPUs and
caught
stuff
it
that are made
at the
in
beginning,
China.
that
That
would have
stuff's
been,
not
you
made
know,
there. That's
really,
made in
that
the
would have
US
been
or
great.
potentially in Taiwan if it's from A&D.
Let's go to
But it could be
5
memory, like other
minutes.
types of peripheral chips, and there are
You
other
know, so it went
sources
on
of
5,
those.
10, 15, 20, 25,
It's not just
30.
chips either. It sounds like they're trying to more broadly move production. And
That
other
was
things out of
legit
China,
right
which
there,
is
y'all.
not new. Like lots of folks in the electronic supply chain have been diversifying supply chains even ever since the tariffs and the trade stuff from the Trump administration a few years ago. But just given what's going on.
No, you
in
don't.
terms of
That
some of
that
the
was
sanctions and
so.
everything else that are
That was
getting placed on
$90,
China,
just like
there does
that.
seem to be more of a broad-based
Just in and
decoupling
out
that's
less than
starting
an
to happen.
hour. And look at this one, y'all. QQQ is cutting up at the end of the day too. So I did 3 puts on that. And let's see. I got into the trade late.
X year
So,
on
you know,
production. What does it mean for the
I can't
US chip
imagine what it would
makers?
have been
Who
if we had
stands to
gotten in
benefit
there
most?
early.
Well, it depends on what they're making, right? But like a lot of, like, for example, on the
I'm
memory
gonna
side,
go
you've got
3
folks
just so I
like
can
Samsung
see
and Hynix that have
what's
memory
happening.
fabs in China that they're not going to be able to support
See
anymore.
those
They've got a
wicks.
waiver right now that
You see how
they can buy
strong these
equipment, but
candles
who
were
knows how long.
before? Very few wicks. And then they start getting all wicky because all of the buying pressure. That's, you know, that's when you start saying, ooh, is it running out of steam? Because these 1, 2, 3, those were nice and strong. Very few wicks, nice bodies. Got a little volume here, but still, let's see. Maybe it can get under 262. It's still not oversold. So we'll see what happens. I'm gonna pull out to my 15 because Johnny says I always pull out. So you can see the bigger picture. We're gonna see. How much money? It's $30. 35. Uh-oh. And you see how quickly it'll change up? $226, $225, $224. Okay, we're going down. We're going down. Okay. So you can see how it adds up. So we made 90, and we can add this to our 90 for the day. Let's see if it'll get up to $50. And there we go. Let's see. I think we may be at $50 at least. Yeah. Wait a minute. Where are we? These three? Oh no, we're at $40. Okay, we're at 58. Nice, 64. So you can see how quickly it can add up. I don't know if you guys are still following along, but those were the 3 puts that I just purchased. Yeah, this probably would have been a better way to show you guys, just show you through paper trading. Charts. I'm going to look down on the 3. See if we got something left. Okay. Get out of there, green candle. You see it hit that RSI. It looks like it's bouncing back up off the RSI. I would probably bail right here. That's 63 more dollars. We just coming right out. We're not asking no questions. Let us go. Yep. So how much was that? And see, I don't know, slippage. We made it out with 36. I don't know how that happened. And then we made 90. So 100 and I don't know how we got 242. Because we took a win on QQQ too. We made some money on QQQ today. So we made money on QQQ. So today we made 243 in paper trading. 243. Not bad. Maybe tomorrow. I don't know. We'll see. We'll see what's happening. But we didn't do too bad today for paper trading. We made 246. We had QQQ. I forgot. I think we made $100 and something. Yeah. SQQ. We made $90. And we're still working. Our one put is still working. So we'll see. Let's go look at the chart for SQQQ. Yeah, looks like there might be a wrap for QQQ too. 1 minute. Let's see, do I still have those? Well, that was nice to see, you know. Okay, let me get back to the chart. I think it's just slow today. Slow going. It came all the way down, hit that, and bounced right back off. Oh, that's so funny. It went up to and came all the way back down to 262. It did that whole little range from top to bottom. Did you guys see that? And then bounce right back off. Right at 262. It was at 263, basically 50. And came down $1.50, bounced right back. Although that still would have been a move, folks, because it was a move this morning. That was up, that's up. It's not a big power move, but it's a clear one, at least. Clearly, you could see that. You could see that that's what you're looking for with all that red and all that stuff. Hopefully, that's pretty clear. I'm hoping we do have a sell-off tomorrow. Oh my gosh, that would just be a nice way to wrap up the week. That would be a great way to wrap up the week.
It's an entire trading experience that pushes you to just might change how you trade forever. Because once you experience Thinkorswim by TD Ameritrade, there's no going back.
Oh, yeah.
You downloaded the TD Ameritrade mobile app?
Actually, I'm taking one last look at my dashboard before we board.
And you have Thinkorswim mobile?
So I can finish analyzing the risk on this position.
That's what you call range trading. Oh my gosh.
Your investing style.
Can you see how price respects that support and the resistance? My resistance, I could probably adjust it. It's probably, I would probably redraw it like here. 263. But that's legit too.
Okay, let's talk some options trades. 2 out of 3 looking for downside once again. In the options corner, Tom, we got a little bit of fading action from these investors.
Elle says, how did we do thus far with all the calls puts in this account, inclusive of all the options? We made money. I had to wind up closing those positions out and resetting it because I didn't close out some of them and they ate up all our money. So some puts or whatever, the few that I left, they, I guess, got so negative they ate up our little balance of cash. So you'll notice we got a lot of money. I reset the cash
So we made money. Oh shoot, what's all? My SQQ. Oh, why would it must have triggered something? Or what happened there? What sold must have been my puts. I need to go find out because something just happened and it must have hit my stop or my limit. Oh, look, the put it's so I'm not mad. You know that put that we were waiting on, it stopped itself out at $50. So now I know. Okay, that was 6%. I set it at 6%, $50. Okay, I'm not mad. It stopped that put out. Because I probably wouldn't have on SQQ. Let me go look and see.
They bought over 4,000 of the 36.
Y'all see that?
An average debit of about
Okay, so my put stopped itself out because look, the call is just, I mean, the price keeps going. So it stopped itself out. I like that. Keep you out of trouble.
Definitely been one of those e-commerce names that's taken it on the chin.
So we're starting from scratch. So just drop in the chat what you want. Oh my goodness, I saw my calls.
Pretty harsh.
Look at this. This would have been a nice little
downgrade.
Sure, I'm going in again. Why not?
Sound positive in the long term.
What's this?
But then has to slash the price target down, and then
That's
give some admission to the real problems in the short term. So it's like,
does this say working?
Try and bet on a long-term comeback and stocks.
Let's do this because nothing should be working. That order should have been so canceled.
Decliners? I don't think so. Yeah. Your two bearish trades, CarMax and Harley Davidson.
Nothing should be working
Let's
here.
go CarMax because I mean, not a big surprise there. Still pretty weak, down 2.7% today.
Yeah, their shares are up about 50% from the year ago.
Let me get over here and see what we got.
You know, what's going on with Carvana?
Okay, we don't have anything. Everything has been sold.
Reported earnings a couple weeks ago.
Let's look at this
They missed on estimates. They guided lower. They paused their dividend. Retail units sold decreased by over 20%. Unit sales and comparable stores.
Oh, you reset. Yeah, I'll show you. You can see it here if you go to home or go to monitor. I usually go in this way. Then you can see all of your positions. And you can see, I just sold the last ones of them today. Because remember we had Amazon. Amazon was down 610. We had QQQ. It made 801. So that's what that was. And then these are the QQQ, SQQ ones we did for 90. So yeah. So right now,
out of the money puts they're buying. Average debit
this
of
is
about,
what we are
on those, so the break even at 53 double.
We made 963
days, about 15%
bucks so far.
The current
so we're up
price.
900. Whatever this is, because I think it sets back to 120. So this is what we're up. We earned $998 so far this year. So not too bad on some paper money. Not bad. Yep. So that's where we are right now. We don't hold anything. We are sold out of all of our positions. I don't know what this. Oh, buy power. We're down by buy power. That's what we spent today. But we made today $231. And for since I reset it, which was I want to say the first, we made 998 bucks. So not too bad. Sure, the paper money is doing better than I cannot see the chat. Are you in a call? No, I'm not in anything. I had 3 SQQQ calls and 1 put. And the calls paid us $90. The put stopped itself out at $50. So let's go back and look at the chart. And then the Amazon and the QQQ positions were really leftover positions from some community classwork we had kind of pulled together a portfolio. But this is worrying me. Why does that thing still say working?
How much more or how
adjust
longer,
position,
because the CEO
no.
stated on the last earnings call that they're seeing a continued deterioration,
View order.
not only in prices,
this
but
thing
demand.
definitely says working.
All right, how about Harley Davidson?
Yeah.
What's going on there? Because actually, it's kind of been surprisingly good, Harley, over the last year.
Yeah, I mean, I bet
Okay.
you people wish they owned Harley from last January because the
We
stock
don't
was
have
up 10%
anything left.
last year.
Wish I owned
Okay.
a Harley.
So yeah,
that too.
that's it. That's what
I
we
think we
did.
all do.
So if you
You
want
know,
me to
they
purchase
beat
something
on
else
earnings
as a
last
paper trade,
quarter.
drop it in the
They
chat and
beat
I'll
on
purchase it.
expectations, not only on EPS but revenue guidance. Then they also saw margins expanding a little bit.
So BB, I hope
There was
that
some
answered your
more
question.
cycle
No, I'm
industry
not
checks
currently in
recently
any
suggested
trade
stronger than
at all,
expected
not a paper
shipments.
trade or
Retail demand's
anything.
been pretty solid.
But I sure wish I
And they
had
said
hung on
stable
to that
credit metrics,
SQQQ
which is
just a
pretty
little while
surprising to me,
longer.
in this era of rising interest rates.
That
As the
was nice
10-year
to see.
rose over
And
230
QQQ,
basis
let's see, did
points
she bounce
last
off? Yeah,
year alone.
she
But,
did her little dance and bounced
provided a
off.
good report, conservative guidance moving forward from
Yay.
the CEO. But somebody
And
thinking
right
maybe
back to
this is
262.
one of those stocks that probably
That
should
is
be going down
crazy,
with the overall
y'all.
market.
All
'Cause
we
they were
did
out
was
there
all day
buying,
play between
short-term puts in there over
264 and
3,000.
262.
Jan 13th
Y'all see
weekly,
that?
the 41 strike puts that expire
264,
in 8 days. They paid a
262
dividend
all
of about
day.
$1.
$2.
So this trader needs it to go below $40, that break even, over the next 8 days. It's about 5.5% below the current share price. Put volume's only about 12,000 puts have traded on the day, and 3,000 of them on just this trade. That's about 5 times normal daily average volume that we've seen over the last 5 trading sessions.
So you hear that
So
volume is
somebody
down.
taking a bearish tint here. You know, maybe used cars aren't
something's
selling, maybe
biting
Harleys
me.
were, but you know, if you see any outperformance in any aspect of consumer spending, especially discretionary items like Harleys, are they next, right?
Pretty big spread between bikes and cars on the chart. I wonder how long that can last.
Right.
Right. Thanks, Tom. Interesting.
So we got about 20 more
switching
minutes to
trades
the
here.
day.
Fading Harley, fading CarMax, but buying the dip in Shopify.
Elle says, Sandra,
We'll get an
why
update on
don't we
Stitch
all,
Fix, as we lay
all
out
that
stories
log in, purchase
continue.
puts and calls
And then we'll talk
on one
some
of the
the
Zoom
bond
meetings? Yes,
action ahead
step
of
by
tomorrow's
step from
employment
deciding
report.
which strike
Lots
price to
ahead here with
purchase
20 minutes
on
left,
our
and
own
the Nasdaq
PCs.
trading near the
I'm
lows
down
of the
for
day.
that. Yeah, perfect. We can do it from start to finish. Then we can all practice. Yes, I like that idea. So we can put that on our agenda for the next Wednesday's meeting on the 18th. We can finish up our candlestick talk, and then we can all practice doing a paper trade together. You know I'm down for that. Yes.
When the default
Yes,
list
yes, yes,
appears,
yes,
select
yes.
the name box, then create
Is there
watch list.
anybody?
Enter a watch
Let's
list
see.
name. To begin adding securities,
Uh-oh.
enter a ticker symbol in the symbol box.
Is there anybody who isn't set up? Like who doesn't have their Think or Swim set up so that you can join us on Wednesday and be ready? Yes, Marilyn, we can go very, 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 very slow together. Yes, I can do it very slow for you all now. Shoot, the day is done. QQQ did her little shimmy dance. Straight from the top, straight on down.
For more demos on how to take or swim, head to the Education Center on tdameritrade.com.
So, yep, I'll put that on the agenda for Wednesday, you guys. So, anything else you guys want to do for Wednesday? Besides our candle work and placing, and since I know now how to put on an OCO, we can just, y'all get it all and you get it all at once. I have one pillow with desktop. We have 2 PCs, one slow with the desktop and one robust with web version. I looked at the web version. I'm gonna have to study it, but you're right. You can definitely toggle back and forth between paper trading and live trading on the live version. I just got to get to know it. I have got to practice with it because I couldn't find everything, so I have to play around with it. Quite a few beginners on board. Yes. That's how, yeah. Queen of the beginners. Yep. And I'm happy and comfortable with us. You know, everybody know, you all know I don't know. You see me learning. So we can take our time and just go step by step by step. It doesn't have everything to this. I know. And see, I gotta know. It wasn't even that it didn't have everything. I didn't know the footprint. I gotta learn the footprint. So I gotta play with it because it's so much easier to toggle back and forth between that and paper trading. So every day gets better. Oh, excuse me. Every day it gets a little easier. Every day I learn a little bit more, even about the best way to present the information to you guys. So, it just gets better and better. So yeah, that'll be simple. That's easy. That'll be an easy one. But you all don't forget, study your candlestick things because you really do need to know those. They are so informative. See you, Johnny. Take care. Yep, we're just chilling. We count down the clock. We got about 15 minutes. Nothing's happening. We'll see you in the morning. Hopefully we get some action in the morning.
I've never really been a terribly convincing business model and the stock chart has been hard to ignore as it's just been like careening towards, I guess, zero. 260 being the low.
Hi,
at one
Johnny.
point, $115 during COVID. It was kind of a bizarre logic for why that thing even rallied as much as it did. At least there were some companies that made sense to go berserk during COVID. This one was like, what, so people are going to get shipped clothes to themselves so that that they're not going to wear out because they're not going out? Like, it doesn't make any sense. It never did.
And it's expensive. So I've done this because I believe in testing out everything that's out there in terms of retail. So
we appreciate that.
Yeah, so I've done Stitch Fix, and I have to say that in terms of the consumer, there's no benefit to you. I mean, the fact that maybe you don't have to go shopping yourself, but now with the fact that you can shop online at pretty much anywhere, Stitch Fix was expensive. Everything you bought, that you paid for it, eventually ended up being, I would say, a premium. So to me, I was like, why am I paying more for something I can do myself?
Right. Or you go to TJ Maxx.
Exactly.
All right. Just kidding. All right, thanks, Jenny. Stitch Fix down even more, getting crushed over the last year. But right now, layoffs are leading to some short-term optimism by investors. See a lot of these stocks bounce after they discuss firings. Okay, let's talk the big picture with economic data and the Fed going into tomorrow. Employment is the headline for this week. Larry Shover, Managing Director, International Markets Exchange, Capital Resources. Larry, what are you expecting tomorrow?
Well, I'm expecting a strong
Anybody
number.
want
I think we saw the
me to purchase anything in particular? Maybe you guys can come tomorrow with a stock that you want to purchase, and I can look and do a paper trade for it tomorrow.
One thing, but it's really the details that matter, and I think it's really the average hourly earnings and the participation rate is what the markets are going to pay attention
Please
to.
ask your questions.
So
Okay, waste management. So tomorrow we'll do waste management. We'll even look at it and really try to time it. So let's look at it right quick, just so we can at least have some heads up what's happening with waste management.
How realistic is it to get that number much higher, given the amount of people 55 and older who have just left the job market during or before the pandemic?
It's been in a downward.
So the data this week, do you think that portends something strong? How much do you trust ADP, jobless claims, even jobs?
Like it's doing its own little range
There's
trading.
definitely more positive proxies than negatives, as you mentioned. ADP, the labor differential widened, ISM manufacturing.
That's what it looks like on the week. Downward trend, down.
And initial claims was better.
Look at the daily.
Philly Fed number of employees was down.
I don't know. Elle, if you were looking at it, you're thinking calls or puts.
Claims was higher. And
here's the chart. This is the daily chart. So here's the RSI. This is what it's looking like.
Of the time, but I still think it's going to be a strong number.
So what do you think?
The last few days, we've seen some pretty harsh flattening of the yield curve again. I like to watch the 10-year and the 3-month. I know you like to watch the 10s, 2s, and the 30s, 5s as well, I believe. Which curve are you most interested in
okay,
right
so
now?
maybe
And do you
tomorrow
think we're
we'll
gonna
plan
break the
for
new lows in it?
puts. We'll see
Yeah, you
what
know,
happens
when
overnight.
it comes to trading, it's the 210.
Yeah.
And boy, how volatile has that been over the
Maryland, as soon as
holidays?
you
It
said that,
was,
did you see somebody dropped
steep into
out?
the negative 50s, and now we're,
Yeah.
it made what,
That gives
eight
me,
basis
it's a
point
little,
move
gives me a
between
little cause
yesterday
for
and today.
pause.
I still think the long term, or even the
But Stephanie
intermediate term,
says
I
it
should
happens
say,
all the
we're
time,
still
so,
going to see
you know, it is
continued
what it is.
flattening. The
As long as they
Fed
don't say
remains
bad words, I'm
steadfast and
good.
immovable in their message. But that said, I still think the big trade everybody is waiting for is when is the steepener going to, when is it going to turn around? And I do think it will eventually turn around by the end of this year. But I still think in the intermediate period, we're going to continue to have steepening or flattening. I'm sorry.
Flattening, yeah. And
okay, and this is Ford, yeah, on the daily.
Slow down, Larry.
Yeah.
Yeah, I
so
think so. I mean, we have to remember that most landings
That's the daily.
begin
Let's
the
look at it
same
on the
way.
weekly.
The debate that we're having right now about soft landing, hard landing, over tightening, it always happens that way. And we have to remember that what the Fed is looking at, the numbers are still really good. I mean,
don't you? I
employment
just
figures
come on, y'all.
long
Look
away
at
from
that.
where they need them to be or want them to be. And when you consider that, I think it's just the
So
market's
that's the
going to start looking
weekly.
at duration differently than it did a year
look at the
before, because
daily
the more
again.
that they hike or the longer they keep things at terminal, the harder it's going to be on the global economy.
RSI looking pretty good.
Great
This
stuff,
looks like the
Larry
beginning of a
Larry Show. Good to catch
trend.
up. Thank you, sir.
Let's look at the
Thank you.
hourly.
Excellent preview into tomorrow,
See what she
where the
doing
focus
today.
goes back to employment.
That was such a clear. Look at
And
that. Up
good
and
is
down.
bad
All
for
that
markets
growth this
dynamic.
morning.
If you thought it was
Okay.
done, well, came back.
So you're
very
thinking
obviously
Ford
this week here.
calls.
Here's the catch.
Okay, so
Stocks
it
are still
sounds
down
like
at the lows today,
Ford
even as bonds
calls
have come back.
and
So while the initial reaction to better than expected employment data was for rates to rise and stocks to drop, rates have come back down.
Is that what we're doing tomorrow?
As yields are basically unch on the day, but equities are near the lows.
Ford gets calls.
Part of that you might build a
and
blame
Waste
on Tesla,
Management gets
still
puts.
down and dragging.
We'll see what happens
big
overnight
tech
and what it
over
looks
the
like in
last
the
few
morning.
months. However, at least it's not just Elon's stock now. It's Tim Cook's, Satya
So about
Nadella's, and
11 more
everybody
minutes
else's too, pretty
before the
much.
bell rings. Man, look at that. That was beautiful. Let's look at on the 15. Yeah, she had that little 15 minutes in the morning like everybody else. She was off to the races.
Let's walk through how to
clean
analyze
up,
a company's
clean
financials
down.
on Thinkorswim.
Man,
to
I
get
like
started,
those days.
go to the Analyze tab and select Fundamentals. Enter a symbol, then
The
select
height,
Enter.
choose at 12.
To download detailed
12,
analyst reports,
37.
select Download.
Nice.
Buy the Numbers provides
That'd be
balance
some
sheet
nice money
information
there.
and other fundamental data. Company details provide summary takeaways on key metrics.
Okay, so we know
and
what we're doing
drives the
tomorrow.
stock. Takes a more
Can we
numeric look
hedge?
at similar
Yes, we
information.
can.
If you find any
Yes,
of the
we
information
can.
particularly helpful, you can print it out or take a screenshot.
Yes, we
For
can.
more demos on how to Thinkorswim, head to the Education Center on
I like seeing how they behave when you do that too. Yeah. Easy breezy capeasy. So El, don't let me forget in the morning. That's what we're gonna be looking for.
We empower
We got
those
money.
who
We
act.
can do anything we want to do. We paper trading.
Those who see the correlation
Okay,
between
let's see.
upswings
Anything else we want
and
to look at?
downswings. Those who manage risk by meeting each
Microsoft was a
obstacle
big
with a
loser
perfectly
today.
executed
And
strategy.
Tesla. We didn't even.
A
Oh my
measured
God! But Tesla like a
approach,
straight line
the right
almost.
tools, driving
She did a little something in the end. Did this kind of looks like
CME Group, where
QQQ?
risk meets opportunity.
When traders tell us how to make Thinkorswim even better, we listen.
Stretched out maybe.
Like Jack. He wanted a
Oh,
streamlined
look at
version he
QQQ
could
going
access
down
anywhere.
below,
No download
262.
necessary.
Oh,
And Kim,
shoot.
she wanted to execute a preset trade strategy in seconds. So we gave him Thinkorswim Web.
Oh, she trying to break out
Because
right
platforms
now,
this
y'all.
innovative aren't just made for traders, they're made by them. Thinkorswim by TD Ameritrade.
Look at this. See, I would got me in here. 262.
The Nasdaq's down again today, hovering at
Would've
bear
been a
market
dollar.
lows. Tesla has been the big laggard. We've also now got
263.
Apple making new lows. Amazon did last week. Microsoft close behind.
Let's see.
Let's check in with Dan Ives, Managing Director of Equity Research at Wedbush. Tesla bull, but
All right, so
recent
yep, that's what
critic
we're
of
doing
Elon's
tomorrow.
choice of how he uses his time.
All right, ladies
so Dan,
and
welcome
gents.
back. Thanks for being here. Happy New Year. What do you make of the other tech companies joining
That's
Tesla
our trading
lower? Do you
day.
still think it's Elon's fault?
So thank you all for
Look, I mean,
coming.
right now, tech's
I'm
enemy
just gonna
number
check and
one
see what we're
on
doing
Wall
over
Street.
here.
I mean, the New York City cab driver's bearish on tech, and I think going into earnings over the coming weeks, there's just fear around what guidance and what the demand picture is going to look like.
Amazon.
Now, clearly, Tesla
put Theta is
has
a
had
killer.
specific issues,
Okay,
as we've talked
Amazon
about many
put. Let's
times in
take a
terms of
peek.
Musk and Twitter, and I think that has been a huge overhang. But ultimately, really, the worry now is around demand, and you're seeing tech.
What's the strike price and what's the expiration
Bears are
date?
continue to press it because
Amazon.
anytime investors have bought the dip, they've been proven wrong. Now that
Give
said,
me a strike and
I
an
believe it's
expiration
as
date.
under as I've seen tech
Theta
since
is a killer.
09 and maybe
You're
01.
welcome,
That
Marilyn.
we continue to take a
Anytime.
lot of the
If you
bad
give
news
me
baked in. I
BB,
think
if you give
earnings
me a
actually gonna be more of
strike price
catalyst
and an
than a
expiration date,
negative
I'll
as we
look
go
it
into
up.
the end of January.
But you said Theta, they got some
And
decent
why is
Thetas
that?
over here.
What do you
Let's
think
go
we're
see.
going to find out?
Oh yeah,
I
that's
think whisper
cool.
numbers right now are 10 to 12%
Nice
below street
Thetas.
models.
Mm-hmm.
So if you once you get the cuts,
Oh,
I
you're
actually
saying,
think
oh, these
that's
low
actually where
Thetas. Oh yeah,
institutionally
yeah,
speaking, you
yeah.
can start to seriously buy
Whoa.
these stocks. The worries now is that you don't want to buy
Whoa.
these names
Did you say
ahead of
calls or
what could be a
puts?
rip the
Hold
band-aid
tight.
off type for it. But with that
You
said, I think
said
you're seeing
puts.
headcount
Okay, let me
cuts.
look over here.
I think we're seeing a
Puts.
demand picture from at least from what we see
Oh
that
yeah,
is a
look at
lot
these low
better than I think
Thetas.
is being priced into these stocks. And I think that's sort of
Oh
the
my
important thing is that if
gosh.
you're able to look through this, I continue to view these as
BB, why? Okay,
generational in terms
entry.
of over the next 4 or
Let's
5 years
see.
in terms of where I view tech
$20
stocks.
strike.
But right now, obviously
81
it's Fed driven.
put.
Risk
Hold on.
assets are
Entry
basically all
22
getting thrown
bucks.
out the window, and obviously to like Tesla, Microsoft, Apple, and
81
others.
strike
And Oliver,
price.
look, like right
Okay,
now,
let's
like
see. 81
it's
strike
very
price.
easy to yell fire in a crowded theater here, going into earnings.
12-month expectations, I think Tesla could
81.
trade back to 175, which would basically be reclaiming the lost ground of the past month, where it does look like there has been some additional selling here relative to broad tech because perhaps of what's happening with Elon's dedication to Twitter.
Not
I mean,
bad
obviously
at
the
all.
40% decline in just a month. There's something going on here that's specific to Tesla. So I get that logic that is pretty compelling. That if you just take that part out, you would
$22
basically get to your
strike.
target.
Yeah. The
On the flip
81
side,
strike on
I
the
look at a lot
put.
of stocks that have the same growth characteristics as Tesla, the same boom
Wow.
of the last year, just technically speaking on the chart.
I'll save
And a lot of these
that.
things are back to pre-COVID levels. So how
And
come
then
it's not
tomorrow
that
we
simple
can
for
place
Tesla?
our
How come we don't
orders.
just look at this and go, everything that went
Have
up during that period goes down to pre-COVID? For Tesla, that's
expires
50
this
bucks.
week. 22 now.
Yeah, I mean, my argument
0.28.
there would
I'm
be
just
2.5%
Yeah.
U.S. autos or EV today.
So tomorrow,
And
ladies,
I
let's
believe
get
that,
our.
I mean, you could argue that it
Just
takes maybe
present
another
me
year or two.
what you want
I
me to
believe that's going
purchase.
to 10% by
We will
2025,
purchase. Oh my goodness, look
20%,
at this,
at
Lord,
least
Lord.
by the end of
Woo,
the
hoo,
decade.
hoo.
So we're talking about one of the
Ooh,
most
that has got to
transformational
hurt
growth trends that
Amazon.
we've seen to the automotive industry.
84.
That's just in the U.S., let alone
Just
globally.
jeez.
That's why, like,
Just
when
sell
I
it
look
off.
at Tesla, there's much
Just
more
sell
growth
it
ahead
off.
of it than behind it.
Mm.
So when I look at now at a company that I still believe
Oh
could
my
do
gosh, are they breaking
$455
this?
plus earnings power this year, you start
All
to
right,
kind of run rate
everybody.
that out in a normalized
It's been
environment.
one. Yep.
To
Look,
me,
it's
it's
running
just a
now.
compelling risk reward. But look, with
Wait
that
till the
said,
end of the day
leaders are all out.
to get a run going. But it did.
That's so easy right here.
All right,
I
folks,
just
we
think
got
we
about
sit
4
here
more
a year
minutes
from now,
before
and
the
there's a
bell
stock a
rings.
lot
I'm
closer to
checking out of
200
here because I am going outside.
How do the
'cause it's
competitors on the legacy
beautiful,
side factor in
and
right
I
now,
need to
Dan?
walk
I mean, to your
around and
point,
do something.
there's a lot more
Get to the
favoritism
beach.
being given to those. Not a ton. I mean, the
So
charts with
yep.
Ford and GM have been hit too, just not as
Let
hard
me
as
go back and look
Tesla.
at
But then
SQQ
we
and see
see
what she
the numbers
did.
are more well received when they're just
See if
doing
she kept
single-digit
going.
top line
We made some more
sales on a
money.
global
Oh my
basis,
goodness.
where Tesla's doing 40% or so.
And it kept right on
What does
going
that say
up
about the
too.
market's
Oh Lord.
priorities for taking market
I
share
forgot where we got out. We got out
versus
like at
kind of
3
having
something.
market share? Because the taking market share is Tesla's story, but Ford and GM might argue
I think we got
that
out
they just
around
might need to
here.
hold on to it. And if we go into recession, it might be easier to
Incredible.
hold on than to take.
First of all, I held to
Have
a
a
higher
great
standard,
afternoon,
right,
you
in terms of
guys.
Tesla.
I'll
which
see everybody
trades as a
later.
disruptive
Take care,
technology player,
guys.
not an automotive company. Now, obviously, slowly
Bye
started
bye,
to trade more as
folks.
an automotive.
Thanks
But
for
my view
coming,
is not zero-sum
everybody.